Banks in the Spanish context, we need to watch those because of that M&A story that lingers. Guy.
Okay, here we go. European equities are about to rip higher. Let's take a look at the numbers and see what happens here. There's probably a little bit of a squeeze factor involved. Yes, that's going to be part and parcel of the narrative we're about to see. London's going to underperform, so the fireworks are actually not on the screen. We see London moving 0.2% higher. The all stocks are where we're going to see some of this weakness coming through. Elsewhere, I suspect it's a big risk-on story. As we start to see that building, the stock 600 is up by 0.5%. We need the other markets to get going and start to trade as well. The IBEX, there we go, up by 1.5%. The Spanish market moving firmly onto the front foot. The CAC is up by 1.6%. It is also on the front foot. We'll wait for the DAX. We'll wait for the SMI. We're expecting actually maybe these markets to continue that track a little bit to the upside. How high can we go here? What's going to happen a little bit later over in the United States? We're very close, remember, to all-time highs. What is the narrative going to be there? Feels like a very risk-on story this morning. How long does it last for, though, I think is the key question. It's almost as if there aren't plenty of other risks out there for us to worry about. So what are we seeing in the sector story? Is it airlines up and oil down? Let's find out.
Well, the airlines are not open yet, so we are actually going to wait for those initial reads and more some of that volume to actually show through. But the energy story is very clear, Guy, to your point, and largely an expectation of what we've seen in the last couple of days as well, where oil was the outperformer, and therefore you saw the likes of Shell, BP, et cetera, moving to the upside. This morning, Shell is your biggest decliner, down about a little over 4% as well, but it is your biggest weight when it comes to the FTSE 100. Similar story, Anna, when it comes to the stock 600 as well. Shell, Total, those are your laggards in this market.
Yeah, absolutely. So the oil story is very clear and breaks early. Utilities were a big gainer yesterday as we sought that kind of safety, at least in the early part of the trading day, and that's another sector that retreats then this morning. Interesting, the banks were really weak yesterday, and that's the best performing sector right now. So the banking sector staging an about face on this risk appetite we seem to have rediscovered and waiting for travel and leisure to fully reveal its hand. I mean, some of these airlines weren't down very much. I'm thinking of Lufthansa yesterday, but some of them were down more than 2%. So we'll watch for a bit of a bounce.
Oil is down.
Oil is down a lot.
European carriers generally hedge, so actually you don't see the instant impact coming through in terms of the story for Europe. Airlines like Ryanair are heavily hedged. You are seeing the hotel groups, though. They are open and they are moving to the upside. So IHG is up really strongly. You've got Accor trading up by 6.2% this morning. Lufthansa is now open. It's up by 4.8%, now 5.5%. The stock continues to climb. TUI is open. It's up by 6.5%. So you're already starting to get some big numbers coming through. We'll see how Ryanair, IAG, EasyJet start to open in just a couple of minutes' time. But the early indications are lower geopolitical tension, maybe more airspace becoming available, and a sharply lower oil price, all feeding through into a much more positive cocktail for the airline sector this morning.
We should mention the other sector that's been outperforming in the last couple of days that is underperforming this morning, and that is defense, even in the face of the NATO summit kicking off today as well. If you look at the DAX, for example, Rheinmetall down about 4.2%, but you'll see the likes of BAE Systems, for example, also taking a hit this morning, down over 2%. So we're going to keep one eye on the defense sector and see how that moves forward as, of course, we get more headlines from The Hague throughout the day. Joining us now for a little bit more analysis, Peter Oppenheimer, Chief Global Equity Strategist over at Goldman Sachs. Peter, pleasure to have you on the program. Thank you so much for joining us. We're trying to digest and just reverse basically the narrative of the last 72 hours when it comes to the Middle East. But I am curious about what is the top of your worry list when it comes to maybe going back to the narrative pre-Middle East crisis.
Yeah, well, as you say, this is all very good news, and the markets are reacting correspondingly. But as Guy said, you know, the reaction of the interventions we were seeing prior to that were actually not that negative. And bear in mind that markets have made a lot of progress over the last sort of 6 weeks or so to the upside, and valuations are relatively full. So I think if we're going back to the story prior to this situation in the Middle East, it's really about what kind of earnings growth we're going to get, how is the economic hard data going to evolve, and what kind of valuation are you paying for that. So our view is that, you know, this is very good news for all the reasons that you've been discussing, but the upside at the index level is constrained because valuations are pretty high anyway. And we're looking at positive profit growth, but not extraordinarily strong. I think the action is going to be more within markets than at the index level.
Peter, you use that word valuations, which I don't really harp on because I feel like this market doesn't really trade on valuations, except for it's coming back into the conversation around defense stocks specifically. Yes. And I think this is crucial here because so much of the defense rally in the last 6 months has been baked on promises coming from various European governments. We are now seeing that come to a head when it comes to like Spain, for example, trying to get exemptions, et cetera. Does that undermine the case for defense, or does that just simply make it harder to quantify the move?
I think it makes it harder in the sense that valuation in the end does matter, and these stocks have been extraordinarily strong for good reason. The narrative has been very supportive, but they've appreciated so much. The valuations are reaching levels higher than we see in comparable stocks in the US, for example, which is unusual in Europe because virtually every other sector has much lower valuations than in the US. So I think the underlying story is good, but they've already run so much that people are now beginning to tilt into more value plays. And that's where a lot of the opportunity, I think, really lies in Europe.
When we're thinking about risk appetite, Peter, I wonder where you think things go from here, because we were talking to our colleague on the Markets Live blog earlier on, who was suggesting maybe oil prices retreat to where they were most recent skirmish, and then continue to retreat because there was elevated risk premium about the possibility of some kind of violence between Iran and Israel. So in that sense, could we be in a much more risk-on environment than we were prior?
From that perspective, I think that's right. We've got more supply, we think, coming through. We think there was about $10 or $12 of risk premium in the oil price. And we would expect the oil price to be falling back, to around $60 by the end of this year. And that does support the prospects of more inflation moderation, interest rate cuts. And that would be good, I think, for sectors and companies that will benefit from a lower interest rate environment.
And is that going to move the dial for European growth, do you think? Because I know that when you speak to investors, you know, you've been quite recently been hearing, sure, Europe sounds more interesting than it was, but there's still a growth challenge. Does a weaker oil price move the dial there?
Not significantly. I think we're looking at, you know, positive growth in Europe, but not spectacularly strong. The opportunity, I think, is much more about the diversification. And a key question here is whether the dollar resumes its trend of moderation, which we think it will over time, and we get, again, the incentives to diversify away from very, very high dollar exposures, which most investors have built up over many years. And I think Europe fits in very well to that diversification opportunity. It's cheaper, there is positive growth, and there are a lot of opportunities which look comparatively cheap, particularly when you look at them in dollar terms.
Can we just talk about Europe for a moment in a bit more detail and talk about some of the numbers? So the last 3 months, Stoxx 50 is down by 1.71%. I'm putting this in, we can currency adjust in a moment. The S&P is up by 4.5%.
Yeah.
It's a similar story if we look at it over the 1 month period. The US has outperformed. If I look at it in the last 5 days, the US has outperformed. Yes. Have we reached the point where actually the bulk of the European trade is in, and that outperformance period has come to an end?
It's a good point, but obviously it depends on where you start your comparison. I mean, if you look at it year to
last
date,
3 months, okay,
Europe is still outperforming in local currency terms and quite strongly in dollar terms. And I think that's the start of the point from which people have maximum confidence in US exceptionalism coming into this year, confidence in dollar strength, in US and US tech outperforming. And since then, we've seen a moderation of that enthusiasm and a desire to get more broad exposures across different markets, across different themes and sectors. And I think that will probably reassert itself. So I don't think it's likely we see significant outperformance of Europe or other markets relative to the US, just a broadening out of the opportunity set and more focus really on alpha than beta.
Are you getting that from who is doing that? Is it US investors? Is it European investors? Is there a difference now in terms of domestic bias versus international bias in the United States? Because if you can take the dollar out, it doesn't really matter as much for a US investor.
Absolutely. But I think we're seeing two things. Firstly, European investors have accounted for more than half of the net inflows we've seen into European equities this year. So European investors are, at the margin, bringing some money back to Europe because they can see some better opportunities. And also, they're looking at dollar-based investments that are potentially losing money from a currency adjustment perspective. I think that the point that you make about the US is a very good one. Retail investors have been aggressively buying the US market. The leading stocks, the big tech stocks, have had remarkably strong earnings growth again, and they've accounted for most of the rebound in the US market, and for good reason. But again, a lot of asset allocators in the US, a lot of global investors are looking at the potential to get better risk-adjusted returns by having a broader spread, partly because I think at the margin they are beginning to think the dollar has potentially further to decline.
I've seen a couple of calls from various Wall Street banks that are now, to Guy's point, neutral on U.S. equities, some even underweight, but still overweight on large-cap tech stocks. Is that a plausible thing? Is that a plausible divergence that you can really separate out the tech story from the broader S&P 500?
I think it's difficult because of the scale and size and weight that these companies have. I mean, the biggest 5-6 companies account for nearly a third of the index again. They are very defensive because they have strong balance sheets, they have a lot of cash, and they're extremely profitable still. Now, you can question the future relative growth rates, which may be slowing as they ramp up capex spend and you get some more competition and the market broadens out. But I think they're still a very, very crucial driver of the US market, and we think the prospects there remain good.
A number of people that have been on this show, in that show over the last 24 hours, think the market is complacent about the risks that it faces. Do you agree or not agree?
Yes, I think there is a degree of complacency. When you think that, US equities, for example, are trading at around 22 times earnings, that's well into the 90th percentile of historical comparison. Even Europe, which is a lot cheaper, is trading at 65th percentile or something like that. Now, I think there are good reasons for that. But when we used to talk about there being no alternative to equities as an explanation for why they're expensive, that's less true now with interest rates higher and bond yields higher. So this isn't, I don't think the downside risks are very significant. Private sector balance sheets are strong, interest rates can come down. But I think the scale of upside at the index level is more moderate now than we've seen for some time. And I think that there's relative complacency for things that may go wrong.
Peter, it's always great to see you.
Thanks
so much for coming to see us this morning. We really appreciate it. Peter Oppenheimer, Chief Global Equity Strategist, joining us from Goldman Sachs. Joe, what do you got? What does the Core 6 look like? Let's start with that, and then we'll come to you. This is the picture at the moment. We have a Core 6 that is broadly positive. As you can see, some real outperformance coming in the middle of the pack, actually pretty much across the pack. The only underperformer is Nestle, the defensive stocks, doing less well this morning. Elsewhere, you are seeing some significant weakness in energy. Joe, what do you got?
So we have indeed, Guy, we've got some significant red on the screen for the oil stocks. These oil stocks, most of them falling the most since April when we saw Trump announce those tariffs that sent those shockwaves around the market. So BP down the most since early April, down around 6%. Shell coming down 4% as well. Total Energies, all of them. Equinor also weak as well. The oil price decline dropping more than 10% since the close of European equities trading yesterday, and that feeding through significantly into the market today and then into the airlines as well. IAG, that one is headed for its biggest gain in more than 2 years. So since October 2022 is the last time we saw IAG close up 7%, and also Lufthansa, Air France, EasyJet down in the short haul. They're all getting a big boost today. And then the other sector in focus, of course, is defence. Now, we did see a drop in the sector yesterday, mostly on concerns around whether the NATO summit that's going on this week will disappoint in terms of spending. But another weekday for the sector. So this is kind of a 2-day move, given the headlines we've got overnight. Therefore, we're seeing Thales, BAE, Saab, all of those stocks sliding against a 2-day drop for defence. given those headlines. Then we've got Grifols in the single stocks. Now, a report yesterday, as mentioned earlier, around the company paying money to some of its shareholders. That was a supplier as well, and question marks over that. So the stock only up 0.9% at the moment. That is probably helped by the broader positivities. That would probably be weaker, but it is a significant underperform. As I said earlier, Grifols did deny any wrongdoing in a statement to Bloomberg. Then another single stock to bring you is AstraZeneca, some drug trial updates from last night. The lung cancer drug, the latest one, getting a positive read, but only up 0.6%. Potentially the defensive shares actually underperforming, so people going for the more risky stocks today. But Astra up very slightly today. And then finally, in the car space, BMW, an underperform at BNP Exane. Now, Exane saying that the margins at BMW are going to collapse in the next couple of years, given the weakness coming over from China in terms of EV competition and also the tariff issue. But the stock managing a 2% gain because everything is up today, even stocks getting downgrades. BMW up 2% over in Germany this morning.
Thank you very much. Thanks to Joe Easton from our equities team for the briefing on those stocks. And as he said, almost all sectors in positive territory then. Only energy and utility stocks in retreats. And linked to that, of course, coming up, oil tumbles as a ceasefire between Israel and Iran takes effect. We'll find out what's next for oil. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Tuesday morning, decent bounce for European equities. We are 18 minutes into the session. The Stoxx 50, the Euro Stoxx 50 is up by 1.7%. London is underperforming. You are seeing some of the oil stocks obviously coming under pressure today, which is interesting. Some of the defence stocks actually not doing quite so well. Where we are seeing significant strength, of course, is within the airline space this morning. You've got a number of names popping sharply high. Some of the biggest moves we've seen in years coming from names like IAG, Air France, Lufthansa, some of the low-cost carriers around Europe as well, benefiting from that lower oil price story. The long-haul carriers also seeing a benefit maybe coming through from less tension, meaning better operating environments through the Gulf. Benedict Kamel, who leads our global aviation coverage for Bloomberg, joins us now from Berlin. Benny, I'm assuming the bulk of this is the oil price move to the downside, but some of it must be just an easier operating environment as well, potentially for some of these big global carriers.
Yeah, and it's, in some ways, aviation is driven by sentiment, and the sentiment now is relief. And there's a sense that, this was a short scare last night when Qatar closed its airspace, and that really escalated the situation on the ground, or in the skies, rather, I should say. And the fact that this was short-lived, we're sort of back to normal now. There's a sense of normalcy, and maybe even more that now we might get a ceasefire between Israel and Iran. So there's broadly a sense that things are looking up. And that always is important for the aviation industry. It's, as I said, sentiment-driven. People want to feel good about booking that next flight, getting on the plane, feeling safe about it. And yes, as you say, the oil price falling, that's obviously a big tailwind for the industry. Oil or kerosene is their biggest cost. So if that comes down, that helps. The airspace reopening, that means shorter routes or more direct routes. So all of that combined really shows why the stocks are up now.
This sector is important for airlines everywhere, but the oil price is important for airlines everywhere, Benny, but in particular in the region, really interesting that so many economies have been diversifying, trying to diversify away from energy, and tourism and aviation has formed a part of that. How do you think they'll be assessing how the aviation sector handled this?
Well, yeah, I mean, one thing that the aviation sector has done is not responded in a uniform way. We've seen some airlines come out very early and cancel some flights. Last week, I should say, we had American Airlines, we had British Airways cancel some flights. And really the local carriers, the Qatars, the Emirates, were really the holdouts and maintained their service throughout the region. And so not a unified response, sort of back and forth. And something we saw yesterday as well, Qatar closed down its airspace after they got word that there might be an imminent attack on that US base. Emirates maintained its service throughout the night. There was a brief interruption, but broadly speaking, service was maintained. And that's really a picture that we've seen across the industry, that there is not one sort of single approach. It's sort of country by country, airline by airline. For this region, it's obviously a very important industry. Qatar and Dubai, those are two destinations that have really built big parts of their economy around the aviation sector, really sort of global super connector hubs that they've built there. So any disruption there will be acutely felt, and that's what we saw yesterday, and that's why there was this big scare.
Bloomberg's Benedict Kamel walking us through some of the read-through into those airline stocks. We thank you so much for breaking it all down for us. In the meantime, of course, let's go back to the oil majors as well, because if you are looking for a laggard in this market, that's where it is, really magnifying the experience that you were seeing when it comes to the oil price move. Of course, it's down, like I said, some 11% over the last two sessions. That's translating to somewhere between 4 and 5% move for some of the major oil companies in this region, of course, holding back the FTSE 100 from the pretty substantial gains you're seeing in the other European indexes as well. Bloomberg's senior executive editor for energy and commodities, Will Kennedy's all over this story. Will, so we know that oil's retracing. They're getting risk of that geopolitical risk premium. That's no surprise there. Once it comes back to whatever it is market calls fair value, what is the next driver for oil markets?
I think we should note that it's been the week is probably sort of not more than 24 hours old, and we've gone from 80 to 68. So it's been a pretty wild start. And I think what that tells you is, when I was here yesterday, we talked about that geopolitical risk premium of $10 in the price. That's gone. The market has made up its mind that this crisis has passed. And to answer your question, Kriti, it's now focused on what it was focused before this crisis erupted, which is the supply-demand balance and the likely oversupply that we see in the second half of the year as OPEC Plus continues to add barrels to the market, as we get increased production from non-OPEC producers, and I think that people will be focused on this sort of range in the low 60s.
But does the range get bigger? You've got the kind of the geopolitical risk that kind of takes us up to here, but now you've got this oversupplied market which takes us all the way down. Kind of, you could get into the 50s quite easily. So, are we going to see bigger oscillations within the price of crude? Does the range get larger?
I think that really depends on the geopolitical geopolitical situation. I think on a supply-demand fundamentals, I think this is the range that people saw beforehand, the sort of 60s, low 60s, will pertain into the future. I think that what took us into the 70s and even higher for a brief moment was this geopolitical crisis in the Middle East that no one had seen coming quite so quickly. I think what's important to the market geopolitically is this was a scenario that people had talked about for years as a massive risk to the oil market, that there would be this conflict between Iran and Israel, and the US would get involved. And we've had that, and it's been a dog in oil terms that hasn't barked.
Right, so does that mean we should go lower than the middle of June prices then?
Well, it's an interesting question. With this risk out of the market, with traders thinking that geopolitical risk isn't so much there, it's a good question, and it may be that the market tries to test some lows here and see where the bottom is. We will have another OPEC decision at the beginning of July, in that first weekend of July. The expectation is that they will put an extra 400,000 barrels a day into the market. I suppose one thing people will focus on is, A, will that definitely happen? And B, is there a risk that the Saudis will push to go faster still? But that 400,000, I think, is the market's base case right now and probably priced in at this juncture.
A final question to you on the volatility, though. To your point, we've dropped like $10, $12 in the span of a very short amount of time. The last time we saw that kind of move in that short amount of time was Liberation Day. But before that, it hasn't been that often. What kind of risk does that present for investors who are trying to trade that geopolitical volatility, that you could, I imagine, lose a lot of money very quickly?
Yeah, I mean, look, it's been an incredible trading opportunity for a lot of people, and clearly some people have got caught out. Some people are going to have made an awful lot of money, which we might find out about in the coming weeks. I do think that it's been one thing that we might want to think about from here is there's probably been a very good opportunity for the shale industry to hedge. So I think you're likely to have seen, and we'll try and report this out, some shale producers covering their downside, which may give a little bit more support to US production over the second half of the year.
That's even more crude coming in.
Yeah, absolutely. Yeah.
They were reading President Trump's commentary, perhaps, about the importance of keeping it flowing.
Absolutely. Well. I mean, but clearly US production will be something the market focuses on the second half of the year, how quickly it plateaus.
We'll see. Will, thank you very much. Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. Coming up with a tentative ceasefire in the Middle East. We'll talk about where the US economy goes. We'll also be focusing in on Jerome Powell, who speaks later, of course. This is Bloomberg.
Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session. So far looks pretty risk on. All of this because of the ceasefire announcement that we've now had confirmed from the Israelis. And we see stocks are going higher, in particular travel and leisure stocks. So oil prices are significantly weaker. That means airlines go higher and energy stocks come lower. So energy and utilities, the two areas in negative territory. But overall, we rise. Kriti Gupta has been digging deep for some further intelligence around the energy markets. Kriti, what have you got?
Well, it's a fascinating 48 hours when it comes to these oil prices. And I just want to put this into context here, what we're actually seeing, because a good chunk of the positioning that we've seen going into the upside in oil in the last week or so has actually been driven by smart money, by the hedge funds. I think this is really interesting. We're looking at CFTC data as of June 17th. We're getting a fresh set of data later today in the U.S. session. But really what you can see here is this massive move upwards in terms of long-term exposure to Brent crude. So in the coming days, as we see this retreat in prices, really keep an eye on who's getting hit, who's actually made money on this trade. And that's going to be crucial because this next terminal is going to show you exactly what has just happened in this market. Not just a price retracement, but actually going back to contango, an oversupplied market, which is what this entire red piece of the market is showing. Excess production from U.S. shale producers, more production from the OPEC Plus story, not to mention prices coming lower and lower simply because of that trade volatility and other geopolitical risk around the world. This spike, though, is what you've seen in the last week or so when it comes to that risk around Iran and the strikes there. What is the potential closing or worries around a potential closing of the Strait of Hormuz? You can see that is almost now right back to flat, right back to where we're headed in terms of contango territory. But Anna, there's a very clear read-through into the U.S. economy here. I mentioned the shale production. We just had a conversation with Will Kennedy of our oil team talking about the fact that shale producers likely took this opportunity to hedge to the upside, really locking in those prices for some of the production that they are going to be pulling down the pike. This is also coming in the background of a little bit less production from the U.S. because of those lower oil prices. And this is the Baker Hughes rig count that really shows you going all the way back to 2021, 2022. You start to see this risk sentiment, a lot of production here. But in the last couple of months, you've actually seen a pretty decent drop when it comes to the rig count. And Anna, that's just yet one more element of a bearish story when it comes to oil, one that affects the entire American economy. 8% of U.S. GDP is exposed to the energy sector. 5% of jobs comes from oil and gas.
Okay, nice place to start our conversation with our next guest then, Chrissy. Joining us now, Mark Giannoni, who's Chief US Economist at Barclays Corporate and Investment Bank. Joining us now on set. Mark, a lot to talk to you about. The role of the energy sector. We'll look ahead, well, the role of the Fed, and we'll look ahead to what Jerome Powell might say later with that in mind. But if I start with the energy sector, I mean, Chrissy was just talking there about the exposure of the US economy in terms of the percentage of GDP maybe, or percentage of jobs that are attached to energy markets. How important is this retreat in oil prices, do you think?
Look, I think we bring, as Kriti showed just a minute ago, we bring the oil price back to where it was a few days ago. I mean, we've seen oil prices dip since the end of March, pick up again with the uncertainty that we had of late, and now come back down over the last 24 hours or so. I think this short-term volatility doesn't do too much for the macroeconomy at large. I think what we are looking at is some oil price volatility associated to the Middle East. But in terms of the effect on the economy as a whole, it has maybe some effect on headline CPI inflation, but not so much on the core inflation and not so much on activity anymore. Actually, less effect on activity now than it had about 15 years ago when the U.S. was not as dependent on the oil sector.
Okay, and we're going to hear from Jerome Powell later. He's going to be questioned, quizzed on his monetary policy stance. No doubt this will feature. People might be saying, come on, Chair Powell, oil prices are much weaker. Surely there's more space to cut rates. But the arguments he was making last week were really around tariffs, weren't they? And around the lack of certainty and lack of clarity that we have, and his expectation that some of this will stick to the consumer, prices will be passed on. So what kind of messaging do you think we're going to get from Powell later?
I think we'll have a repeat of what he said during the press conference and also what we heard him say with even greater concern at the May press conference, when at the point where tariffs were so high, we had tariffs on China, let's say above 150% or so. So since then, tariffs have come down. Chair Powell told us during the press conference in June that the uncertainty to some extent had come down slightly since then. But I think the Fed and Jerome Powell in particular are quite concerned about a rise in inflation coming. And they want to make sure that the bump in inflation that we are going to get related to the tariffs is not going to translate into more persistent inflationary pressures.
If Bowman was the next Fed chair, if Waller was the next Fed chair, would they be cutting rates by 200 or 300 basis points?
So we've heard from these two governors that they favor a fairly rapid rate cut if price pressures do not show up related to the tariffs. Now, this remains to be seen if these price pressures are going to be as muted as they describe in this scenario. We expect price pressures to build up in the next several months and to see these monthly increase in core CPI, core PC inflation to start firming and increasing over the next several months through October. But in any case, even if they wanted independently to lower rates, I think it's going to be difficult to convince at least half of the committee. What we saw from the dot plot last week is a very divided committee at this point. As Chair Powell said, maybe not with as very firm beliefs, but with clearly two camps there, with one camp wanting to keep policy on hold.
Okay, so as soon as he announces the next Fed chair, A, do I ignore Powell from then on? Is he a lame duck? And B, is that when the fight really erupts on the FOMC between the cut, no cut kind of camp? How bitter does that fight become in terms of how you see things unfolding?
So first, I don't think he's going to be a lame duck until the end of his term as a chair. For one, the chair has enormous power, has the ability to direct the staff to do work, to provide all the information to the other governors and FOMC participants. The chair is the one organizing the meeting and bringing the committee to a decision or to a consensus. So I think he has enormous power as long as he is in the seat. And people can speculate about what may happen after his term is over, but while he's in the seat, I think he has a tremendous amount of power. So that's the first point. Second, I do think that it's a committee decision ultimately, and if some members want to proceed differently, they'll have to convince the rest of the committee. Sure. And that's going to be quite a challenge.
How much of the work for the Federal Reserve is the bond market doing in terms of the volatility that we're seeing? Is that enough to do some of the cooling that perhaps the Fed is trying to do?
So I think the Fed, through its policy and its communication, is trying to have the longer-term rates do the work for them. So that's a very important factor. Now, the further away we look at rates, the harder it is for the Fed to affect them and to control them. But they do, longer-term rates do a lot of the work. And so that's why Fed participants tend to look at broader financial conditions at large, so 10-year yields, 2-year yields, 5-year yields, as well as equity markets and the exchange rate, of course.
Mark, let's talk about the big, beautiful bill. Let's talk about this deficit. There may be a breaking point coming this summer, as soon as next month. I'm realizing we're in the summer now. Give us your doomsday scenario. What happens if the debt ceiling isn't raised, if we do come to that disagreement in Congress?
So, I mean, I do think a debt ceiling will be raised and needs to be raised in order for the payments, all the payments to be made by the federal government. I do think we'll get to an agreement. Our baseline is that we'll have maybe a little more stimulus than, we'll have the tax rates, at least the TCJA being extended by the end of next year, so the tax rate continuing at the current value, so that we won't have this break on the economy by the end of this year onto the economy next year. And we'll have to have debt ceiling being raised sometimes during the summer.
Very quickly, can you just tell us about the ripple effect that may come when we talk about if the tax story isn't extended? How much of a hit does the economy take?
So if we do have the tariff increase and we don't have an extension of the TCJA, I think we are looking at a pretty significant hit in 2026. Not so much this year, but in 2026. Again, we don't think this is happening because there's a lot of support in government to extend the TCJA and ultimately in the House, in the Senate, as well as with the president. So I think we are likely to have that.
All right. Mark Giannone, Chief U.S. Economist over at Barclays Corporate Investment Bank, giving us his take, of course, ahead of Jay Powell's testimony in the House later today, and, of course, how we talk about these oil markets in response. We thank you so much. As he was speaking, we did get some headlines from the IDF saying that they've identified missiles launched from Iran toward Israel. Sirens are sounding in northern Israel. Now, we should caveat this by simply saying we don't actually know whether or not this is a breach of the ceasefire or simply a late message. We are still trying to work that out, but the initial comments coming from the IDF seem to be having a small market effect here, where we are seeing Brent crude tick higher just a little bit. We are seeing futures, at least in the States, reverse and tick higher in the dollar as well. We're now looking at a slight retracement when it comes to euro dollar and the pound.
Just goes to illustrate how nervous, how jittery markets are. Still watching, perhaps trusting in the ceasefire, but also just watching at the margin for any threat to it.
We don't know what missiles there are. We don't know what the flight time is. We don't know when they're launched. We don't know. There's a lot we don't know here. I think we probably just need to caveat all of that. We will come back to it when we get more information. I think probably is the narrative that we need to be watching out for. Can European leaders convince President Trump to commit to NATO and the continent's security? How much do we have to spend to make that happen? How much will Spain have to spend to make that happen? We're going to take you to the NATO summit. It's happening in The Hague today. We'll be there in a moment. This is Bloomberg.
For Trump to win, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years just playing. And then from fifth grade, they start to develop AI by themselves. And STEMs and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good educations, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. 45 minutes into the session, sirens are sounding in Israel right now, as a result of which we are seeing something of a softening in terms of risk sentiment. Not by much. Let's just bear that in mind. You did see a gap higher first thing in terms of equities here in Europe. We've softened up just a touch. You're seeing a similar story when it comes to what is happening with the crude market, which is down sharply. A little bit of firmness maybe creeping back into that story as well. We will watch with interest to see how the sequencing around this latest attack has happened and whether or not it came after the White House imposed the deadline on the arrival of this ceasefire. Anna.
Yes, absolutely. Let's stick with the defence theme. Donald Trump heads to a NATO summit in The Hague today on the back of the surprise ceasefire that he announced in the Iran-Israel conflict. The president arrives amid concerns about Washington's commitment to NATO. The Dutch defence minister told us the United States is committed to the alliance.
What I heard so far at every meeting that I had with my American colleague or any plenary meetings with a larger group of countries, whether it's Secretary Rubio or Secretary of Defense Pete Hegseth, they all say that they are committed to NATO, that NATO is more relevant than ever, and that Article 5 remains a fundamental pillar to our transatlantic security. I think that's the foundation, and that remains solid. Of course, we need to keep discussing with the United States what military assets, how many troops they want to have in Europe. It could be that some of those resources will be shifted. I think that's quite likely that that's going to happen. But if we can do this in coordination, and if that happens gradually, and if the foundation still remains here in Europe, I think that's something that we can overcome. If we agree to 5% spending on core defense and on defense-related matters, I think that would be an historic step. If you go 1 year back to the NATO summit in Washington, D.C., what we agreed upon is that the 2% is not a target, but it's a floor. So we are now 1 year later, and if we now move from 2% to 5%, with, of course, a 3.5% and a 1.5%, I think that would be an historic step, especially if 32 allies in unity agree on this. I think the rules are the same to everyone. I also think that Spain will sign the declaration on Wednesday when the NATO summit comes to an end. Of course, the reality is that countries have flexibility in the way that they implement these agreements. And that has been true in the past as well. In 2014, we agreed on the 2%, and many countries only this year reached the 2% or still have difficulty reaching it. So there is some flexibility in the rules that NATO sets, and it's both on the financial side but also on the military side. But I think in the end, what it comes down to is that we all agree on the same percentage, that we do have military plans that were already agreed upon 2 weeks ago, and in which every country said, I'm willing to do my fair share. And I think that that's key, and that's as relevant for Spain as it is for any other country.
The
the Dutch defense minister, speaking to our very own Oliver Crook in The Hague, talking to us about that defense spending story. Oliver joins us now from the ground. Ollie, talk to us about that 5% level. How much of the narrative has Spain changed?
Yeah, so listen, Grady, this is the sort of big, beautiful number that NATO leaders here would like to present to Donald Trump. We know that the U.S. administration likes to have big, clear, clean, easy to understand wins. And when we think about what NATO is now committing to, which is what we understand they will all commit to spending 5% of their GDP on defense, you have to imagine how long a road this has been. In the last 6 months, I think in the last 6 months ago, it would have been inconceivable to think that NATO members would sign up to 5% defense spending. That has really been the product of the pressure that has been exerted by the Trump administration. Now, we should say there's a little bit of devil in the details. About 3.5% of that 5% is really that sort of core defense spending on things like guns and ammunition, tanks, all of that sort of thing. 1.5% of that is going to be more on sort of ancillary defense-adjacent things like cybersecurity support. And let's imagine a situation where, you know, there is a war on the eastern flank of NATO, and all of those tanks and heavy equipment need to move across the continent. So you could spend that 1.5% on, say, infrastructure roads in order to make those things move across the continent. That is sort of the fudge there. The real sort of other issue is the question of the timeline. They're going to commit to this target for 2035, so that is a long runway to reach that target. That is not really going to please the eastern flank of NATO. That has been some of the debate, but again, that is part of the concessions that have been made in order to get to that 5% figure. But again, of course, the last sort of fly in the ointment is the fact that the Spanish, Pedro Sanchez, the Prime Minister of Spain, has at the sort of very last minute said that they sort of object to getting to spending that much money from the Spanish side. They say that they can reach their NATO targets in terms of capacities by spending only 2.1% of GDP. This has been one of the open debates, and then we heard from Mark Rutte yesterday saying that he really doesn't believe that Spain can get there with only 2.1%, and that really everybody in NATO needs to commit to that 5% target.
So, Oliver, what's the worst case that happens here? That the Spanish don't come on board, it inspires others to rebel, that President Trump doesn't like what he hears and he walks out? What are people thinking about?
Yeah, that would be certainly the worst case scenario. If you cannot have agreement among the NATO members in order to hit that target, Trump either does not show up to the meeting or does, and there's a sort of spectacular brawl of some kind and breakdown. And basically the idea that Article 5, this concept in NATO, that basically an attack on one is an attack on all, that the United States steps away from that. Of course, that has been the sort of threat from the Trump administration through the years. That would be the sort of worst case scenario. But Anna, if we take this to sort of the best case scenario, what is that? That basically all of these NATO countries agree to 5% spending. They agree to a reasonable timeline. They agree to spend it mostly on United States kit and hardware because that is the biggest provider of all this sort of stuff. What is that going to do to Donald Trump? Is he really going to do a 180 and basically have a warm embrace of the NATO alliance and be very happy with all of the countries here? Probably not, right? He's still probably going to draw a pretty hard line. So for these NATO members, I think the 5% is almost a sort of minimum target to keep Trump broadly on side. And the other thing that hangs over this meeting is this question of American troops within Europe. There are about 84,000 American military personnel spread all across Europe. About 40,000 of those are in Germany. We know the Trump administration does not want to be concentrating its military forces in Europe. They need to look more to Asia Pacific. They obviously now have this conflict in the Middle East. They are going to look at probably reducing those ranks by the tens of thousands over the next couple of months. So this is all part of the conversation here. And we should say, just as a final point, that for the Trump administration and Donald Trump, whatever you may think of him, whatever many of these leaders may think of him, this is one of the great policy goals that he has set out to get the European spending on defense. And there's no way of debating the fact that he's been intensely successful at getting that done.
Isn't this whole thing just going to be a victory lap for Trump? It just feels like that. He's coming off success in the Middle East. He's just achieved a huge aim in that theatre. He's persuaded the Europeans that they probably need to spend more. Yes, there's going to be some shuffling of where that spending comes through. But isn't this just going to be a massive victory lap for him?
And I think it also puts into focus how kind of irrelevant on the geopolitical stage many of these European countries have become in the absence of the multilateral, G7 order. We saw it from the meeting last week in Canada as more of a sort of G6.5. If the Europeans aren't joining their voice to the United States, and if they're seeing things more and more differently, what sort of relevance do they have on the global stage? And Guy, precisely to your point, I mean, there was some doubt about whether or not Trump could show up here if this situation with Iran was ongoing. He now arrives here a little later this evening with a big win under his belt. And basically the question is, does that put him in a good mood? Is he going to be nicer? Or is this just going to embolden him and say that basically whatever he says goes, and he can continue to sort of push around the Europeans a little bit more? That is going to be sort of an interesting thing to watch over the next 24 hours.
I am assuming that the ceasefire in the Middle East holds. That's something that we don't quite know yet. Ollie, great stuff. Thank you very much indeed. Oliver Crook joining us from The Hague. We've got some great coverage coming up from the NATO summit this week, including the foreign ministers of Germany, Latvia and Lithuania, all joining Oliver Crook at that event as we work our way through this NATO summit. We don't know yet whether or not the ceasefire holds.
We don't know whether the ceasefire holds. We heard earlier that there were some headlines or some messaging coming from the IDF that there were potential sirens and expecting some sort of missile barrage from Iran. Again, we don't know if that is a violation of the ceasefire. We are getting comments, however, from Israel's Defense Minister Katz commenting on the Iranian missile launch. It's unclear if he's commenting to the latest one or the one from previous iterations, saying they've instructed the IDF to respond forcefully to Iran. We should also mention, at the same time, we're getting headlines from Iran itself when it comes to their production program. This is coming from a semi-official mayor citing the nuclear chief, Eslami, saying that Iran plans to avoid interruption to production processes and is assessing their damage to nuclear sites. When it comes to the market reaction, Anna, we did see a teensy emphasis on teensy move and kind of in reverse.
I don't hear that word very often.
No.
You're welcome.
It just did.
Quite small.
Quite small. Teensy.
Quite small. Yeah, the market is just nervous. The market is really nervous, isn't it? For any clues, any signs that this ceasefire does not hold, we will have to wait and see how these things develop. This is something that is very much on the market's mind. I'm looking to my left because Valerie Teitel has joined us, Bloomberg's Valerie Teitel, with thoughts about the session ahead. I mean, more market reaction to the Middle East, to all of these headlines, I suppose, is in store.
Yeah, and I think if you take into consideration that a lot of the rally in the equity market really started yesterday when Iran's response on those U.S. air bases in Qatar was seen as largely symbolic. So we already had a lot of positivity priced in even before Trump started to talk about this ceasefire, if it is or is not on. So I do think that the equity market does need to see some big confirmation that the ceasefire is over in order to retrace those gains. You know, S&P futures are still solidly in the green this morning, up 0.7%. You know, very close to all-time highs in terms of the S&P 500 index. So it would need to take, I think, a big signal from Trump that the ceasefire is in peril.
Absolutely. We gapped high first thing. We faded that gap a little bit, but we certainly haven't filled it by any stretch of the imagination. Powell, talk to me about Powell. How hawkish is he going to be? Is he just going to say what he said before?
Look, Powell is going to face a big grilling. He starts his two-day testimony today in front of the House. The big question, I think, for many out there is, do Republican lawmakers sound as combative as the U.S. president in terms of being against the Fed pausing interest rates instead of cutting them? We just had a tweet just an hour ago from the president himself calling for 2 to 3 points of rate cuts. Do we see that kind of pressure from other lawmakers today on Capitol Hill?
All right, Bloomberg's Valerie Teitel walking us through what to expect after what's been a very volatile couple of days. We thank you so much. When you look at these equity markets, though, they are still flying high. We opened, as Guy said, about 2% on the Euro Stoxx 50. We're down at 1%, but still not bad when we're talking about risk sentiment. Oil also retracing its moves. It does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Hours after a ceasefire declaration in the Middle East, Israel says it has identified a missile launch from Iran and will respond forcefully. Oil continues its slide, touching pre-conflict levels. European stocks and U.S. futures gain on the ceasefire announcement. Plus, Donald Trump heads to the NATO summit with the UK pledging to ramp up defense spending to 5% of GDP. So, happy Tuesday, everyone. There's quite a lot going on, so let's get straight to the markets to understand some of the risk actually out there. Now, dollar is pairing some of the drops. Again, there has been a report of a new missile being dropped on Israel, and this kind of changes everything in terms of risk perception, risk sentiment taking a further hit. Now, S&P futures still gain some 0.8%. Let's also look at the European markets map. That would give us a good indication of some of the risk factor out there, but you can see Brent still on the downside, down 3.2%. And you see there's quite a lot of green on the screen. Look, the latest headlines from Israel damping a little bit of sentiment in the markets, but again, oil pairing, it's dropped further. It's still dropping, though, so we're in a little bit of a wait-and-see situation. Certainly, the situation seems a lot more fluid than it was an hour ago. Now, Germany, June, IFO, business confidence coming in at 88.4, slightly above the estimate of 88. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Israel's defense minister says he's instructed the IDF to respond forcefully to Iran after it said it had identified missile launches from the Islamic Republic. Now, this comes just hours after Benjamin Netanyahu said he had agreed a ceasefire with Iran after President Trump announced in the truce earlier this morning. Now, the fragile truce came after an extraordinary night in which Tehran retaliated against a U.S. attack over the weekend by launching missiles at an American airbase in Qatar. Now, the Islamic Republic's move was telegraphed, with Qatar and the U.S. being forewarned. Now, for more, let's bring in Dan Williams from Jerusalem and Jumana Bersetchi from Dubai. So thank you both for joining us. Dan, the IDF says it's identified missile launches from Iran. Has the ceasefire failed?
Well, it does seem touch and go. We have had ceasefires in the Middle East involving Israel, where, should we say, the immediate period after they were declared was a ceasefire stabilization period. This is what is referred to in retrospect with the occasional violation. The stakes here are very, very high, not least as the United States, President Trump is a major stakeholder. In fact, he's the sponsor and potentially the guarantor of the ceasefire. So we'll have to understand what happened just then with what Israel describes as an Iranian missile salvo toward the north of Israel. No reports of casualties or damage from there, but Israel is certainly braced to respond. I'm not aware yet of that retaliation having been carried out. The question is whether both sides will draw a line under this episode, pursue a ceasefire that's only a few hours old, or whether everything will spiral out of control. Yeah, so what we have is there are images there from the south where 4 Israelis were killed, or 4 people, apparently civilians, killed this morning in the final hours before the truce was called at 7 a.m. This is something that will scald many Israelis, however relieved they might feel, at the end of this extraordinary 12 days of unprecedented fighting with Iran. The Iranians will certainly declare this a victory. The Israelis have also declared it a victory of a sort. So both sides will be domestically looking to shore up their positions. I think questions that will be asked of Prime Minister Netanyahu domestically is, despite his government's achievements against Iran, which really do appear quite dramatic in terms of cutting down the Iranian nuclear program, cutting down the missile program.
Dan, let's also get to Jumana Bersetchi. So, Jumana, how is the fragile truce being actually received across the region?
I mean, it's been a real whirlwind the last 24 hours, Francine, the highs and the lows. But what I can tell you is we have 2 official statements coming through in the last half hour, both from Egypt and from Saudi Arabia, welcoming the truce and crediting President Trump for getting it across the line. Nothing yet from Qatar, though incidentally, there is a press conference being held with the Lebanese Prime Minister around this time, so we expect to hear from Qatar shortly afterwards. But bottom line is, I think most of the region, and obviously it depends on how lasting this ceasefire is going to be, but most of the region seems to be breathing a sigh of relief this morning because of, number 1, the announcement of this ceasefire, and 2, because we really averted the worst case scenario yesterday with that very choreographed, telegraphed attack out of Iran onto the U.S. base in Doha. No fatalities confirmed afterwards. In fact, President Trump thanked Iran for giving them the heads up before they launched that attack, which really removed the possibility of the rest of the region being pulled into this conflict. And so you look at the regional bourses today, they're all up anything from 1.5% to 2%. So as of now, the region seems to be feeling a lot better about the prospects for stability. But again, the big question is, how lasting is this truce really going to be?
Jumana, thanks so much. Jumana Bersetchi there in Dubai, Dan Williams in Jerusalem. Now, European stocks in the green today following the tentative Israel-Iran truce. For a look at markets, we're joined by Mislav Matejka, head of global and European equity strategy at JP Morgan. Thank you for joining us. I mean, it's a busy week. It's actually, 2 weeks that these markets have been on tenterhooks to try and understand the geopolitics that goes with the instability in the Middle East. What are markets pricing in today?
Okay, so I would say geopolitics obviously matters a lot short term, but historically, if you look at typically that kind of fades, and typically the markets use this as a buying opportunity, and obviously oil price is the key, and the fall in the oil price is very welcome. But I think we're going to go back to the bigger picture, and that is really to talk about the tariffs and the growth for the second half of the year, and the markets have had a very strong V-shaped rebound, so there is a lot priced in.
But Mislav, I mean, I guess the concern with the tariffs is that we also don't know where we end up, right? There's a big announcement, then there's a postponement, there's renegotiation. So how do you do to look at equities to just model what the economy is doing? What's your base for tariffs and trade?
Okay, so wherever we end up, we are going to end up way, way higher than most thought at the start of the year. And this is the key punchline that if you look at 2018, the whole sum product of the trade war was 1.5% increase in the effective tariff rate. And right now we are moving from, let's say, 2 and a bit at the start of the year to current 13, 14%, and that could be even higher with Section 232. So to believe that tariffs are fully digested and that inflation pickup will not happen whatsoever, I think that's basically premature.
So when do you decide actually on again, the longer-term impact of these tariffs and therefore what it means for your wheelhouse equities?
I would say the inflation has to pick up in the US, and there's a bit of a bifurcation because you have the global inflation picture, which is quite different. You have the US, where there's going to be a pickup, and you have Europe with a stronger euro is going to be weaker still. China is still in a disinflation, and ultimately what that brings is maybe further dollar weakness, and that brings you to a lot of trades that you should do in the second half of the year, the rotation trades regionally.
So, Ms. I mean, does that mean that it's basically divergence, right? If you see, and we started seeing also with Bank of Japan and others, but if you see an ECB diverging to the Fed, are there opportunities just by playing it that way?
I think so. I think so. If you take a big step back, all the feedback we get from loads of clients is, look, everybody's telling us to be bearish on the dollar. Everybody's telling us that you should be moving out of the U.S. into international, and that is so consensus. But, you know, the point here is we had 15 years of just one-way trade. The U.S. was very strong. Everybody else was underperforming. So to say that that trade has fully played out, I think it's very, very early.
But, Ms. I mean, the $1 trillion question is why we have bad surveys in the U.S. and it's actually not translating into the real economy. We're not seeing it for inflation. We're not seeing it in some of the data points. So does inflation suddenly pick up? And with it, is it companies going bust? Or what are the second and third round effects of such a situation?
Okay, so the first point here is we are not looking for a recession. We think that recession will be skirted, but the risks are somewhat higher because the soft data has been very soft and hard data is so far staying resilient. But as you go into the second half, you will see a clear pickup, in our view, in inflation of 1 or 2%, which will squeeze real disposable income and purchasing power. And on the other hand, the question will also be, what does the Fed do? Because they're coming under pressure a lot. So ultimately, the release valve here is the further dollar weakness.
Ms. But the further dollar weakness also has an impact for emerging market equities. Again, how like, if you have to construct your ideal portfolio, where would you be looking right now? I
think you should be looking at emerging markets. So we can be bearish for a very long time on emerging markets. Just a few weeks ago, we upgraded to overweight. Emerging markets have done badly for years as the U.S. has been very strong. And now you have some dollar weakness. Emerging market bonds are doing quite well. You have the U.S. and China trade uncertainty, which has basically peaked. And the valuations, you're not buying something on 23 times with hope that the earnings are delivered. You're buying something on 11, 12 times when people are not there.
What do you do with Europe? Again, I know there's a defense play. We have the NATO meeting today where I imagine the Secretary General will do everything they can not to have a second Spain where they don't agree to the 5%. Is it too much price perfection, a lot of the defense stocks?
We are still bullish on the defense. We think on a 1 to 2 year view, they are remaining a structural buy, but multiples are very high. They have done very, very well. There is a bit of a travel and arrive here, but it depends on your time horizon. Technically, short term, maybe Europe consolidates, but longer term, it has more positives than before.
Ms. Lev, I have a viewer question, love a viewer question. Thank you to all of the viewers that watch us at home or in the office and then send questions. So this person's writing in saying, do you modulate your strategy depending on the EU tariff? So where's the pain threshold for EU equities?
So this is the part of this short-term tactical that if you look at, let's say, China and the US, the negotiations are much more advanced. And with Europe, they are just starting. And there is a risk that the US tries to be harder with Europe, tries to make the example of Europe. And Europe is ultimately a global cycle exporters play. And that's the issue that after the very strong rally in Q1, for Europe, you have some of this consolidation and maybe doesn't outperform near term. But ultimately, once the tariffs picture is a bit more clear, then you want to be more positive again.
Overall, for equities, I mean, we had, earnings have been okay. Are they going to be much more squeezed going forward, especially if you see a pickup in inflation in the U.S.?
Well, that's what we need to see, because basically either the companies try to pass it on and then consumer rebels, or companies internalize it and squeezes the profit margins. So the bottom line is we had a very, very aggressive move up in the tariff rates. That's not going to go away, and you still need to see the ultimate fundamental impact.
Yeah, I mean, I know that you saw some of the European domestic shares outperforming. I mean, is that from a very low base?
Yes. So if you look at,
it's not. I mean, that's the kind of the gold as late as it's just a thing. It happens if you're from a low base, so you have much more to run.
Yes, and there is a big change. There is a German fiscal stimulus, which is going to be very material, and as we move towards 2026, it's going to start to bite. So we want to be long domestic short exporters in Europe, partly because we do think the dollar will have a next leg down, and European fundamentals will be looking better as we move into the end of the year.
Mislav, what do you do with the UK? Do you put the UK a little bit to the side?
UK is very cheap as well. It's typically a defensive market, so let's say if you go back to volatility or if there's uncertainty increasing, then UK has its space, but really the story is largely about Eurozone, because that's where there is a big shift.
Mislav, just going back, because I know we need to go, but when you look at oil and the fact that there were projections of oil going to $100 a barrel, especially if the Middle East got much worse or certainly didn't temper back. On a day like today, do you worry about oil, or do you just put it as a problem for next week?
The fundamental story for oil was there's much more supply because of the Saudi. The demand could be a bit weaker in the second half if the U.S. takes a bit of a hit. So fundamentally, the oil price should not be up. And what's happening in the last 24 hours probably helps here. So I think unless the oil moves to $90, $100, I don't think that's going to be the primary driver of the market.
Mislav, thank you so much for joining us. Mislav Matejka there, head of global and European equity strategy at JP Morgan. Now, coming up, we're in conversation with Lithuania's foreign minister as NATO leaders meet in The Hague. That's next, and this is Bloomberg.
Geopolitical news whenever and wherever it happens. I'm Jumana Bersachi in Doha, Qatar, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
What I heard so far at every meeting that I had with my American colleague or any plenary meetings with a larger group of countries, whether it's Secretary Rubio or Secretary of Defense Pete Hegseth, they all say that they are committed to NATO, that NATO is more relevant than ever, and that Article 5 remains a fundamental pillar to our transatlantic security. I think that's the foundation, and that remains solid. Of course, we need to keep discussing with the United States what military assets, how many troops they want to have in Europe. It could be that some of those resources will be shifted. I think that's quite likely that that's going to happen. But if we can do this in coordination, and if that happens gradually, and if the foundation still remains here in Europe, I think that's something that we can overcome. If we agree to 5% spending on core defense and on defense-related matters, I think that would be an historic step. If you go 1 year back to the NATO summit in Washington, D.C., what we agreed upon is that the 2% is not a target, but it's a floor. So we are now 1 year later, and if we now move from 2% to 5%, with of course a 3.5% and a 1.5%, I think that would be an historic step, especially if 32 allies in unity agree on this. I think the rules are the same to everyone. I also think that Spain will sign the declaration on Wednesday when the NATO summit comes to an end. Of course, the reality is that countries have flexibility in the way that they implement these agreements. And that has been true in the past as well. In 2014, we agreed on the 2%, and many countries only this year reached the 2% or still have difficulty reaching it. And so there is some flexibility in the rules that NATO sets, and it's both on the financial side, but also on the military side. But I think in the end, what it comes down to is that we all agree on the same percentage, that we do have military plans that were already agreed upon 2 weeks ago, and in which every country said, I'm willing to do my fair share. And I think that that's key, and that's as relevant for Spain as it is for any other country.
The defense minister of the Netherlands there on the U.S.'s push to have NATO members spend 5% of the GDP on defense. Now, for the latest on the NATO summit, we're joined by Ollie Crook, who's in The Hague with a special guest. Hi, Ollie.
That's right, Francine. We're in The Hague here for the leaders' meeting of NATO that is assembling here over the next couple of hours. Donald Trump expected to arrive a little later this evening. And really the monumental announcement coming out of the group of leaders will be that NATO will commit to a 5% GDP spend. This has been a very long road to get here, and we are finally here. And we're very pleased to be joined by a guest now, the Foreign Minister of Lithuania, Kęstutis Budrys. Thank you so much for your time today. I'd like to just get there's been a little bit of debate about whether or not you're going to get to 5% agreement across the board, Spain potentially a hang-up. Do you think that you get the full commitment from NATO allies to the 5% GDP spend?
So we will see tomorrow when leaders will gather to the meeting. But as for now, yes, we see this commitment, and it will also be underlined in a joint statement that will be released tomorrow. It was a hard path to there. There was a lot of skeptic voices then. I remember when Lithuania was the first NATO country to announce that we will reach 5% in 2026, and we did it last year, December. So there was a lot of skepticism. What you are doing here, and why 5%, and whether we are trying to please someone. But now we see that it is the new standard for NATO. I'm really happy about it.
And so the volume of money is one question. The other question is the timeline. 2035 is the deadline to reach that target. Is that too late?
That is too far to the right. We have to squeeze the time to the left. And of course, the different countries will go with different dynamics. And for Lithuania, next year will be above 5%. Our ambition is to be #1 next year among the NATO countries with our defense spending. And I hope that others will also join this match. Who will be the first one with expenditure? My concern is that when we're talking about the 10 years timeline, and especially knowing how the politics work and how politicians think, I'm concerned that some of us would like to postpone everything and to push forward. So that would be the task for all of us and for NATO to keep the discipline on it. We have to start spending tomorrow.
And Lithuania is obviously much more acutely aware of the threat that Russia poses. What year would you think is a reasonable target for NATO across the board to get to that target of 5%?
We should talk about the NATO capability targets when we are ready to reach it.
Sure.
For Lithuania, for us, deadline is 2030. That's why we made a decision to increase our defense spending.
Sure.
For 2030, we want to have the strong, war-capable division in our land forces. And this is how the planning should be organized also across the NATO. Capability targets, deadline, and then the spending. So for all of us, it's sooner than later. Because the example to which we have to compare ourselves, how we are doing, that's Russia. And in Russia, they're intensifying the tempo for the defense industry production, for mobilizing the personnel into the armed forces. Therefore, we have to speed up.
And we expect Donald Trump, really the backbone of the NATO alliance, to arrive here a little bit later today and obviously attend the summit tomorrow. What does success look like here as it regards to Donald Trump? What do you want to hear from the American president?
I want to hear that is really paramount and important for NATO, that transatlantic bond is strong, that NATO is the strongest alliance as it was yesterday, it will be tomorrow, that we are ready to commit more, and we are here to announce that we are the most strongest and the most lethal power on the globe. And this is what all NATO is about. And that would be the success formula for the deterrence and to avoid the wars in the future. And that would be the peace formula for the decades to come.
And another thing that hangs over this summit is the Americans basically sort of assigning their geographic military posture. There's going to be a lot of questions about the U.S. withdrawing many of its forces that are within the European space, about 84,000 of them, 1,000 of which are in Lithuania. Do you expect the United States to draw down its military presence within Europe over the next few months and years?
We know that there is a review of American posture across the globe and also in Europe, but we have no indications as for this morning that there would be reduction of forces on the front line. Where they are stationed right now on the front line in the Baltics and down in Poland and down to the south, that's the best place for them to be because they create the effect in scales for what we are spending there. So we are providing the best host nation support. This is the absolutely high end of military infrastructure that is there, and this is the effects already given in the form of deterrence. So this is what has to be continued.
And then the other sort of aid package, the Biden aid package, is expected to run out in terms of its volume to be supportive of Ukraine. We do not expect Donald Trump to add any more to it for the Ukrainians. What comes next for Ukraine? Do we now, at the European level, need to think more seriously about touching those Russian frozen assets?
We had to do it already, and this is good that we still keep them, and now we have to move to the phase 2 and to seize them and to use them for the purposes of Ukraine. We are convinced in that, and Lithuania prepared not one non-paper, circulated it with the ways how to do it. So we have the answers already what concerns legal issues about it, and the answer is yes, it is doable and in line and in compliance with the international law. Second thing is political and financial risks, and we are ready to share the risks and to manage it together. So yes, we shouldn't leave it to one of the countries of our allies, and we have to go together and do it.
And seeing what's happened over the last 48 hours, the bombing of Iran, one of the great sort of allies of Russia, do you think that this leaves Russia weaker?
I think that it pushes all the allies and partners of Russia to rethink the partnership in the future. Because what is true for now that Syria, Assad, the good ally of Putin, and he was left there in the trouble. Now we see what the defense partnership with Russia means for Iran. It means that Russia won't step in. So it means that it weakens all the alliances across the globe, and also it weakens the very axis of Russia, Iran, China, and North Korea. And for us, why it is extremely important, because Iran is enabling Russia in its operations and an aggression against Ukraine with drones, with ballistic missiles, and with the other assets. So weaker this axis is, safer Europe is.
Well, Minister, thank you so much for your time here, speaking on the sidelines of the NATO summit here in The Hague. The Lithuanian foreign minister hoping for a more muscular and still very supportive by Donald Trump NATO alliance here.
Thank you so much, Ollie Crook there, speaking, of course, about defense and NATO. And in the last few minutes, NATO Secretary General Mark Rutte has said the U.S. is committed to NATO, but he expects equalized spending. Now, this is a big story after Spain a couple of days ago said they will not reach that 5%. The other big story, and this is in the last couple of minutes, a lot of questions on what happens between Iran and Israel after we thought there was a ceasefire. Iran, a short time ago, denying firing missiles at Israel after the ceasefire. This is according to the state-run Islamic Republic of Iran broadcasting. Again, earlier, Israel's defense minister said he had instructed the IDF to respond forcefully to Iran after it said it had identified missile launches from the Islamic Republic. This comes just hours after the Prime Minister of Israel said he had agreed a ceasefire with Iran after President Trump announced a truce earlier this morning. Coming up, we continue talking about geopolitics. We'll get, of course, an expert view and analysis on the situation. That's next, and this is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Hours after a ceasefire declaration in the Middle East, Israel says it has identified a missile launch from Iran and will respond forcefully, while Tehran denies the claims. Oil trims losses after Israel vowed to retaliate for an Iranian missile strike, plus Donald Trump heads to NATO, with the UK pledging to ramp up defense spending to 5% of GDP. Now, let's just recap some of our top stories. And Iran has denied firing missiles at Israel after the ceasefire. Now, the state-run Islamic Republic of Iran broadcasting. Earlier, Israel's defense minister says he's instructed the IDF to respond forcefully to Iran after it said it had identified missile launches from the Islamic Republic. Now, this comes just hours after Benjamin Netanyahu said he had agreed to ceasefire with Iran after President Trump announced the truce earlier this morning. So again, the situation seems very, very fluid. For more analysis, we're joined by Ali Ansari, history professor at the University of St. Andrews. Professor Ansari, thank you for joining us. I mean, it's a bit of a she said, he said. There's a missile, Iran saying it's not them. What do you think has happened so far? Is there a truce or unclear?
I mean, to be perfectly honest, it's very unclear. You sort of wake up to one news, and then within an hour it changes. It may well be that there's been some failure of command and control in Iran. Someone mentioned that they may have people may have mistimed it. They may have misunderstood the timing of the ceasefire. Presumably, whether a launch has happened from Iran or not could be verified elsewhere. So, you know, we could tell, and I can't see why the Israelis would be necessarily lying about this. I mean, it must be able to be verified from elsewhere. So something has clearly gone wrong.
Yeah, could I, Professor, also just get your take? I mean, was this a deliberate ploy from Israel once the attack started to get the U.S. involved? And actually, what, you know, having a U.S. involvement, what does it mean for their strategy in the Middle East longer term?
What, you mean the attacks that the Americans conducted over the weekend?
Yes.
Yeah, I mean, I think it was always going to be likely that Trump was going to get involved, particularly in terms of dealing with Fordo. But it seems to be that Trump obviously wants to minimize American involvement. He obviously has pressures at home, and he doesn't want to extend it. So he's been very quick to try and close this down. Whether that will happen or not is another matter. But, you know, we clearly have to wait and see what this supposed missile strike is all about. And if the Iranians have infringed the ceasefire. I mean, their rhetoric at the moment is not terribly helpful in some cases. So we need to see what is actually happening.
Okay, even if there is a ceasefire, and maybe, I mean, we need to see over the next couple of hours exactly how it develops, but if there is a ceasefire, do you think the ceasefire holds?
Well, at the moment it isn't. I mean, that's
well, at the moment we don't know, right?
I mean, well, I mean, at the moment, if this is true, then it's not going to hold. I mean, if you know, it may well be that this may be a mistake on the Iranian part, and that they may sort of try and renew the ceasefire for, I don't know, 12 hours ahead. I mean, they might try to restate it. I mean, I would suspect that's what will happen. I can't imagine really that the Iranians want to continue this. I mean, I can't imagine that anyone really wants to continue this. So, you know, I'm sort of inclined to feel that some sort of ceasefire, some sort of off-ramp will be secured.
Is a diplomatic route now still open after the last 5 days?
I think ultimately there will have to be a diplomatic solution of one sort or another. What's happened over the last 2 weeks is that the facts on the ground have changed. I mean, that's basically what it is, and I think what people will have to assess is to what extent those facts have changed, to what extent the Israelis and the Americans have been able to damage the nuclear program, and what this means, and how the Iranians basically the regime, I should say, assesses that, and whether they think they can sort of snatch some sort of victory out of the jaws of defeat, if you will. It really depends on what the material damage has been, but also what the moral damage has been on Iran. I mean, it's obviously been a bit of a shock to the system, and they clearly did not want the Americans involved. And bringing the Americans in, I think, might have been the trigger for getting this ceasefire in place.
Right. I mean, when do we know the state of Iran's uranium stockpile and, you know, actually the state of the nuclear program?
Well, I mean, that's for others to assess. I mean, really, I mean, it's not something that, you know, we can do. It will have to be, obviously, the intelligence agencies, and perhaps if the IAEA can get back in and check to see what's going on. The problem here is that the Iranians have already said, unfortunately, even before the attacks, that they have yet another secret location where they're enriching uranium, and we don't know about that. So we need to see, you know, whether that is actually true, and if it's true, then the Iranians will obviously have to be transparent about it. I mean, it's a very difficult time because they obviously have very little incentive to be transparent about these things at the moment. But on the other hand, you know, the situation is pretty dire. I think however much they will try and claim this to be a victory of sorts, they're not in a good situation.
But Professor, overall, I mean, Iran had a number of options at its disposal, and they decided to give also the Americans and the Qataris a heads up so that the base was being evacuated. How weak is Iran right now? What does that tell us about their state of mind?
Well, I mean, if this latest missile strike is anything to go by, then their command and control is in a pretty poor way. I mean, it has to be said, if this missile strike is at all you know, realistic, and it is happening, then, you know, they've lost control internally of their command and control. I think they are in a pretty weak way. They've been severely damaged. I mean, the fact that Foreign Minister Araghchi basically had to get clearance from Israel before he could travel to Geneva for those talks is a sad reflection, really, on their situation. They will obviously argue and spin that having survived this onslaught, and it's the survival that matters, that they have somehow emerged stronger. But I think internally there are some very, very serious questions to be asked, and I think there are some very, very serious divisions. But a lot of this, you know, is very difficult to tell through what we might call a fog of war. I mean, you have to be, you know, you have to be, we can only really speculate at this stage.
But, Professor, I mean, is it very difficult for the U.S. now to lecture, for example, even Russia on what they're doing in Ukraine if they come in and strike Iran that way?
Well, I think these things will always be quite difficult. I mean, I've always been fairly cynical about international law myself. People tend to use it very selectively, and you know, we also have to be very frank about it. The Islamic Republic of Iran hasn't really been a staunch defender of international law either. I mean, most countries tend to sort of like use it when it suits them. I think it's something obviously we all have to aspire and aim for, but you know, I think using it as a sort of a reference point and basically decreeing something to be against or for international or whatever, I think it's often a difficult case to make, and it's been many years now, to be honest, that countries have approached international law in a very, very loose manner, to say the least.
We're just getting a couple of viewer questions actually on whether, you know, the last 5 days really weakened the Iranian regime from within. Are, you know, harder core units going rogue, or is there going to be a change of regime?
That's the worry, actually. I mean, that is the worry. The harder core units are going rogue. I mean, that is the worry. It's you know, I think the Iranian regime has always been very brittle. I mean, it's a pretty ruthless, brutal regime, but it's always been quite brittle. It doesn't have a degree of high popularity. Its management of the political economy is dire. It may get a bounce from this, of course. I mean, it may get a bounce because it will claim that it has defended Iran's interests. But once the dust settles, I suspect people will be asking some very serious questions about the complete lack of civil defense, any sort of support for the local population, the failure of the air defenses. I mean, there was a lot of bluster before we went into this about how effective Iran's armed forces were. And, you know, up to a point, yes, but actually they've been proved to be, fairly weak. I mean, I see there that you're saying Iran claims decisive victory against Israel. I mean, here, you know, the spin machines are going into overdrive, clearly.
Yeah, that's according to the IRIB.
Yeah.
Thank you so much, Ali Ansari, their history professor at the University of St. Andrews. Now, oil trimming some of its losses after Israel vows to retaliate for an Iranian missile strike, which Tehran has denied. We're joined by Al Nightingale, who leads our coverage of oil markets in Europe. So, Al, thank you for joining us. Is the risk actually of a supply shock over, or is it over for now?
I mean, if you just look at the risk premium in oil, we're back down to where we were on June 12th. So the market has interpreted this as, you know, a significant loss of kind of any kind of risk of supply disruption. But who knows? You know, as the professor was just saying, you know, the fog of war, what happens, who can tell? It was fascinating to hear him talking about how this could have been rogue factions in Iran and a loss of discipline. Well, if that were true, you know, just makes you think, well, what else is possible from a kind of a rogue faction? You know, that's not a mainstream view that I've heard before, but if that were the case, then, you know, things would be a bit different, wouldn't they? So I think it's very risky to say that there's, you know, no chance of a supply risk, but clearly the market has taken it that way, very, very clearly.
Al, I mean, if the ceasefire holds, and again, a very big if with many question marks, but what's the long-term outlook for oil?
Well, if you look at the curve, the forward curve in oil is very, very interesting. It's basically back to where it was on June the 12th. So that takes you back to a market where we were looking at oversupply, where OPEC is dropping barrels into the market, where more is expected to come. And, you know, yeah, we're looking at an oversupply later this year. Demand is okay, but it's not going to keep up with the amount of supply that's coming in. So, you know, we're just going back to where we were, and that wasn't a great place.
Okay, Al, thank you so much. Al Nightingale there with the very latest on oil. Now, airline shares taking off this morning in the wake of a fragile ceasefire announced between Iran and Israel. Our Benedict Cannibal joins us now to discuss the latest. So, Benny, what's the trajectory for airline stocks given the state of today's ceasefire?
Well, we've really seen them sort of react quite starkly to these ups and downs, and today they are up. We see a company like Air France is up more than 10%, Lufthansa up 6%. So really across the board, a sense of optimism, and this is really a combination of things. Part of it is the lower oil price that we just heard Alaric talk about. So there is a sense here that once oil prices come down, that means the cost for an airline will be lower. Then there's the sense of, if I don't need to fly around these no-fly zones anymore, that cuts back on the detours, that cuts back on flight times, that again cuts the cost. So that's sort of the cost part of the equation. But there's also a sense of probably just relief that people will probably start feeling better again about getting on a plane, flying again, and that's not a small part of the sentiment of that industry, of that business, that people want to feel good about flying, they want to feel positive. We saw the Air India crash 10 days ago. That obviously put a huge damper on the industry. Now this. So anything that helps the industry and gives it a bit of a lift on the sentiment side, that certainly helps, and we're seeing it in the stock. Which carriers, Benny, have been most affected and why? Well, in the last couple of hours, really, in the last 12 hours, it was carriers in the region, so it was Qatar Airways, to some degree Emirates, but much less so. So really Qatar was most affected because the Qatari government decided to close down the airspace, and that had a huge knock-on effect on the airline. This is a global carrier with a huge fleet, more than 170 destinations around the world. We're still seeing some of the ripple effect of that today. A lot of aircraft out of position at the airport on the ground. There are still people trying to get their new flights. We see aircraft that had to turn back. There was one particular flight that flew from Perth to Paris, so from Australia to Europe, and had to turn back halfway. So these are people in the air for 17 hours, only to find themselves back to where they'd started. So if that doesn't make you lose your will to live, I don't know what. So we've seen some of that going on, and this is being cleaned up now as we speak, and the disruptions now are sort of at a minimum, and most flight operations are back to normal in the region.
Yeah, it's pretty rough, Benny. Thanks so much, Benedict Camel, there with the very latest on airlines and aviation. Coming up, our exclusive interview with the L'Oréal chief executive on the impact of tariffs and the outlook for the beauty market. That's next, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Now, the world's largest cosmetics maker, L'Oréal, says it's built up an inventory of some of the products manufactured in Europe ahead of President Trump's tariff increases. The chief executive, Nicolas Hieronymus, says the company is a net exporter from the United States, as many of its brands are made in the U.S. Well, Hieronymus also expects the beauty market to continue growing, but at a slower pace than last year. In April, L'Oréal reported stronger than expected sales in the first part of the year, led by demand for high-end makeup and perfumes. Well, we spoke exclusively to Hieronymus in a wide-ranging interview.
It's true that we live in a world of unknowns. There's just one thing that I know is that the beauty market continues to grow, albeit at a slower pace than last year. But the market continues to grow around 2%. More here in the UK. I've just spent my week in London. It's market's around +4%. So we are in a growing market, and indeed we have to manage uncertainties. And for me, the best way to manage it is to leverage as much as possible the uniqueness of L'Oréal, which is being a multipolar company, being across all price points and all geographies. I would say is the best way to offset some of the turbulences that we're facing.
But are consumers buying differently? Do they change actually to cheaper products, or does it stay the same and buy fewer products?
Well, you have all scenarios. The very premium products continue to thrive. The middle market is a bit more challenged, and the two channels or price points that are the most dynamic right now are mass markets and also dermatological beauty, which remains quite dynamic. And in terms of categories, I would say that hair care remains super dynamic, and so is fragrance. The one category that is slower is makeup, so probably right now a bit more natural or subdued makeup, but I know this comes in cycles, so we'll have makeup bounce back probably pretty soon.
How many actually, products have you shipped to the U.S. ahead of the tariffs?
We have shipped mainly luxury goods, because if I look at fragrances, mostly, because if I look at my U.S. business, right now I manufacture in the U.S. around 50% of the units I sell in the U.S. And by the way, we are a net exporter from the U.S., because what some people sometimes forget is that we have like 18 U.S. brands, and a brand like Kiehl's is manufactured in the U.S. and exported to China and the rest of Europe. So we're a net exporter from the U.S., but overall, half of our units are manufactured there. You add around 15%, which are Canada and Mexico. So all in all, we have like 30% that comes from Europe. It's mainly fragrances or luxury products, which we have indeed built a little bit of inventory on prior to the tariff increases, and which in the end we don't really know what they're going to end up being.
You've certainly bought also, you've been on an acquisition trail. Medicaid is your latest one. Where do you place it? Is it like high-end luxury or skincare?
It's medicated luxury skincare. It's a great brand, and I've been, I come to this country regularly. I just come out of 3 days visiting my British subsidiary, which is doing phenomenal, by the way, overall. And we had spotted that brand back in 2021. They were in their early days, and we thought they were, aside from success, they had an approach which is very similar to our philosophy, which is science-based, with real efficacy in the formulas, created like L'Oreal by engineers of different nature than L'Oreal. And we saw the great quality of their products, and they've done a fantastic performance in the UK. And we approached them, telling them that what we could do for them is make them global, which is what we do with brand. If you know the story of CeraVe, which is again medicated skincare, but at a more affordable price. We acquired that brand. It was $145 million, and it's over 2 billion euro, and that's making it global. So I hope we can do the same with Medicaid.
But why do you think the UK market is doing so well?
Well, I think there are several reasons. First of all, there's always been, the UK consumers, the British consumer have always been very much into trends, into fashion, and it's also a younger population than some of the European countries. It's more diverse, and we see that both in terms of hair needs, skin needs. There is a stronger need for performing products. So overall, it's a dynamic market, and we are by far the leader of that market, by the way, but with a share that's slightly under my European average. So I came here to tell the teams that like 18.5 or 18.8 was good, but 20 is the European average, so they still have to work a little bit.
But that's
Medicaid will add.
You're one of the biggest companies in Europe. What does Europe now need to do to become more competitive in this global change where things are changing fast and frankly almost for the worse?
Europe has to foster innovation. There's something I cannot resist telling you, is that I had a great moment of pride last week because Fortune magazine ranked us as the most innovative European company amongst all sectors, from tech to software, cars, everything. And for me, that's a fantastic acknowledgement of the work of not only our researchers, but our marketeers, our innovators in general, and it's true to the roots of L'Oreal. And I think we are the demonstration that you can be innovative in Europe. And what we are calling upon to Europe to do more is to help innovation, to be a bit less into regulation, less into creating obstacles, but more into supporting innovation, which is more or less what was, written in the Draghi and letter report. And we see, and I've been, talking to a number of European leaders, at least there is a will, there is a desire to be more flexible and to spur innovation in Europe. But it seems to be a bit of a heavy machine to move. So right now we're still waiting for actual concrete results. But the first omnibus that are being launched by EU are kind of a good sign and promising. So I'm a believer in Europe, and I think it's the moment to move.
Well, that was Nicolas Hieronymus, the L'Oréal chief executive, speaking to us exclusively a little bit earlier. Now, Standard Chartered's chief executive, Bill Winters, says he encourages people to take risk if they want to get ahead in their career. Now, reflecting on his leadership at the UK bank over the past 10 years, Winters said he may at times have been too hands-on, but today he was much happier to focus on the more strategic aspects of the business. I also asked him what kind of advice he'd give someone in his team who showed huge potential.
Take risk. Take risk. I mean, but by the time they're working for me directly, I mean, any time in the last 10 or 15 years, they've already demonstrated that they're competent, and maybe they got some subject matter expertise. And at that point, you can play it safe and just wait for the opportunity to climb the greasy pole, or you can do something special. And certainly at my level, you never get ahead if you don't take a risk and do something special, because there's lots of people who are just good. So yeah, take some risk.
Is that difficult for thinkers, or have you seen a pattern on, certain people take it easily and some people are just, if not shy, they just don't want to.
Some people have made a whole career out of being solid and competent and predictable, and you really need those people. They're really, really good, but they're probably not the natural leaders of a big organization. And other people learn that they build to the confidence to take some risk, and they take a risk. Of course, sometimes it doesn't work. That's fine. I've taken plenty of risks that haven't worked, plenty. And then you're judging, how did you react to that? I was the vice chairman of JP Morgan once. I had a really big trading loss. I was like 30 years old. Really big trading loss at the time of the first Gulf War. And he really put me through the ringer. I thought I was going to be fired. And at the end of the process, he said, I'm going to increase your limit. Really? Why? He said, because I never give a big limit to somebody who hasn't had a really bad experience and reacted well to it. And in your case, you were terrified, you were paranoid, but you were also thoughtful, and you had a plan. I buy the plan. I can trust you now. And I didn't know until you'd made that mistake that I could trust you. I said, wow, that was a life-forming experience for me.
Do you do that with your team?
I try to.
Giving them like more risk and.
I try to.
Because it builds character.
I think so, and it's a bit of an audition as well.
Well, that interview on leadership with the Standard Chartered chief executive features in a special edition of Bloomberg's Management and Work newsletter, which is being published later today. This is the first edition of many editions featuring leading leaders reflecting on their careers. I'm really looking forward to also taking on this new project. Now, let's recap the latest developments from the Middle East. Israel has accused Iran of breaching a ceasefire announced by U.S. President Donald Trump earlier Tuesday to end the 12-day war. Now, hours after Trump's declaration of a truce, Israel says it detected missile launches. Its defense minister instructed the military to respond forcefully to Iran's violation of the ceasefire with powerful strikes against regime targets in the heart of Tehran. Iran has denied firing missiles at Israel after the ceasefire and has claimed a decisive victory against Israel. That's according to state media. Now, Iran has also said its strike on a U.S. base in Qatar was self-defense, and it says it remains committed to good ties with neighbors. We'll have, of course, plenty more on that. Up next, Bloomberg Brief, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past
to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday morning. Ceasefire tested. Israel accuses Iran of a new missile launch after a truce announced by President Trump. Iran reportedly denies the accusation. A tax bill compromise. Senate Republicans consider an agreement on assaults provision as they aim to pass the legislation next week. And Fed Chair Powell heads to Capitol Hill for his semi-annual policy report. It is fragility in geopolitics that is really being tested and tried this morning. What is the state of this ceasefire? Unknown at this moment, but it doesn't matter for these oil markets. They continue to decline. We're now at the levels before really this whole conflict started to evolve. We're below $70 a barrel. At one point yesterday, they opened at $80 a barrel, with reports that Iran fired missiles into Israel, which Iran reportedly has denied. You can see what happened to oil. Some of the losses started to ease. They picked back up, but again, we're still down 3% in the day. The risk on rally, that also is unimpeded by the headlines coming in. We're up more than 1% on the NASDAQ, and especially for small caps, S&P 500 futures up 0.8%. Now, one of the reasons that small caps here are outperforming is because of what's happening in the bond market. Yes, lower oil prices is helping, but you can see the rally concentrated on the front end of the curve, down 3 basis points, with Mickey Bowman yesterday saying that she could get behind a July cut. Quite the change for a member of the FOMC who tends to be more hawkish. So you can see the long end isn't playing along, so some real curve steepening. Let's look now at the stocks on the move in the pre-market. With that is Joe Easton. Hey, Joe.
Hey, Danny. So we are seeing some decent moves higher in the airline stocks today. It is a twofold impact. Firstly, that crude oil price drop that you mentioned there, retracing a lot of the gains over the past few weeks. So we're seeing potentially better sentiment around jet fuel coming in, lifting the likes of American, United, Delta and JetBlue this morning. And also some companies resuming traffic into the Persian Gulf in terms of key airlines and key airports like Dubai as well. So keep an eye on that sector today. Then we've got Starbucks potentially spinning off its Chinese unit. Now, this is according to a couple of reports overnight, but Starbucks actually in the latest comment denying that they're going to do this. But the CEO at the company was at Yum Brands before when they did a bit of a spin-off in China. So that is adding to the speculation that this could actually happen. Starbucks up 0.7% at the moment. And then finally, stable coins in focus once again. Fiserv doing a deal with Circle Holdings and PayPal potentially on a new stable coin called FI USD, and all those stocks extending gains for a second day today on the stable coin excitement. And as usual, take a look at the before the bell opening wrap for a summary of all these news and more. Danny.
Yeah, those stablecoin stocks really have been on a tear as of late. Joe, thank you so much. We'll catch up with you later in the hour. Also coming up this hour, we'll be speaking to Laura Cooper of Nuveen and Marvin Lowe on the market reaction or lack of market reaction to Middle East developments, along with the former U.S. ambassador to Israel, Daniel Shapiro. Conversations you do not want to miss. But let's get back to our top story. Israel has accused Iran of breaching a ceasefire after it detected missile launches. Its defense secretary has instructed the military to respond forcefully to Iran's violation of the ceasefire with powerful strikes against regime targets in the heart of Tehran. It comes an hour after President Trump announced on Truth Social early this morning the ceasefire is in effect. Please do not violate it. Prime Minister Benjamin Netanyahu confirmed a short while later, writing in a statement, in Operation Rising Lion, the state of Israel achieved monumental historical successes and placed itself in line with the great powers of the world. Iran has yet to publicly confirm that it agreed to the ceasefire. Joining us now from Jerusalem is Bloomberg's Dan Williams. Dan, what do we know at this point as to whether or not the ceasefire has held?
Well, as you noted, it's fragile. There was what Israel described as a violation, a missile strike or a missile launch against its north. No casualties in that, although the fire service say they've located a fragment of that missile. It would appear that the Iranians are trying to distance themselves from this, effectively denying it happened. And for now, the ceasefire appears to be holding. Of course, as you noted, the Israelis say they will retaliate for this apparent violation. The question is if that's carried out. And to my knowledge, that Israeli retaliation has yet to be carried out. If that would draw a line under this episode and allow for the ceasefire to be pursued, or if that in turn would draw Iranian retaliation. Time will tell, but I think all over the region there's a sense of relief, a hopeful relief, that this ceasefire will hold. Certainly in Israel, you can feel the change of mood in the air after 12 days of really unprecedented war with Iran, unprecedented even by the standards of more than 20 months of regional war that began with a Hamas attack from Gaza in October of 2023. We should know in the coming hours whether the Israelis at least believe that this is being upheld and sustained.
Well, the Iran Foreign Ministry spokesman putting out on X saying that they claimed decisive victory against Israel, saying that they were forced, Israel was, to accept a one-sided ceasefire. Dan, what does Iran get out of this? Much has been made about their attempts to save face. Where do they stand now? What do they want, and what is really their goal in helping and continuing to observe a ceasefire if they are indeed doing so?
Well, they get a respite from what appears to have been a very significant drubbing by the Israelis. Israel says that it destroyed pretty much all of the Iranian nuclear project. It says that it has destroyed a substantial amount of the missile projects of Iran, more than 80% of missile launches, and that it has also struck at major figures when it comes to Iran's regional relations with proxies like Hamas, Hezbollah, and the like. If true, and there's no reason to believe it isn't, given what we've seen in terms of Iranian confirmation of many of those targets in the course of this 12-day war, it would appear that Iran could definitely do with some time to breathe, regroup, potentially even reassess its policies, its position on its nuclear program, its relations with the United States, and potentially down the line, its relations with Israel.
To that point, Dan, what do we understand about just how badly wounded Iran's nuclear program has been after this episode?
That's an enormous question, because what effectively was the final knockout blow as far as President Trump was concerned of this war, which enabled him to call this ceasefire, or as he prefers to call it, peace, or to urge the sides towards peace, was U.S. intervention with strategic heavy airstrikes against 3 core Iranian nuclear sites, including at Fordow, which was famously dug into a mountain, deep under a mountain, in a bid by the Iranians to protect it, to withstand conventional military strikes. Now, the Israelis have not been as categorical as the Americans in terms of damage assessment. They say it's too early to know. There's also an open question over the fate of 400 kilograms of highly enriched uranium that were believed to have been held at that site, and which, if loose, if unaccounted for, could potentially leave a vestige in terms of potential nuclear bomb fuel in the future. However, to judge by Israel's statement about accepting the ceasefire offer or proposal by Trump, Israel says it has achieved the goals of this war, of this operation. So Israel is at least formally saying it's war. It's basically declaring victory here and saying it's moving on, potentially to readdress or pivot to the Gaza war that began this entire cycle of regional fighting.
Dan, thank you so much for that update. That is Bloomberg's Dan Williams. Let's get the view from Wall Street now. Joining us is Laura Cooper, Global Investment Strategist at Nuveen. And Laura, you've noted that these are markets that continue to chart higher despite the uncertainty, getting another leg higher thanks to this idea of a ceasefire, which it remains to be seen whether or not that's being tested this morning. Is it relief or is it misplaced?
I think at this point we are seeing a bit of relief coming through on markets, and perhaps this ongoing simmering geopolitical tensions does still warrant a small risk premium, predominantly in crude oil, even though it should be trading much lower. But I think from a broader market perspective, there were limited economic spillovers from what we were seeing in the Middle East. And I think markets instead are taking their cues from that incrementally dovish tone that is emerging now that we're seeing more division across FOMC members.
Can we talk about that? I mean, Mickey Bowman yesterday, Laura, it was really remarkable to hear her more or less endorsing a July cut, an FOMC official who was hawkish throughout the entirety of the Biden administration. Was that an audition, Laura? Is that what we should make of it?
I think one of the key takeaways from last week's meeting was just the degree of divergence that we are seeing across Fed members. So as you mentioned, Bowman has historically leaned quite hawkish, but in the past, more recently, we have heard other members like Kashkari, who is also, dovish leaning, is actually turning a bit more hawkish. So I think the tea leaves to read going forward will really be around the economic data. So while they are flagging that potential July cut, which markets are increasingly pricing in, we also get the CPI print for June only 2 weeks ahead of that meeting. And it is our expectation that that is when we're starting to see some of that tariff-led inflation effects feed through. So we're reluctant to have them cut in July. And if anything, looking at what Powell said last week, they expect those kind of material increases in inflation to play out over the summer. And they want to take this time to reassess. So while we still lean towards 2 cuts this year, we don't think July is really that kind of next pivot point at this stage.
Considering that July, to your point, Laura, you might not completely see the impact of tariffs. I mean, we've had all these companies front run, maybe still using products that haven't experienced the highest level of tariffs as they exist. Are the odds and potentials for policy mistakes even higher now if you do have Fed officials starting out there campaigning for a July cut?
Well, I think there is a lot of uncertainty around this because if we don't actually see those material tariff effects come through, and then we do start to see some cracks emerge in the labor market, we're already seeing some signs and that more timely indicators around initial claims, around jolts, around quits rates, then perhaps the Fed may have missed the mark in terms of easing because they will have waited too late. But I think echoing what Powell said last week, there's just such a degree of uncertainty in these markets. Yes, it has diminished since earlier this year, but again, they don't want to cut and then risk potentially having those inflationary pressures emerge. And to our mind, we're still looking at a core inflation forecast in the U.S. about 3% this year. So it's going to be hard for them to kind of have that front running of rate cuts in that type of environment unless they see that deterioration in the hard data. And as Powell said last week, the labor market still shows signs of being quite solid.
So interpret this, Laura, then into what you do on this curve. It's been a curve that's been steepening. The front end has had a bit in the last couple of days, thanks to some of those comments from Mickey Bowman. Long end remains under pressure. The one big beautiful bill making its way through Washington, D.C., perhaps now in agreement on SALT. Is this bond market still investable? And if so, where do you want to put your money?
I think there are still ample opportunities in the U.S. rate space. I mean, to your point, even if we do see some amendments come through on the Senate in this big, beautiful bill, this is still a deficit that is probably going to climb from about 6% of GDP now to about 7% by 2028. And that does warrant greater compensation for taking those long end exposures. So we do think there is scope for the term premium to rise from here, and that does warrant a steeper curve, so that's a position we like. But as well, the front end of the curve, we think you're getting kind of that ample risk reward because you are kind of getting that carry. But in our view, one of the greatest mispricings in this market is actually the degree of rate cuts in 2026. Now, markets are going to be a bit cautious to start to price those in, but we think, the Fed is signaling only 1 cut next year. We're leaning more towards 3 with 2 this year. So the risk reward profile does suggest that kind of front end really is the place to be in maintaining that short duration posture.
Laura, really great to have you on this morning, finding some bits of certainty in the uncertainty. Laura Cooper, Global Investment Strategist at Nuveen. Now let's get you some other top stories that are trending on the terminal this morning. And NVIDIA CEO Jensen Huang has started offloading his shares. An SEC filing shows he recently sold 100,000 NVIDIA shares for about $14.5 million. This is Huang's first transaction under a plan that allows him to sell up to $865 million worth of stock by year's end. Amazon, meanwhile, is investing $54 billion into the UK in the next 3 years. The investment would include opening 4 new warehouses, and it's expected to create thousands of new jobs. UK Prime Minister Keir Starmer called it a massive vote of confidence in the UK as, quote, the best place to do business. And passengers on a Qantas flight bound for Paris spent more than 15 hours in the air, only to end up back where they started in Australia. The flight from Perth made it into Indian airspace before an Iranian missile attack closed the airspace in the region, forcing it to turn around. Coming up, Powell heads to Capitol Hill for a semi-annual testimony. He's expected to talk about the potential impact of the Iran conflict on inflation and get grilled from Congress on why they haven't cut. We're going to have more on that next on your brief.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger in New York. Fed Chair Powell will be on Capitol Hill kicking off his two-day semi-annual testimony. He's expected to explain why interest rates are likely to remain steady till at least September. Now, elsewhere in Washington, President Trump posting on Truth Social, we should be at least 2 to 3 points lower. It would save the USA $800 billion per year. We'll be paying for his incompetence for many years to come. The board should activate. Joining us now is Bloomberg's Bill Ferries. The board should activate, sounding like I don't know, like a cool superhero move. Bill, what are we expecting? What sort of grilling is Powell going to be getting on Capitol Hill?
I think it's going to be a pretty rough reception, particularly from Republicans who are going to carry that message from President Trump saying, why aren't you already moving on rates? How much could you conceive of cutting in the coming months, in the coming meetings? Why don't you get ahead of this ball? I think that's what they're going to be pounding on. I think Democrats are going to be saying, where is the inflation? When will the impact of these tariffs really start to show up at the grocery stores and at the markets Americans are shopping at? So that's going to be, from both sides, I think, a lot of incoming fire. The president has been on Jay Powell to cut rates basically since he took office in January. His reasoning has changed at times. But as some of these more recent inflation reports have come in lower than forecast, that has kind of helped Trump kind of double down on this message that he thinks the central bank president needs to be moving more quickly.
Well, his reasoning as of late, as we just saw in that Truth Social post, would be to save the U.S. money because of the amount it's paying on interest. And at the same time, the one big beautiful bill is making its way through Washington, D.C. with deficits set to expand. It seems like there is an offer on the table for a SALT cap coming from the Senate bill. Does it seem like there is a potential agreement that will be reached between the two chambers of Congress on this matter?
Yeah, on SALT, there's a possibility of some sort of a deal coming together. The big picture is this is that $4.2 trillion tax package that the president has basically made his main focus of his legislative agenda at this point. The deal that seems to be working out on the Senate side is that they will keep that $40,000 state and local tax deduction, but they will change the threshold potentially at when it starts to phase out. The bill from the House side said incomes up to $500,000 would get that full SALT deduction, and then it would start to peter out a bit after that. What the Senate is perhaps floating at this point is, could we lower that from $500,000 to some other level? We don't know what that level would be, but we are getting signals from Republican House members who have really drawn a line in the sand over the $40,000 SALT deduction. They're saying, yeah, we can talk about that. Now, that is one issue in this big package. There are still other issues around energy tax credits, around things like Medicare payments to rural hospitals that could still hold the legislation up. The Senate is coming in today. They're hoping to vote. They want to vote this week. That could be this weekend. If they can do that, it gets it back to the House in time for a House vote, and they could still make that July 4th deadline that the president said. That said, there are Republican senators who say publicly, at least, they're not so worried about July 4th. Sometime a few days later might not be the worst thing. But the president, when he sets these deadlines, he tends to want to see them get met. I think the Republicans in the Senate and the House are going to still aim for that.
Yeah, the clock's ticking, about 10 days to go. Bill, thank you so much. That is Bloomberg's Bill Ferries. Coming up on the show, we're going to take a look at what's making headlines around the world. That's up next on your brief.
Africa has been silent in telling those global stories. And that's where we have a mind full of stories that we can mine and mine and mine for years to come. And I think investors realize that, and they understand that there's real potential. And as I said earlier, independent films are making a huge comeback. So you're looking at your $5 million movies, your $6 million movies, and this film fund that we're setting up is looking at films, we're looking at financing films between a budget of $2 million to $8 million. So we truly believe that we will get a return on investment. And it's about managing expectations. We're not saying to investors we're going to go out there and we're going to sort of start making films that are going to bring you $1 billion return on investment. That's not to say there can't be outliers. The world has seen this happen time and time again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to your Bloomberg Brief with Danny Berger in New York. It's time now for your front page news. Let's take a look at what the major outlets are running as their top stories this morning. First up on the New York Times, President Trump surprising some of his own top officials with the Israel-Iran ceasefire announcement. According to a senior White House official, the president abruptly made the announcement on Truth Social after speaking to Israeli Prime Minister Netanyahu and Iranian officials, with Qatar helping to mediate. Iran yet to confirm the ceasefire. Next up on the Wall Street Journal, federal law enforcement officials are on high alert for domestic retaliation in response to U.S. strikes on Iran. According to a source, FBI officials were told to shift resources towards Iran and domestic threats after manpower in recent months had been focused on immigration enforcement. And finally, on the FT, Congress is weighing a multi-billion-dollar tax cut for private credit investors as part of President Donald Trump's flagship spending plan. The proposal would limit taxes on dividends paid to investors in business development companies. Congress's nonpartisan Joint Committee on Taxation estimates that the tax break would cost $10.7 billion to 2034. All right, as we head to the end of the half hour, a quick look at oil this morning. The fall continues, although the bond market, it is the front end getting a bid this morning, down a basis point. Some of that rally has ebbed, but yesterday, Mickey Bowman floating the idea of July cut. Coming up, markets shrugging off geopolitical concerns from the Middle East. We're going to have more with State Street's Marvin Lowe. That's coming up next. This is Bloomberg.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday morning. Ceasefire tested. Israel accuses Iran of a new missile launch after a truce announced by President Trump. Iran reportedly denies the accusation. A tax bill compromise. Senate Republicans consider an agreement on SALT provisions as they aim to pass the legislation next week. And Fed Chair Powell heads to Capitol Hill for his semi-annual policy report. It has been fragility in the Middle East. Are we or are we not in the midst of a ceasefire? Even so, it is oil that keeps falling this morning. At one point yesterday, we were at $80 a barrel. Look at where we are now, just below $69 a barrel, with declines continuing of 3.5%. You can see that little tick higher there early in the hour was due to reports that Iran had fired a missile into Israel. Iran denied that. However, when it comes to this equity market, the rally continues, though. We are up more than 1% for both the NASDAQ and Russell 2000 futures, S&P just under 1%. And gains for this bond market have been ebbing this morning, somewhat fueled by lower oil prices, but really it is a front end that has been rallying thanks to more Fed comments about a July cut, Michelle Bowman being the latest of which. Your 2-year yield is down 2 basis points, little change for your 10-year, while the 30-year continues to sustain losses. Let's now catch up with Bloomberg's Joe Easton, who has your stocks to watch. Good morning, Joe.
Hey, Danny. So we are seeing decent moves higher in the airlines today. United, American, Delta, JetBlue, all gaining by around 3% or at least 2% at the low end. It's the double hit for the sector in terms of a double boost. We are seeing the oil price coming down, of course, boosting sentiment on a positive side, and also easing disruption in the Persian Gulf as companies announce resumptions of flights into key cities like Dubai. So we are getting a boost across the airlines today. Keep an eye on that one. And then we move over to Starbucks. I could probably do some more coffee myself, to be fair, but Starbucks bouncing around today. The company facing a report that they are going to potentially spin off their Chinese unit. They have actually denied it in recent moments, but there was a report overnight, and the CEO previously did a bit of a Chinese spin-off at his last company, Yum Brand. So it's adding to the speculation around this. Starbucks up 1% this morning. And then over in the stable coin space, something I don't know too much about, but I've had to learn about. Fiserv actually potentially doing a deal with PayPal and also Circle as well on a stable coin tied to the dollar. It's called Fi USD. A lot of excitement around this sector. Circle has doubled in value over the past 5 days on this stable coin excitement. So all of those shares, Fiserv in particular, in focus, up 5% heading towards the open, Danny.
Joe, we could all use an extra cup of coffee these days. Thank you so much for that.
Absolutely.
That is Joe Easton there. All right, let's get back to our top story this morning. The latest on Israel-Iran developments, with Israel saying Iran had launched a missile. Iran denying that accusation. Bloomberg Horizon's Middle East anchor Jomana Bersetchi joins us now from Dubai. Jomana, what do we understand at this point?
Really fast-moving developments, Danny. The main highlight, I would say, from this morning is the fact that President Trump put out a post overnight saying that the two sides, Iran and Israel, had agreed to a ceasefire agreement. Now, after that, there was a lot of ambiguity about the timeline of that ceasefire, when exactly it went into effect. And what you saw was an exchange of blows from both Iran into Israel and Israel into Iran right until the very last minute. Now, in fact, the IDF has said that Iran just this morning launched 6 ballistic missile volleys into Israel, causing the death of 4 people, and that one of the missile attacks actually happened after the ceasefire was supposedly implemented. Now, Iran are trying to walk away or distance themselves from having fired those ballistic missiles after the ceasefire. But here is the situation as we know it right now. Israel have now said that they have signed on to the ceasefire agreement. We got an announcement from the Prime Minister's office a couple of hours ago saying that they have signed on to this agreement. The Israeli Prime Minister will be giving some comments later today to talk about it, but that also Israel have achieved their, quote, war goals in Iran. So it will be interesting to hear more commentary around that. And then Iran, I would say, have given a tacit acknowledgement of the ceasefire by saying that by issuing a statement affirming the national decision to impose a cessation of war, and they are framing it as a victory, perhaps a reframing to save face from the Iranian perspective. So yes, there's been a lot of moving headlines this morning, but it is fair to say, I think, that most of the region is breathing a sigh of relief this morning. You can see it in some of the regional bourses. They're trading north of 2% firmer, in that this situation did not broaden out into a regional conflict. And even the so-called calibrated Iranian retaliation on the U.S. strikes that took place at the U.S. base in Doha yesterday was very telegraphed, very choreographed in advance, and it sort of drew a line under that episode. Looking forward, there are going to be questions about how sustainable this ceasefire is going to be, and also whether this brings Iran back to the negotiating table.
Jomana, thank you so much for that update. That is Bloomberg Horizon's Middle East anchor Jomana Bersetchi. Now, State Street senior global macro strategist Marvin Lowe weighs in on the lack of market reaction from geopolitical headlines, writing, quote, the market's ability to shrug off the evolving conflict in the Mideast is encouraging, but also speaks of complacency when applied across all asset classes. I'm pleased to say that Marvin joins us now. Marvin, really great to see you this morning. And I know you go on to say, look, the impact on corporates themselves is limited, but that uncertainty should show up in parts of investor portfolios. Where should it show up?
You know what? Really, the whole trend between having comfort with U.S. companies and maybe having a little bit less comfort with, U.S. government assets, if you will, between the dollar and treasuries is kind of the disparity that we're generally monitoring closely. So I would think that it's the dollar that shows it the most. I would think that it's treasuries that show it the most. And, certainly we're getting a reversal of some of the initial movements across those two asset classes yesterday with, again, as you mentioned, long yields a little bit higher, and the dollar certainly a little bit more on its back foot than what had been the theme that was driving things yesterday.
Well, this is the thing with the dollar, Marvin. It feels like good economic data, the dollar sells off. Bad economic data, the dollar sells off. Concerns about war, the dollar's little change. Those concerns go away. The dollar falls. I mean, the trend seems unrelenting of a weaker dollar, Marvin. What, if anything, wakes it up?
Yeah, I mean, you know what? It's hard to see how we break that cycle because, the dollar smile, if you will, which has always been this theme that has supported the dollar, has really turned into the dollar frown. And, that frown keeps getting deeper on the downside, if you will. There are still a lot of questions on trade. And, I've generally held that if you have smaller trade balances, there's ultimately less demand for the dollar. That takes quite some time to play out. We do know that investors are underweight dollars to a significant degree that we haven't seen in the last 5 years. There's going to be choppiness around that, but I think until proven differently, until we get a much clearer signal of what the dollar is in the global trade world, as well as where interest rates are, kind of with all these cross currents with the Fed seeming to be fighting amongst themselves in terms of what the next move is. It still spells weakness for the dollar.
What do you make of that, Marvin, of Michelle Bowman yesterday seemingly endorsing a July cut, someone who has been more hawkish, especially for most of the Biden administration?
Yeah, for sure. And, you know, she's joined by another one of the more hawkish voices in Chris Waller recently. You know, I think there is a bit of interviewing going on, to be honest with you, with regard to the next Fed chair. You know, for better or for worse, everyone is looking past the you know, if you will, the lame duck period for Powell. And, you know, we're going to start seeing some of the more likely candidates voice their views, which, you know, theoretically they are interviewing with the administration. And, you know, politics is supposed to be outside of the Fed, but, you know, it is creeping in, certainly.
Well, at the moment, it really is just Michelle Bowman and Chris Waller. Goolsbee, though, saying that if tariff error clears, they should proceed with a cut, not as stark as those. But if politics is behind this, Marvin, does that increase the likelihood of a policy mistake? Does a divided Fed turn into a more dovish Fed that forces their hand to cut, maybe when the data hasn't fully reflected the extent of tariff inflation?
Yeah, I mean, I still really adhere to the sacrosanct nature of the Fed. You know, the way the board is established, the you know, the majority rules, if you will, approach that the Fed has. It does make it a bit more challenging. It probably makes it harder for the Fed to adapt quickly when, you know, you've got a lot of these disparate voices. Kind of having said that, the inflation and economic environment is one where doing nothing still makes the most sense to me and seems to make the most sense to the members on the board. And, you know, we'll be operating within that kind of context until we get closer to really the changing of various guards that happen next year.
Well, we're going to hear from Chair Powell on Capitol Hill today. You know, he's going to want to do nothing and change nothing and have no market reaction. Sure. Marvin, thank you so much for joining us. Marvin Lowe of State Street. Always a pleasure to have you on. Coming up, we're going to speak to one of the leading voices on the Middle East, that is former U.S. Ambassador to Israel, Daniel Shapiro, will be joining the Bloomberg Brief coming up next.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. The NATO summit is kicking off in the Netherlands as the Israel-Iran truce announced by President Trump getting tested just hours after its enactment. Bloomberg's Oliver Crook joins us now from the summit taking place in The Hague. Oliver, just how much is this going to be dominating the NATO summit?
Well, listen, it's already overshadowed the NATO summit. There was some question about whether or not Donald Trump would come if there was not a ceasefire, and he had his hands full with the Iranian and Israeli question. But it seems that he's going to be embarking on this journey in just about 20, 30 minutes' time and come here to The Hague, where you will find a very receptive audience here of NATO members at this summit who will commit, in all likelihood, to spending 5% of their GDP towards defense spending. This is an absolutely huge raising of the defense targets that we've seen from NATO previously. It has been at 2%, and we should say that over the last sort of decade, if you take out the United States, the average defense spend has been about 1.6%. So hitting that 5% is a huge sort of foreign policy coup for the Trump administration. We should say it's not a pure 5%. About 3.5 of that is going to be on the heavy military hardware, tanks, guns, ammunition. 1.5 of that is going to be a little bit freer in terms of how it can be classified, cybersecurity, infrastructure, those sorts of things. And we should say that also the target is to reach that by 2035, and that is something that many members of the eastern flank of NATO are not terribly happy with. That being said, this is a massive coup for the Trump administration coming in here. There has been a little bit of dispute about whether or not the Spanish will get on board and fall into line, but that is sort of the expectation going into this summit. Really a monumental summit, and really as just been saying, really a turnaround for the European defense picture, and really a big win for the Trump administration as he prepares to arrive here at The Hague.
Oliver, looking forward to your continued coverage. That is Bloomberg's Oliver Crook at the NATO summit. I'm pleased to say that joining us now is Daniel Shapiro, senior fellow at the Atlantic Council and former U.S. ambassador to Israel. He was also the former deputy assistant secretary for defense for the Middle East. Ambassador, thank you so much for joining us this morning. And look, as you know well, ceasefires in the Middle East are often fragile and fleeting. Israel saying that missiles were launched from Iran denying that. What do you make of the state and the likelihood of a potential ceasefire at this moment?
The ceasefire is shaky, Danny, and yesterday, or I guess several hours ago, just before it went into effect, Iran fired off some last barrages of missiles. There were fatalities in Israel. I think 4 people at least were killed in one of those strikes, and then at least a few of those missiles were fired even after the ceasefire went into effect. Well, Israel is going to respond to that, I think, in the hours to come, and it sounds like they feel they have the Trump administration's backing to do that. This often happens as you try to negotiate a ceasefire to a conflict in the Middle East. Everybody wants to get in the last shot. And so sometimes it goes overtime and the ceasefire takes a little longer to take hold. But I do think both sides need this. They both need this off-ramp. And so I expect within the next 24 hours or so, it's more likely than not that the ceasefire will actually take place.
It kind of speaks to this idea, Ambassador, of saving face. And from the Iranian side, I mean, you had a president that thanked Iran more or less for its very weak response, giving them early notice. How does Iran at this point, which defending itself, or rather nuclear armament, had been something of a domestic policy, what now? How does it show that it hasn't kowtowed to foreign powers?
Well, Iran was badly damaged during this series of strikes over the last 12 days or so. First by Israel with its strikes on military targets, on leaders, on missile targets, on their nuclear facilities, and on various regime locations. And then the Trump administration, of course, with the big strikes Saturday night that did significant damage to 3 important nuclear facilities. So Iran's been badly hurt. What's most important to Iran is really to preserve the regime. And so what they need right now, first is a break. They need to catch their breath, and they need to try to do 2 things, which we need to balance in our negotiations with them. They're going to try to sustain their ability at some point to resume progress on a nuclear program. It's very important that we, the United States and our partners and allies, get into negotiations with them to get them on the other path, to give up the enrichment capability that gives them the possibility to break out to a nuclear weapon. What might make that possible to reach an agreement on is that Iran really needs to provide something to its people. They've suffered, obviously, through years of its misrule. They've suffered during this conflict. And there could be held out sanctions relief that would give the chance for the regime to bring some benefit to a very sputtering Iranian economy. But in exchange, it's going to have to give up that nuclear program.
To that point, it is a fractured population already that you're hinting at, a brittle hold from the Islamic Republic on governing its people right now. Is there a real risk, Ambassador, that you see something of a fracture or break that comes from more radical forces within Iran?
Well, the regime, as I said, is somewhat destabilized. Certainly, this is not a popular regime. Estimates by real experts tell us that maybe something like 15 or 20% of the public really actually believes in this regime's ideology. The rest are either of different ethnicities or they've been persecuted by the regime for expressing opposition. And so there could be fissures. And if there's some kind of organized opposition, there's even a possibility this leads in the direction of some kind of regime change. But one version of that regime change, as you suggest, could be a military takeover or a coup that brings to bear even the most hardline elements of the country's leadership. So there's some risk here. Frankly, I'm hopeful that the Iranian people will find their voice and find a way to insist that they be ruled by a regime that actually respects their human rights, that doesn't want to show aggression against its neighbors, that doesn't want to squander the resources of this great country on foreign adventures and ideological crusades. But that's something that's going to happen internally if it happens, and the Iranian people are going to have to find their voice to do it.
Well, if there is a weakened hold of the Islamic Republic, how does that color what we're going to see in this diplomatic effort going forward?
Well, this, as I said, the regime has to try to show some strength, try to preserve some of the assets that it wants. Of course, that nuclear program was always part of their belief that if they could achieve the nuclear weapon, or at least be on the threshold of it, that itself would be a form of stabilizing the regime and holding off external threats. We've got to try in negotiations with support from our European partners, from our Gulf partners, for example, Qatar, that helped yesterday to negotiate the ceasefire, get Iran to understand that its future and the future even of this regime, if that's what it's most motivated by, trying to preserve, is better guaranteed by giving up that nuclear capability that would otherwise lead us potentially back into conflict, and pursuing a path that doesn't require conflict with other neighbors, that stops wasting resources on military campaigns, on sponsoring terrorist organizations, and that brings sanctions relief and a return to the international economic community that Iran hasn't really been able to participate in for 25 or 30 years because of their own behavior. That's a tall order. I don't know if this regime, this 86-year-old Ayatollah, or those still alive who are advising him, or those hardline elements still with influence in their system can get there, but that's got to be the direction we try to push them on.
Is there a risk that almost the opposite lesson is learned from this, not just from Iran, but from various forces around the world, that something like this could have been prevented if Iran already had nuclear capabilities? Does this not fuel others to hurry up and get their hands on something like that?
Well, that dichotomy already existed. It's well known. It's sort of sometimes referred to as the Libya versus North Korea model. North Korea, which inched forward and then eventually did break out to become a nuclear weapon state, is now somewhat invulnerable because they have that nuclear capability. Libya, which had a nuclear program but gave it up through negotiations, ultimately saw the overthrow of their leader, their dictator, Mohammed al-Gaddafi. And that that's why some countries and some observers have suggested that a country like Iran or others might find that having the nuclear weapon is this better way toward regime stability than giving it up. That risk was always there, and Iran played on that risk by sitting right on the threshold of nuclear capability. They had, according to the International Atomic Energy Agency, 10 bombs worth of 60% enriched uranium that they could have enriched to 90%, which is weapons grade at almost any time in just a matter of days or a few weeks. They had been researching how to actually weaponize that uranium if they ever got the decision from the Supreme Leader to do so, which they had not, but could have done in a very short period of time if he gave them that decision. And so we were right on that threshold anyway. And so it was necessary, either through negotiations or in this case through military means, to push them back from that threshold. But again, you're right that they or others might try to get back on that path and think that's a path to security and stability. We have to disabuse them and any other actor to try to prevent the spread of nuclear weapons into the hands of those who really can't be trusted, especially if they're highly aggressive states, as Iran has been since the revolution in 1979.
Ambassador, we really appreciate your time and your thoughts this morning. Thank you for joining us. Daniel Shapiro, former U.S. Ambassador to Israel. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Let's get you set up for your trading day on this Tuesday. We're going to get Carnival scheduled to report its earnings before the bell. FedEx will be after the market close. And then a host of Fed speak throughout the day, Hammock, Williams, Kashkari, and Collins. But the main focus will be Fed Chair Powell's testimony starting at 10 a.m. Eastern and any continued movement out of the Middle East. We're just speaking with the former ambassador who says the ceasefire may take days to take hold. That is it for Bloomberg Brief on this very hot day in New York City. Surveillance is up ahead.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Just because the market is being resilient doesn't mean that the risk isn't going to come back and bite it later.
Market and energy traders are still trying to understand what is the calculus here.
It would take some time for markets to get more confidence in the base case outlook for disruption.
There's a lot of uncertainty, but there's absolutely no volatility.
The market will respond when the circumstances change, either for the better or for the worse.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, crude back in the 60s. The Middle East avoiding the worst case scenario, sending crude oil even lower as Iranian retaliation is limited, orchestrated and very well telegraphed. President Trump is now heading to a NATO summit after securing a fragile truce, and that truce is looking shaky already.
Yeah, earlier this morning, there was this agreement for 4 a.m. Eastern time for there to be no missiles lobbed between Israel and Iran. A little after 4 a.m. or a little before, depending on how you look at it, Israel accused Iran of launching missiles at northern Israel, which they did intercept. There were sirens going off. And now Israeli Defense Minister Israel Katz coming out and saying, in light of this violation, I have instructed the IDF, in coordination with the Prime Minister, to continue the intense activity of attacking Tehran.
I think the market can handle that. Contained Israel-Iran skirmishes. What it cannot handle was the prospect of a broader escalation that involved the United States and a retaliation from Iran that would suck the US back in. We've avoided that. That's why crude has gone from the 80s to start the week and down into the 60s this morning.
The past 48 hours is a perfect example of why this market is benumbed to headline risk. You are looking at markets that have gotten whipsawed and beaten up every time they have tried to react in some sort of equal measure to the drama of the headlines that we have gotten day after day. And this is the reason why people are getting increasingly hesitant to make bold moves on any of these proclamations. How do you price in long-term oil spikes when they last all of a week?
Expected some drama down on Capitol Hill later on this morning. Look out for Chairman Powell kicking off 2 days of testimony. This from the President of the United States going into that, saying the following: I hope Congress really works this very dumb, hard-headed person over. So you've got a lot to look forward to a little bit later this morning.
Yeah, and he goes on to say, and by the way, this was at 1:32 a.m. Eastern time that President Trump was truth socialing overnight. What does this guy sleep? I don't know, and this is what was on his mind. Then he could move on from the truce that you got between Iran and Israel. He said the board should activate Make America Great Again, the board, increasing focus on individual Fed members after yesterday Michelle Bowman, a Fed governor, reiterated what we heard from Chris Waller, saying that she would be open to a July rate cut if some of the inflation data continue to come in a decelerating path.
If you were looking to take the summer off, Fed watchers out there, maybe July starts to get a little bit more interesting. This morning, yields are lower again at the front end. We're down by 2 or 3 basis points. The 2-year, 3.83. Coming up this hour, we'll catch up with Jeff Yu of BMY as a risk-on mood returns to markets, Edward Fishman of Columbia University on a fragile truce in the Middle East, and Congressman French Hill as Fed Chair Jay Powell heads to Capitol Hill. We begin this hour with our top story, a fragile truce in the Middle East. Our team coverage starts right now with Anne-Marie from the NATO summit and Bloomberg's Jemana Basechi in Dubai. Jemana, let's turn to you first. The president announcing a ceasefire. Who signed up to it?
Yeah, well, a lot of developments have happened in the last 12 hours. It's really been a whirlwind over here in the region. But as you say, around 2 a.m. local time, President Trump put out that Truth Social post declaring and announcing the ceasefire, the bilateral ceasefire, and that to hear from the Israeli Prime Minister later today. He's expected to deliver remarks. But it took us a couple of hours after that to even hear from the Iranian side. And in the interim, a barrage of missiles kept being directed towards Israel. And in fact, it resulted in the death of 4 people per the latest figures. And questions really about what time Iran sent those missiles towards Israel in response to that particular episode. But it is also worth pointing out that Iran, the National Security Council, did issue a statement tacitly acknowledging the existence of a ceasefire, saying they affirmed the national decision to impose a cessation of war. They're framing it as a victory. So the world is taking it as they're sort of signing on to the ceasefire without explicitly saying it. So net, we're in a situation now where it is fair to say that there is a ceasefire. There have been, appears to be a couple of violations this morning, but ultimately the region is breathing a sigh of relief because we didn't get the broader escalation that perhaps could have been forthcoming 24 hours ago.
We certainly avoided the worst case scenario in the region, that's for sure. The president now heads to a NATO summit in Europe. Anne-Marie, does he head to Europe with increased confidence?
Absolutely. The president is going to come here and also, I think, look some naysayers in the eye, like Emmanuel Macron, Jonathan, who last week at the G7, he was also irked by him when Macron said that he was going back to Washington to strike the ceasefire agreement, and the president went on Truth and said that is, quote, wrong, and said he has no idea why I'm going back to Washington. It's going to be much bigger than that. In the end, the president is saying that he has a ceasefire, but of course that came after a massive strike over the weekend on Iran's nuclear facilities. We also had Emmanuel Macron come out yesterday in Europe talking about the fact that he thinks what the United States did in terms of these strikes is illegal. So the president is going to come in here and maybe get along with individuals like the German chancellor, who said that what Israel and the United States is doing is the dirty work, and why should I criticize what they're doing if they're taking out Iran's nuclear capabilities? The ceasefire is fragile, as Jumana just went through, especially what is going on with the Israeli defense minister saying that the IDF will respond. But at the same time, if this is the start of the end of this mini conflict that did not spill out into a wider protracted war, the president is going to come into this NATO conference and say, you have to escalate to de-escalate, and he's going to look back on past experiences like 2020 when it came to Qasem Soleimani, this experience this year, and he is going to use that probably as leverage to get more European allies to join him in his mythology, as well as increasing their defense spending, which he has been complaining about to the European Union for years.
Anne-Marie, Jumana, the Bloomberg team, more from them later on in the program. For a snapshot of what's happening in the market right now, equity futures positive by 0.5% on the S&P. Crude rolling over once again. Here's the view on Wall Street this morning. Jeff Yu of BMY writing the following: investors have to consider many conflicting factors, from inflation to growth linked to oil prices, tariffs, taxes, and deregulation. Jeff joins us now for more. Jeff, good morning, sir. Are we bullish enough? Max Kenner, HSBC. We think the biggest risk to our view is that we're not bullish enough. Jeff, it just feels like this market's Teflon. What's your view on some of the moves we've seen more recently?
Well, just to paraphrase Anne-Marie there, it seems to be you need to be risk off to be back to risk on, right? But if markets are inured to this, then why bother being risk off in the first place? Then looking at our flow data, you know, how the dollar has been performing. Let me tell you this, last Wednesday, FOMC day, IMM day, was the biggest volume date we had year to date, but the net direction was flat. flat for dollars, pretty flat for everything else. So it just shows you people don't want to take too much conviction on right now, but if the direction's going to be risk on, then you just can't afford not to participate.
A couple of weeks ago, Jeff, some investors were saying that the pain trade was further gains in the S&P 500 and U.S. equities. Do you still see that as being the case in some of the positioning data that you would look at?
So looking at equity data right now, so absolutely yes for European equities. And if we're heading into the NATO summit, looking for further defense spend, this is a market that, based on our data, is over 50% positioned above last year's average. So normally you would not want to add to that kind of positioning. But if you do get a above expectations spend commitment out of the EU, then that may go high. For the US market, not so much yet, because we haven't really fulfilled that positioning gap opened up after Liberation Day. But if we do surpass that over the coming weeks, then the pain trade could be looking somewhat problematic as well. For FX, it's another matter. I think the dollar from here can definitely go higher versus the euro, although be selective in that trade as well.
It was really great that we had both Jumana and AMH talking about the dual sides of some of the main stories this morning. On one hand, you've got the conflict between Iran and Israel that was stymied by a show of force. Then you have NATO discussions, excuse me, where President Trump is talking about how important it is to spend on the military. How much is there an upside risk in both growth and inflation from some of the spending that we're hearing a lot of the NATO members committing to as a result of some of the demands from President Trump?
So from an EU perspective, it really is about the quality of growth rather than the amount of growth. So again, going back to how our positioning is in industrials and aerospace and defense, it looks like markets are positioning for 1.5–2% European growth, right? Which sounds good, but you want to deliver that in real terms without too much inflation. So it's about the productivity gains, what the Draghi report signaled last year. I think from the US's point of view, again, it's about avoiding stagflation. If it is positive growth, moderation inflation, whereas keeping nominal growth in terms, and that translates into good households who can then spend and boost earnings, that's the important side of things. Are we there yet? Probably not. And to be honest, given all of these events, you accumulate them into weaker confidence, I'm still skeptical whether we can achieve that earnings growth which is being priced in.
Jeff, for Fed watchers out there, can we take the summer off? This from the Atlanta Fed President, Raphael Bostic, just moments ago to Reuters. No rush to cut rates with price hikes expected. Governor Bowman, Governor Waller disagree. They open the door to July. Jeff, what's your base case for this summer?
So this summer, our base case, no cuts, right? Wanting to roll that until September maybe, and then go from there. Again, it's following the data. So I think every single Fed member that's motioned, towards cuts of late is still stressing that they want to look at the data first. So if the data justifies it, then you can move it forward. And I think that's why markets are somewhat cautious in pricing July in. But if we get a sudden turn, especially in inflation, then probably that will be the case as well. Maybe we move into a BOE-like scenario, where you have a few splits coming through, and then just see, where the tiebreaker is. But certainly it does bring in some summer volatility along the Fed curve as well.
Jeff, we've had a string of downside surprises on core inflation in America. Why do you take little comfort from that?
Well, again, it is really the direction of travel. So is it going to be a sustainable downside? We head back to target, then below target, and keep it there. So if then we do have downside growth surprises, then you can actually make a case for the Fed to move ahead of that. You want to really anticipate where the data is going to be. You don't want to be behind the curve. Are we in a position where you can see data undershoot, core inflation and headline inflation undershoot? I don't think that's the case yet, especially, with the spending that is being mauled. And of course, we've got the fiscal considerations to talk about. Is the US moving towards fiscal consolidation? Probably not. And that's something that the Fed will have to consider. All central banks will need to consider the fiscal path right now. And I think that's helping the ECB stay where they are. But on the other hand, that's helping the BOE push towards a more cautious approach.
So, Jeff, that introduces an interesting calendar. July 4th. On July 4th, we're expecting that tax bill to pass. That's a self-imposed deadline. July 9th, we're expecting some kind of trade deal between the United States and a whole bunch of countries. How do you want to position into that calendar?
So you want to position for, I would say, risk. And risk insofar as the market has been totally inured to risk right now, we would probably take the other side of that. Have conviction first, and I think conviction will be maybe a repeat of what happened in April, not as aggressive, because the White House has seen that. But the tightening in financial conditions through some steepening in the curve, I think that is to be anticipated, because if you actually take the opposite side of what could go wrong, higher spending for one, and then you don't get the trade deals and tariffs come through, then that bear steepening comes into play. That is not risk positive, and I think markets still need to be attentive to that.
Hey, Jeff, appreciate your time. Jeff Yu there of BNY. That final point there, Lisa, on the bond market, an interesting one. The next 2 weeks, full of risk.
Suddenly, what happens on Friday is going to matter quite a bit, especially because of what Michelle Bowman said yesterday. The fact that if you get core PCE on Friday and some of the spending and income data from individuals in the United States that comes in lighter than expected, does this open the door more materially to a July rate cut? It is data dependent, but how much data is actually relevant to your point where we already have that data, but you can dismiss it as backward looking? When is it not backward looking anymore?
The bond yields this morning down by about a basis point. Crude continues to roll over. Equities at the moment just off session highs. We're doing better again. We're up by 0.5%. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. We start with the latest on the ceasefire. Israel accusing Iran of violating it and ordering strikes on Tehran. The news came out hours after President Trump announced an end to the 12-day war. At that point, Trump posted on social media, the ceasefire is now in effect. Please do not violate it. The president is heading to NATO in The Hague this morning. Meanwhile, passengers on a Paris-bound Qantas flight spent more than 15 hours in the air, only to end up back where they started. The flight departed from Perth, Australia, making it into Indian airspace before an Iranian missile attack closed airspace in the region, forcing it to turn around. The plane landed safely back in Perth today around 11 a.m. local time. And Starbucks is disputing a report that it's thinking of selling its China business. Caixin Global reported the company held talks with over a dozen potential partners, including 2 private equity firms. But Starbucks says it's not considering a full sale. That's coming as the brand struggles in China due to weak consumption and intense local competition. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, President Trump seeking a reset.
I think the president really hit the reset button and said, look, let's actually produce long-term peace for the region. That's always been his goal. I actually think when we look back, we will say the 12-day war was an important reset moment for the entire region.
Up next on the program, Edward Fishman of Columbia University, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
What a wild trip for crude in just a couple of sessions. We started the week just north of the 80 mark on Brent crude. This morning, we're in the 60s, 69.37, as we avoid the worst case scenario across the region in the Middle East. Crude is down by another 3% this morning on both Brent and WTI. In the equity market, adding to yesterday's gains, equity futures up this morning on the S&P 500, positive by 0.8%. On the Nasdaq 100, up by close to 1 full percentage point. Out of Savannah's this morning, President Trump seeking a reset.
A week ago, Iran was very close to having a nuclear weapon. Now, Iran is incapable of building a nuclear weapon with the equipment they have because we destroyed it. Our hope and our expectation is that they're not going to try to rebuild that program. And I think the president really hit the reset button and said, look, let's actually produce long-term peace for the region. That's always been his goal. I actually think when we look back, we will say the 12-day war was an important reset moment for the entire region.
So here's the latest this morning, a fragile truce between Israel and Iran being tested already. Israel accusing Iran of violating the ceasefire agreement and vowing to retaliate. Joining us now is Edward Fishman at Columbia University and former Russia and Europe sanctions lead at the U.S. State Department. Eddie, good morning. It's good to see you.
Yeah, nice to see you too, John.
The words of the Vice President, J.D. Vance, saying that I actually think that when we look back, we'll say the 12-day war was an important reset moment for the entire region. Do you agree?
Yes, of course, because this is a fundamental shift in terms of how U.S. policy and broader policy toward Iran has been for 20 years. For 20 years, we have all considered a nuclear-armed Iran as completely unacceptable. But up until a few days ago, that goal had been pursued by sanctions and diplomacy. And military force was held in reserve because the idea was that Iran may be pursuing a threshold nuclear capability, but that they would never weaponize if they knew that racing for the bomb would lead to U.S. and Israeli strikes. Well, we've now acted preventively. And so that whole reason for deterrence, the reason for Iran not to pursue weaponization, has been taken off the table. So what I would say is this is a very high-risk, potentially high-reward gamble, but again, the risk is quite acute right there.
It's a big question, and it warrants maybe a long answer. Have we established deterrence in the region or not?
Oof. I mean, look, deterrence against Iran, yes. I mean, I don't think that Iran is going to, strike the U.S. in an aggressive way. I think ultimately what Ayatollah Khamenei cares about most of all, even more than the nuclear program, is regime survival. And so that's why I never took seriously the idea that they would close the Strait of Hormuz or that they would aggressively attack U.S. forces, because I think he knows that's the end of his regime at that point. But in terms of whether it has ended the nuclear program, that I'm much more skeptical about, because while even if you can accept at face value the idea that the centrifuges at Fordo and Natanz have been destroyed, and I don't think anyone really knows because we don't have eyes inside those facilities, the 400 kilograms of high-enriched uranium, enough for 10 bombs, is apparently missing on the loose. And even if Iran has a single covert nuclear facility, and that's something that no one knows, they could take that material and produce weapons-grade uranium in a matter of days. And so the thing I worry about is a situation where the bomb just sort of goes in the basement.
Which is the reason why some people are saying that maybe this is a step to push Iran to the table more aggressively in a way that they were unwilling to do so earlier. How feasible do you see that scenario as?
It's going to be really challenging because the Iranians are not going to want to be seen to capitulate to American force, right? And so I think diplomacy on the nuclear program for the next few months is going to be very challenging. However, what I think this does do is it does open up the possibility, at least, although however slim it may be, that you could get Iran to agree to something like no enrichment on their soil. Because if you've truly wiped out their enrichment capacity, which they've spent $500 billion to build over several decades, then maybe it's not as big of a concession for Iran to give. But I think the first step to that, and one that's going to be very challenging, is to establish a stable ceasefire between Israel and Iran, let tensions cool, and then maybe a few months down the road, pursue diplomacy.
At the same time, people are discussing the broader ramifications of this back and forth of this incursion and saying that actually it will be a deterrent for, say, other countries that are looking to test the United States, that are maybe thinking that the U.S. wouldn't use force, and now the fact that they did would offer some sort of deterrent. How feasible do you see that as sort of a presiding sentiment going forward?
That I fundamentally disagree with. I mean, look at the circumstances in which Trump intervened. Israel had established complete air superiority over Iran. Basically, Iran had no control over its skies, right? So Trump said, I thought it was kind of humorous, we control the skies over Iran. It was actually Israel that had established that. So yes, any country that doesn't have the ability to potentially shoot down American planes or that the U.S. doesn't fear retaliation from, yes, Trump will act. Whether that leads to more deterrence against China in the Taiwan Strait or against Russia, I'm much more skeptical.
Eddie, can we explore the counterfactual? Got a few moments. The Joint Comprehensive Plan of Action, JCPOA, signed back in 2015. You were part of the Iran sanctions team. This, of course, heavily favored by the Democratic side of Washington, D.C., ripped up by the current President Donald Trump in his first term. Where would we be today in your mind if we hadn't ripped that up?
We'd be in a much better place. I think fundamentally, the only way you can end Iran's nuclear program is through a deal, right? Bombs can set back the nuclear program, but they can't end it. The JCPOA prevented Iran from having any high-enriched uranium. They only had 300 kilograms of low-enriched uranium. Today, they've got 400 kilograms of high-enriched uranium, right? And so they're much closer to a bomb than they would be otherwise. The big critics of the JCPOA said that, well, this is time-limited. It's not indefinite. This critical component of limiting Iran's uranium enrichment would have expired in 2030, so 5 years from now. So what we've done, basically, is by ripping up the JCPOA, is I think it's set in motion the conditions that led to military force being on the table today.
This, of course, was something that was also favored by the Europeans. The president heads to Europe now to meet for a NATO summit. How divided are the members of that NATO alliance now?
Extremely divided. I think, look, what has happened, and the thing that's really divided the NATO isn't so much Iran, right? It's Russia, in that NATO views, most of the members of NATO view Russia as an existential threat. Many of the members view Russia as a potential military threat that they could invade within the next few years. Trump has been wary of doing anything aggressive toward Russia, right? There have been 0 new sanctions on Putin put in place since the beginning of the year, and basically no willingness to actually stand up to the Russian threat. And that hasn't changed. And we've seen, I think one of the interesting things about your question on deterrence is, sure, Trump may not chicken out when it comes to bombing Iran, but with respect to Russia, we've seen 0 follow-through on any of the red lines or threats that he's put in place toward Putin.
Is that something you expect the Europeans to push him on this week?
Yes, I do, because, again, this is existential for members of the European Union. At the same time, you know, the European members of NATO really don't want Trump to fully walk away, right? That their big fear is that Trump could actually just turn his back on NATO and say, you know what, we're no longer going to abide by Article 5. We're not going to provide you defense in a time of need. And so there is this delicate balance that the members of NATO are having to play right now.
Eddie, it's good to see you.
Great
As always, appreciate your time. Thank you. Edwin Fishman there of Columbia University and also author of Choke Points. Check it out. Fantastic book. Lisa, that's the situation, some tension for the Europeans once again as the president pushes them to spend more on defense.
There seems to be an inconsistency when it comes to how some of the force is applied. And that's currently going to be one of the main topics as they commit to spending 5% of their GDPs.
Expect more coverage on the NATO summit with Anne-Marie. She's on the ground. We'll catch up with her in about 30 minutes' time. Up next on the programme, Ellis McPhee of Oxford Economics on the risk to dollar dominance. Live from New York City this morning. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
It's going to be a hot one in New York City, breaking into triple digits a little bit later on today. Going into all of that, equity futures positive. Positive again, up by 0.8% on the S&P. Positive by 1 full percentage point on the NASDAQ 100. Stocks are flying. Later on this morning, Chairman Powell testimony, day one of two-day testimony on Capitol Hill. Look out for that a little bit later. We'll have a preview for you in just a moment. We're 3 hours away from the cash open. Let's get you some morning movers. Let's cross over to Danny Berger, who has more. Morning, Danny.
Good morning, John. A real sense of relief across airline stocks this morning, which have been punished over the past 12 days with the conflict in the Middle East. You can see United's up 3.5%. Delta's up more than 2%. One, because you have lower fuel prices and the hope that airspace reopens up over the Middle East and helps avoid some of the longer routes, or in the case of that Qantas Flight 8 15-hour flight that gets you back where you started. Elsewhere, we are seeing lift shares. Those are rallying in the pre-market too. Those are up 4.3%. An upgrade from TD Cowen this morning from hold to buy, saying that its expansion has gone beyond its top 25 markets. And with the acquisition of Free, now it's also entering into international markets, so likes the prospect of that growth. Now, elsewhere, stablecoin stocks have been on an absolute tear after the Senate bringing up legislation that would make stablecoins more mainstream. This morning, it's another day of a rally from Fiserv. This is a stablecoin issuer, but this time joining in with MasterCard. MasterCard announcing moments ago that it will be seeking a joint venture with Fiserv to work on stablecoins. Of course, stablecoins are a real threat to the likes of MasterCard and Visa, so those shares up again this morning, John.
Danny, thank you. Can you imagine being trapped on a plane to nowhere for that long, that Qantas flight?
Honestly,
Brutal.
I don't think I want to, because the rage that I would feel, the frustration, the sadness, it's an emotional roller coaster that I don't feel like expressing.
Would you be one of those people who run up and down and start shouting at people and get caught on smartphones?
I would hope not,
You'd
but
lose
I
it.
can't guarantee anything.
On our radar this morning, Israel accusing Iran of breaching a ceasefire just hours after President Trump announced the deal. Iran has yet to publicly confirm it agreed to a truce. That truce is already looking shaky, but this oil market is looking the other way. We've gone from the 80s to the 60s in about 24 hours.
People were seeing the potential for some sort of huge oil disruption, like the closure of the Strait of Hormuz. This seems to have taken off the table at this point. There haven't really been attacks even on oil infrastructure. There's been some conversation between the Gulf states, don't you dare come and fire weapons on my territory kind of talk. And ultimately, people are saying that this will pass. Whether the conflict is over is quite another story, as we see from some of the Israeli response to missiles fired at them earlier this morning. And I think that that is going to be a longer discussion.
This was a crude story. The next story could be a bond market story, and it involves foreign relations, foreign policy, and international relations. The president heading to the NATO summit today. European leaders planning to ramp up defense spending. They're expected to try to persuade Trump not to withdraw troops, weapons, or military aid from the region.
So one question is what we were talking about with Eddie Fishman, which was, what is the U.S.'s role with Russia and Ukraine? The point that you raised about the bond market is going to be one that is very market sensitive, and a lot of people are looking at, especially as Germany put out some of its expectations for Q3 borrowing later this year. And it shows that they're going to be selling $22 billion in additional debt than they originally had planned to fund some of the infrastructure and military build out. The question is, are we underappreciating the amount of spending that European countries are going to be doing, and the US, frankly, by the way, because the OBBB isn't exactly contractionary? And how much does this actually spur growth versus just simply inflate the deficit?
This speaks to what Jeff Gundlach spoke to you about over a double line, which is the great reckoning he thinks is coming for the bond market at some point in the future.
Well, I asked him whether we are seeing this sort of prospect, I don't want to say of bankruptcy, he said bankruptcy, I'm not going to say bankruptcy, but some sort of fiscal pressure in the United States is getting true pushback by Treasury buyers. And he said, you're already seeing this. And he pointed to some of the disruptions that we've seen in the fact that Treasuries have not acted as that haven bid. It is a complicated story because what is the risk? Is it inflation or is it deteriorating growth? And because we don't understand that, it's not a clean read, but this is an increasing discussion as we head toward the July 4th deadline.
We'll catch up with Double Line in the next hour, so look out for that conversation on the bond market. Also look out for this. Fed Chair Jay Powell testifying to Congress this week. President Trump attacking the Fed Chair once again, up late overnight posting this, saying that, quote, I hope Congress really works this very dumb, hard-headed person over. So that she sets up for later on this morning.
And it just continues the jawboning. Will it be effective? And is it already being effective? And that, I think, is the increasing question. Jim Bianco of Bianco Research put out a note yesterday where he said, are we witnessing the beginning of a Fed mutiny led by two Trump appointees, talking about Michelle Bowman as well as Chris Waller, opening the prospect of a July rate cut? We can get into that later. But there clearly are some people who are listening to what President Trump is saying, and some people who would argue that is the correct economic point of view. So this is a complicated discussion beyond just saying political pressure.
Matt Lazzetti, Deutsche Bank. The June SEP was more about division than uncertainty. Speaks to that. The chairman wanted to sit in the news conference and say it's very uncertain. He, of course, doesn't want to come out and say we're very divided, but a lot of people are starting to conclude that's precisely what they are.
Do we get dissents in July? This might be the big question for that meeting that does come at the end of July.
And what does this mean for the FX market and the US dollar? Innes McPhee of Oxford Economics writes in the following: although the near-term challenges to the dollar's dominance have risen recently, we think they're still relatively limited compared to the seismic shift needed for the global economy to switch to another principal currency. Innes joins us now for more. Innes, welcome to New York. It's good to see you.
Thanks, John.
Let's get to this call. Why are you a little bit more constructive on the dollar, at least from this perspective?
Well, I think, John, what we're seeing is a lot of cyclical pressure on the dollar. Clearly, the impacts of tariffs and now oil as well is sort of stagflationary at the margin for the US, whereas it's more straightforwardly disinflationary for the US. At the same time, investors all around the world have been very much overweight US assets, and there's a little bit of a point at which now they're sort of, given this shock, they're reassessing that and maybe doing a bit more hedging. And then thirdly, of course, there's a lot of uncertainty, not just about tariffs, but about fiscal policy as well and what that means for yields and the term premium. So, you know, to me, a lot of that cyclical pressure is a reason why the dollar's depreciating. It's down more than 10% against the major floating currencies. But that doesn't necessarily mean that we're going to see some broader reassessment. At the end of the day, the US remains the largest market. It remains absolutely central to the global trading system. And at the same time, you know, what we're going to see is really big long-term shifts to see that the dollar no longer part of that major system.
Long-term is the right term. This is a long-term conversation, much more short-term. If we can turn to the calendar, July 4th, we've got this self-imposed deadline for the tax bill. July 9th, we've got this other self-imposed deadline for a whole host of tax deals, rather trade deals. I just wonder, from your perspective, being in London, looking over to the United States, how you think about the next few weeks and how things shake out.
Well, I think, you know, the market is pretty much on pause to see a lot of these deadlines come through. As ever, the market kind of thinks that, you know, a couple of weeks down the line we'll get more clarity. Clearly, we might not, though. And if we don't, then that's clearly going to be another catalyst for the dollar to move a leg down, perhaps.
How much are we seeing the dollar weaken as a result of some of the fiscal spending and potential inflationary impacts? I mean, this has been one of the arguments that people have been making. The fiscal backdrop is one reason why the U.S. is losing fiscal dominance. Does that have relevance at a time where there's fiscal expansion in Europe as well?
I think it does have relevance, but it is within that broader context. I think, if you like, everyone's been very focused on US fiscal policy at the moment. We're starting to see a little bit more clarity from Europe in terms of what will come. At the end of the day, I think it's actually broader than that. We're obviously seeing a lot more issuance. The net supply of safe assets, which has been so low for the last decade, is rising and rising very substantially. But at the same time, we're also seeing a lot of macroeconomic volatility. Fiscal policy has changed from being very passive the last 10 years to being an active tool of demand management. And that does have implications for the term premium. Term premium should rise. We should see yields higher, even regardless of where short-term rates are going.
Taking a step back, for the bulk of this year, there's been sort of a pendulum that's been swinging between the risks of either inflation accelerating on the heels of some of the supply shocks, fiscal expenditures, versus some sort of downgrade to growth that we've seen from tariffs, some of these disruptions, from even the oil shock and what that does to consumers. What have we learned over the past 48 hours about what people's expectations and their response to a potential oil shock or inflationary shock would be? Do we have a greater sense that the inflation upside is kind of being reduced somewhat?
Well, I think, as you said earlier on, the Fed's very divided on this issue. Clearly, what we've learned over the last 48 hours is that the market has kind of almost gone to price in a risk premium on oil that's pretty much where we were in the middle of June. So there's a lot of upside to that, I would argue, given that this already seems to be a very fragile ceasefire. But fundamentally, there are those that will want to ease early, and that's a very defensible attitude, given that we know that an increase in oil prices will have a detrimental impact to growth later on and bring inflation down eventually. But remember where we've just come from. The Fed and other central banks have just seen a huge inflation overshoot in recent years. We're not confident as economists, as central banks at the moment, about the second round impacts from an increase in inflation. And I think, it's a very defensible attitude to want to wait and see how big that impact on prices will be, and therefore what the second round impacts will be. We haven't even seen or even started to see the big upside to the initial inflation shock, let alone what that might do for second round impacts.
With all of that in mind, do you think July is a live meeting?
I don't. We've long said that December is going to be when they cut. There are good reasons for that. I think we may well see dissents. We've seen dissents, though, under Chair Powell before. I don't think that's necessarily a deal breaker. I just don't think we're going to get clarity over the data that's going to move the majority of the committee towards wanting to cut.
Looking for some clarity from the Fed chair a little bit later on this morning. Innes McPhee of Oxford Economics. Innes, good to see you. Thanks for dropping by and enjoy New York. Looking for some clarity on the issue over in the Middle East as well. The President of the United States announcing a ceasefire between Israel and Iran. Asked by reporters before leading to the NATO summit whether that ceasefire, that truce is breaking. The President saying, Lisa, just moments ago, I don't think so.
Yeah, and this really goes to the heart of the lack of clarity. President Trump, when asked about the ceasefire, saying, I think they both violated it. So where does that leave us? Him saying, get that ceasefire together, guys. We have to have this sort of the de facto place where we're going to launch off as he heads to NATO and as they get a sense of some sort of calming down in the oil market. Just yesterday, he came out. Guys, don't bid up the price of oil. That's just letting them win. So today, he got what he wanted.
Crude is down nicely by 2.9% on both Brent and WTI. The latest from the president there. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Senate Republicans are coming around to the $40,000 SALT cap proposed by the House in the president's tax cut package, but they want to lower the income threshold. The SALT provision is one of several holdups for the bill. Other issues include Medicaid cuts and green energy tax credits. Republican leaders hope to pass the bill by President Trump's deadline of July 4th. And Amazon has unveiled a $54 billion plan for investment in the UK over the next 3 years. The online shopping giant will open 4 new warehouses, creating thousands of new jobs nationwide. UK Prime Minister Keir Starmer called it a massive vote of confidence in the UK as the best place to do business. And NVIDIA CEO Jensen Huang sold over $14 million of NVIDIA stock over 2 days. It's his first transactions under a plan allowing him to raise cash without spooking investors. According to the Bloomberg Billionaires Index, Huang is the world's 12th richest person, but his fortune is almost entirely made up of NVIDIA stock. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, a dovish tilt from the Fed.
It is time to consider adjusting the policy rate. Should inflation pressures remain contained, I would support lowering the policy rate as soon as our next meeting.
Another call for an interest rate cut from another governor on the FOMC. Up next, the chair of the House Finance Committee, Congressman French Hill, who will be leading the conversation with the chairman of the Federal Reserve later on this morning. Live from New York, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City this morning. Good morning to you all. The president making his way towards a NATO summit over in Europe. Just stopping by some reporters and answering some questions. Asked about the truce between Iran and Israel breaking, saying, I don't think so. Going on to say this about the ceasefire, though, I think they both violated it. I'm not happy with Israel. I'm not happy with Iran either. I'm really not happy with Israel going out earlier on this morning. This is still relevant for foreign policy. It is increasingly less relevant for financial markets. And you can see that in today's price action. Equity futures positive once again by 0.8% on the NASDAQ, up by 1 percentage point. Crude, what a round trip we've been on from the 80s back to the 60s on Brent. 69.36 and down 3% on the session. Under surveillance this morning, a dovish tilt from the Federal Reserve.
As we think about the path forward, it is time to consider adjusting the policy rate. Should inflation pressures remain contained, I would support lowering the policy rate as soon as our next meeting in order to bring it closer to its neutral setting and to sustain a healthy labor market.
Here's the latest this morning. Fed Governor Michelle Bowman joining Chris Waller with support for a July rate cut. The comments coming ahead of Fed Chair Jay Powell's two-day testimony on Capitol Hill as President Trump continues slamming Chair Powell for holding interest rates. Bloomberg's Mike McKee joins us now from D.C. with more. Good morning, Mike.
Good morning, John. Well, I would certainly expect right from the top that Jay Powell will be a lot more polite in addressing these questions than Donald Trump is in posing them. But I don't think Powell is going to sound very dovish today. Michelle Bowman and Chris Waller have both come out in favor of perhaps lowering interest rates as soon as July. But both of them are also the Republican members who were appointed by Donald Trump. Other members of the Open Market Committee have been much more circumspect about when they'll be able to get around to it. Reuters this morning reporting in an interview with Raphael Bostic, the Atlanta Fed president, that he still sees just one rate cut by the end of the year. So not everybody is on board with their thinking. They just get a lot of publicity because they're the first ones to say it. Not sure how much influence Bowman has on monetary policy. She's the banking person, but she did create a lot of news yesterday in saying that basically she wants to dial back the supplementary leverage ratio, something that Wall Street banks have been waiting for quite some time. Maybe that has more of an impact on certain stocks than Jay Powell today.
Let's see if that comes up in the hearings over the next 2 days. Mike, we'll catch up with you later. Mike McKee there, down in Washington, D.C. Joining us now is the Congressman French Hill of Arkansas, chairman of the House Financial Services Committee, which the Fed chair will be testifying before later on today. Congressman, welcome back to the program, sir. Always good to hear from you. I'm going to start with a slightly provocative question. I'm paraphrasing here. Do you plan to work over this very dumb, hard-headed person a little bit later this morning?
Well, Jonathan, it's great to be with you. We look forward to having Chair Powell before the committee this morning. And I think he'll face questions on his outlook for inflation and therefore what his views are about rate cuts coming forward. I think that's the important issue of the day. But he'll also probably be complimented by members because the Fed has recently taken decisions to get out of some of the environmental social governance groups that they were involved in around climate change, something that House Republicans have never thought the Fed should be involved in over the past few years. We want them focused on price stability, number one, and number two, we want them focused on a safe and sound banking system. We thought that was a distraction.
So we've got monetary policy and then we've got bank regulation. So, Congressman, let's start with the monetary policy first. As you're aware, and as I implied with that first question, the White House is really ramping up the pressure on the Fed chair. Do you worry that the chair starts to become more worried about the optics of cutting interest rates than focused on the data that might justify them?
I really don't, Jonathan, because since World War II, we've seen pressure from presidents on Fed chairs, but we've seen the Fed chairs and the Board of Governors try to be data-driven in their decisions. And, of course, they've made mistakes over that period of time, which is while the Fed is a creation of Congress and I believe strongly in an independent monetary policy, it's also true to recognize that they're not immune from criticism. So there's a debate, and you've already seen that debate shaping on the Open Market Committee itself with the comments from Governor Waller and Governor Bowman.
Congressman, would you be willing or would you support the idea of nominating someone to be the next Fed chair soon so that they can have an outsized influence over the committee?
I think it's my, base case assumption that Chairman Powell will serve out his term and President Trump will make a determination on who he thinks should be the next chair at that time.
Well, just the reason why I ask this is because some people have speculated that that's what's going to happen. We have heard from this administration that they are going to consider potential future candidates, and there's a lot of speculation that Chris Waller and Michelle Bowman are kind of in the running and trying out. I mean, how much would you like to see some of this noise taken away from the real debate, which is what is the predominant risk to markets? Is it potential weakening or is it inflation?
Well, again, as I say, I think certainly since World War II, the speculation about how presidents feel about their Fed chairs and who they might nominate to succeed a Fed chair has just been part of the markets, and the markets understand that. What's important is that the Fed gets it right and we focus on price stability. And if the inflation forecast and inflation expectations are anchored at that 2% level, then I think that's certainly something the Fed should take into strong consideration about a rate cut in the coming meetings. And that's exactly the kind of work I want them to do, is use data analytics look at the trends in the market, look at their forecast, and make that decision to the best of their ability.
And many of those officials are focused on the policy outcomes of other things. July 4th, we've got the self-imposed deadline to pass the One Big Beautiful Bill. July 9th, another self-imposed deadline to come to some kind of trade deal with a whole bunch of countries. Congressman, could you maybe help the Fed chair a little bit later this morning? Where do you think we will be in a few weeks' time?
Well, look, I think uncertainty is a part of life. It's a part of the stock market and the bond markets every single day. But if I look back at the 1980s, we had extraordinarily high inflation. We had high budget deficits for the time. We had a defense buildup underway. We had a dollar that some deemed significantly overvalued. And yet Ronald Reagan, through tax cuts, through regulatory reductions, through the right monetary policy between Paul Volcker and Alan Greenspan, saw the economy grow and grow dramatically. And I think America is poised to grow dramatically. Look at GDP since the summer of the pandemic. It was about $21 trillion. Today it's $28 trillion. We're the preferred investment location for global investment around the world, and I believe that that uncertainty will drop over the coming weeks as we have clarity on taxes, clarity on regulatory policy, and we drop the steep slope of incredible amounts of federal spending coming out of the Biden administration.
Congressman, just away from the events in Washington, D.C. this morning, we'd love a comment from you on the news of this morning elsewhere, particularly in the Middle East. The president posting on social media just moments ago on a truce between Iran and Israel, a very frustrated post from the president. Do not drop those bombs addressing Israel. If you do, it's a major violation. Bring your pilots home and do it now. And the tone, as we understand, of the president leaving, making his way to the NATO summit in Europe was a very frustrated president of the United States with Israel, with Iran, and hopeful that maybe we can establish a long-lasting truce in the Middle East. Do you think we can establish peace through strength in the Middle East? And how much of a change is that with this administration relative to the Biden administration over the last few years?
Well, I do think peace comes through strength, and that's been demonstrated by President Trump, both in the Middle East with his Abraham Accords in his first term and with his efforts to end Iran's dismissal of the West. All during the Obama administration and Biden administration, we had appeasement from the Democrats in the White House. They funded Iran's missile operation. They relieved sanctions. They let them sell all their oil on the open markets. They facilitated that money going then to the Houthis, Hezbollah, Hamas, and we've seen the damaging position on that. And so Trump is returning to his pressure on Iran through ending the nuclear program, not delaying it. And I think it's going to change the balance of power in the Middle East for the better. And I think it demonstrates peace through strength. And also I think the president going to the NATO meeting will demonstrate that again as European countries now commit to spending 5% of their gross domestic product on defense, standing up a stronger, more robust industrial base and defense posture for Europe. I think that's good for the Atlantic Charter, for NATO, and I think it's good for future peace in the Middle East.
Congressman, we appreciate your time, sir. Busy morning ahead for you. Best of luck with the hearing. Thank you, sir. Congressman French Hill there, down on Capitol Hill. Up next on the program, we'll catch up with Barbara Duran of BDA Capital Partners, Henrietta Trays of Vader Partners, Jeff Sherman of Double Line, and retired Lieutenant General David Deputer. Live from New York City this morning, good morning to you all. The second hour of Bloomberg Surveillance is just around the corner.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had, here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Geopolitical risk just smacks you in the face. Investors just don't want to price it in.
Base case remains that we don't see significant disruptions, neither of oil or natural gas in the Middle East.
Iran is not being reasonable, and it has no allies.
We have more degree of comfort that Iran has limited capacity.
We need to plan for the worst and hope for the best.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Snapping a 3-day slide on the S&P 500 in yesterday's session and adding to the gains this morning. Live from New York City, good morning. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures on the S&P up by 0.8%, a 1% move on the NASDAQ 100. Crude, what a move. From the 80s to the 60s in just a couple of sessions, not even. Again this morning, lower by 2-3%. Brent, 69.43. WTI, 66.54. A fragile truce in the Middle East between Iran and Israel, and the president this morning on his way to a NATO summit in Europe, piling on the pressure, not just on Iran, but Israel too.
Yeah, this is diplomacy via Truth Social. President Trump coming out and saying, Israel, do not drop those bombs. If you do it as a major violation, bring your pilots home now. Donald J. Trump, President of the United States, after saying that he is not happy with Iran, he is not happy with Israel. This ceasefire needs to stick.
Retaliation yesterday from Iran was targeted, orchestrated, well telegraphed, and this market likes that. Market might also like the fact the president's putting the pressure on Israel now to pull back as well. This U.S., under this president, is not interested in an ongoing war in the Middle East.
They don't want to really get into the question of nation building, which this president ran against, or potentially getting into a protracted type of conflict where any kind of troops go on the ground in the Middle East. We have done that before. It is not popular. Even the strikes the U.S. did execute were not necessarily that popular more widely among the U.S. population. The question now is how contained is this, and what does that look like given the years and weeks to come when you do have enriched uranium out there, when you still do have some steep animosity between Israel and Iran.
This market's moving on. It's already moved on yesterday. It's moving on and maybe focusing on what happens a little bit later this morning, 10 a.m. Eastern Time. The chairman of the Federal Reserve, day one of two-day testimony on Capitol Hill, and the pressure also rising on him as well, not just from the president. Arguably, it's coming from within the Fed now. Two governors, Waller, Bowman, calling for interest rate cuts potentially as soon as July.
Chris Waller is actually more consistent and has been more consistent about saying that any kind of tariff-related inflation would be short-lived if you want to use the Fed pronunciation of the expression, and has been willing to look through it. Michelle Bowman is more interesting because last year she opposed the rate cuts and has been a more hawkish member. So for her to come out and say if she sees consistent deceleration in inflation, she would support a rate cut as soon as next month, that is catching a lot of people's attention as maybe a second audition for the next Fed chair position.
We'll get into the economics and the politics of that a little bit later this morning. Equity futures so far positive by 0.8%. Coming up this hour, we'll catch up with Barbara Duran of BDA Capital Partners as markets fade geopolitical risk. Jeff Sherman of Double Line on a potential reckoning for U.S. Treasuries, and retired Lieutenant General David Deptula on a fragile truce. We begin this hour with our top story. Markets fading geopolitical risk as the Middle East avoids the worst-case scenario. Our team coverage starts right now with Emery joining us from the NATO summit alongside Jemana out of Dubai. AMH, first of all to you, a frustrated president making his way over to Europe.
Absolutely. He's frustrated given the fact that he worked hard in his mind with his team to try to make sure that this conflict was not protracted and it was quick. And at the same time, he seems very annoyed what we're seeing in terms of the missiles continuing from both Iran and Israel. He's saying they both need to stop. The president calling on also Israel specifically after he spoke to reporters at the White House. As he's boarding Air Force One, he's heading to The Hague. He then put out a Truth Social post saying, do not drop those bombs. If you do, it's a major violation. Bring your pilots home now. So he seems to be both frustrated with Israel and Iran, saying that they violated the ceasefire. We should note he does go on to say he does think it will last. What we have seen in the past with ceasefires in the region is that the first 24, 48 hours can be fragile. It can be testy. Both sides could be testing the waters. But the president wants to make sure that this is the start of the end of this mini conflict that we've seen play out in the region.
Jemana, that's a change. Not just putting the pressure on Iran, but this morning the president putting the pressure on Israel.
Yeah, and to Anne-Marie's point, I think there was a lot of ambiguity about exactly what time the ceasefire was supposedly implemented. Because when we came in the morning, we saw that Truth Social post that President Trump had put up overnight, but it wasn't until about 8-9 hours later that we got an official response from Israel, the Israeli PM's office putting out a statement saying that they have agreed to that bilateral ceasefire because Israel have, quote, achieved their war objectives. So we're looking to get more commentary from the Israeli Prime Minister later today. And then it wasn't until about an hour or 2 hours after that that we then got an official response from Iran with the National Security Council putting out a statement. So in all of those hours, there was still uncertainty about whether the ceasefire had gone into effect. Both sides exchanging missiles right until the very last minute. Some questions still about whether Iran violated the terms of the ceasefire by launching one last salvo late in the morning. So these are some of the delicate questions that we were answering this morning. But I think the bigger picture is there is a truce and an off-ramp has been provided in the last 24 hours. The region is breathing a sigh of relief because we have stepped back from the brink. We have avoided the worst-case situation, the worst-case scenario of having broader Gulf countries involved in this conflict, broader military intervention from the U.S.'s part. And as of now, things are looking a lot calmer. Whether the truce or the ceasefire holds is up for debate at this point, but certainly the president, i.e. the man who was the architect behind this deal, wants to see it last, and you are getting a lot of supportive comments from these Gulf countries this morning, the likes of Qatar, of course, key participants, given everything that's gone down in the 24 hours, saying that they are supportive of the ceasefire that was put in place by by President Trump, by the U.S. They helped mediate on that front, and the whole region would like to see the tone de-escalate from here onwards. And then the next question is, does this actually bring Iran back to the negotiating table? And if so, under what terms? Now that they are weakened, will they agree to some of the harsher or more stringent concessions that the U.S. administration may be asking for? That's a question for the future. But as for now, the truce appears to be in place.
And the market speaks to that. The market moved. Brent crude, WTI down by close to 3%. Jemana, Anne-Marie, thank you. Brent and WTI lower, equities higher. This market's doing okay. Here's the view on Wall Street this morning. Barbara Duran of BDA Capital Partners writing, the Israel-Iran conflict will likely continue to be viewed as a regional conflict and not impact the stock market beyond short-term volatility. Barbara joins us now for more. Good morning, Barbara.
Hey, good morning.
That short-term volatility, incredibly short-term over the last couple of days. This market looks bulletproof. That seems to be the assessment of a lot of people. Does that make you comfortable? Does that make you uncomfortable?
It makes me comfortable. I think, we're at the top end of a trading range. The market has had a big V-shaped rebound after the V-shaped, collapse in earlier this year. But I think at 22.5 times earnings, you do have a cap on there. However, what I think is happening now, because you've also had some bullish, as you mentioned earlier, 2 Fed governors, come out and say, hey, I think we should cut in July. And the odds have gone up, since Friday from, I think, 15% to 23%. I don't think it happens in July. But when the Fed did meet, and Chairman Powell's comments last week, he talked about 2 more cuts possible this year based on current economic data. They're not cutting now, as we know, because of tariff uncertainty, what that's going to do. But I think what we're going to see in the short run is the market can move higher, but I think you're going to see a lot of laggards catch up. Small cap is catching a bid, and the entire market should move higher. It's a de-risking. As you mentioned, you've seen oil at 2-week lows. And with the prospect of interest rates coming at some point, interest rate cuts, I think the market is primed to move higher.
Is there a contradiction between the idea of resilience of U.S. markets and economy at the same time that we're talking about rate cuts?
A little bit. I think there always is, because we don't know the timing of the rate cuts, but as we know, the market is a discounting mechanism, so they're looking through that. But again, the big uncertainty is how much is, the tariffs, when they flow through, have had a lot of pull forward. That will be worked off soon. How much will it impact inflation, and will it be one time, and how much will it cut GDP growth?
That's been the question all year. A lot of people thought we didn't have enough data to really show that because there was lagging effects that really wouldn't show up in the data until probably September would be the earliest. Now you have 2 Fed members who are talking about how they might get enough information to cut by July, by next month, at the same time that we're expecting core PCE on Friday. How does that make you understand kind of what's actionable, what's enough data to really make a bet on?
Well, it's feeling like we have enough data because I think the market's impatient. We're waiting to see, and we're waiting, and every number comes in, it's okay. We're seeing a little bit of a slowdown in the margin, whether it's retail sales, et cetera. And we're going to have an important read later today at 10 o'clock, the consumer, the Conference Board Consumer Confidence. And of course, Friday is the final read on the University of Michigan. And that's been a concern of the Fed. Will inflation expectations come down? Will they get embedded? So we've got more data to come, but it's looking pretty bullish right now. But again, I think you still have to be careful. We don't have enough data yet, and it should start to show up in the next month or 2.
Some data appears to be more relevant than others. How relevant are consumer surveys at the moment to this market?
Well, I think, when you saw them at their worst, it really is an emotional reaction. It was headline after headline on the tariffs. And so I think that they are relevant, but not, because they aren't necessarily good predictors, but they do give you a feel for the consumer, and you've got to watch it. So I think the numbers, I expect them to be better, at 10 o'clock.
Do you think that Friday's core PCE data is going to be all the more important because of what Michelle Bowman, the Fed governor, said yesterday, where she said, if this trend continues, she sees there being potentially enough confidence in her, at least, to move next month?
Well, I think it is important. I think it could move the consensus. It seems like with Michelle saying that, you're seeing more of a consensus building within the Fed governors. But I think it's going to be one more data point. It will reinforce inflation looks good, and it's a good starting point, for any inflationary impact. So I think that it may not mean a July cut, but it could move it up to September. And I think it does increase the probabilities, and that does help the market. They'll be more bullish.
If they dissent, it's why they dissent that I think is important. If they dissent because they think inflation's come in and it gives them the space to cut, that's one thing. If they dissent because they point to weakness in the economy, that's quite another. And that's a difficult news conference for the chairman of the Federal Reserve.
And it doesn't speak to the bullish narrative that we're hearing in terms of this supporting equity valuations. And if you have to imagine, if we don't see the inflation show up in PCE or some of the CPI reports, then costs are going up
for some companies. Are they just absorbing those? Does that lead to margin compression in a way that might not speak so optimistically, so auspiciously for earnings coming out in just a couple weeks?
They're not convinced either way, which is why they seem to keep saying, I'll see you in September. Other people on the FOMC have other ideas. Barbara, it's good to see you, as always. Thanks for dropping by. Thank you. Barbara Duran there of BDA Capital Partners. If you are just joining us, welcome to the program. The rally continues, up another 0.7% on the S&P 500, with an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Anand. Hey, Yahara.
Hi, John. President Trump spoke before leaving for the NATO summit. When asked about the ceasefire between Israel and Iran, Trump said, quote, I think both sides violated it. Then, moments later on social media, Trump called on Israel to stop dropping bombs on Iran. Trump announced the supposed end to the 12-day war overnight, writing, the ceasefire is now in effect. Please do not violate it. But within hours, Israel accused Tehran of breaching it. Meanwhile, federal law enforcement officials are on high alert for domestic retaliation in response to the U.S. strike on Iran on Saturday. The Wall Street Journal reporting FBI officials were told to shift resources toward Iran and domestic threats after manpower in recent months had been focused on immigration enforcement. And Fed Chair Jay Powell headed for 2 days of testimony on Capitol Hill. He's expected to discuss the economy, the impact of the Middle East conflict on inflation, and the Fed's independence amid ongoing criticism from President Trump. Ahead of the testimony, Trump posted on Truth Social that U.S. interest rates should be at least 2 or 3 points lower. That's your Bloomberg Brief. John?
Yahara, thank you. Lisa said it earlier, the man never sleeps.
I don't understand this. I mean, he's almost 80, and he is up at 1:32, and then he's up again at 6 a.m. I mean, is this human?
He's got some serious energy, let's put it that way. Up next on the program, counting down to July 4th.
Leader Thune has made very clear he wants to stick with July 4th. I am one that would rather focus on good policy rather than trying to meet an arbitrary timeline.
How flexible is that self-imposed timeline? We'll have that conversation with Henrietta Trays of Veda Partners. She joins us next, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
We're adding some more weight to this rally. Equity futures up again this morning. On the S&P 500, positive by 0.7%. On the Nasdaq 100, up by 0.9%, led by a de-escalation in the Middle East and this move in crude from the 80s to the 60s. The turnaround in crude is just stunning over the past few days. We're down another 3%. 69.25 on Brent. WTI 66.37 as the attention comes back to the domestic issues. Under surveillance this morning, counting down to July 4th.
Leader Thune has made very clear he wants to stick with July 4th. I am one that would rather focus on good policy rather than trying to meet an arbitrary timeline. And so if we've got to go past the 4th of July to get a bill that is good for not just Republicans, but for Americans, let's try to get it right.
Here's the latest this morning. The fate of President Donald Trump's tax and policy bill remaining uncertain as Senate Republicans plan to begin voting this week. Joining us now is Bloomberg's Tyler Kendall. Good morning, Tyler. It's July 4th and that deadline set to slide.
Yeah, hey, John, good morning. Well, the White House doesn't want it to slide, but they're going to have to do some last-minute wrangling if they're going to meet it, because at the moment, the bill doesn't have enough support to pass the Senate as it stands, and it needs to get through that chamber by at least this weekend in order to tee up a vote on the House floor and onto President Trump's desk by next Friday. And the thing is, a lot of the remaining issues are the ones that we've been discussing at this point for months, including that there's this group of Republicans billing themselves as fiscal hawks that want to see some deeper spending cuts amid concerns from other Republicans about the changes to Medicaid. And Medicaid at the moment really is the most politically fraught issue in this bill for Republicans, considering that the Senate version actually goes further than what the House did in terms of tightening those work requirements and also lowering the Medicaid provider tax. We're going to hear a lot about this because that essentially means that there could be less federal matching funds for the program. Another big sticking point here, of course, is that we've yet to see a compromise emerge when it comes to lifting the SALT cap. Our reporting does indicate there could be a proposal on the table that would keep that $40,000 cap in place, but with a lower income threshold. At this point, though, we haven't really seen any in the so-called SALT caucus get on board with that plan. We should expect changes, though, because amid all of these negotiations going on in the backdrop here is something known as the bird bath, which essentially means that these provisions are being checked by the Senate parliamentarian to make sure that they pass the reconciliation rules. And John, we're already seeing some of the provisions stripped out, including those that had been billed as cost-saving measures. That included one that would have hollowed out funding for the CFPB and another that would have shifted some of the cost sharing onto states when it comes to the Supplemental Nutrition Assistance Program.
An important couple of weeks coming up. Tyler Kendall with the latest down in Washington. Tyler, thank you. To extend the conversation, Henrietta Trace of Vader Partners joins us now for more. Henrietta, good morning.
Great to be here.
We've talked a lot about this calendar already this morning. July 4th, then July 9th for trade. Let's start with taxes and July 4th. Do you think that slides?
I've got 40% odds that they can meet the July 4th deadline. That's up from 20% where I was last week. Frankly, when there's unrest, whether it's deploying the National Guard to California or going to war in Iran, that can move things along. There is Senate magic that absolutely does work, but they have about $1 trillion that they can throw at the various problems. As Tyler was mentioning, the Medicaid provisions are atrocious. I think something like 35% of Alaska loses their Medicaid coverage. 600,000 people in North Carolina. So members are very concerned about that. We got to deal with the SALT caucus. They do have $1 trillion to throw money at, but as you mentioned with the bird bath, there are $200 billion worth of savings that various committees have identified that are now gone. They're ineligible. So there's a lot that they need to work through.
There's a lot to unpack there.
Right.
You said something in there before we get into just how much this does expand the deficit or what to be looking at as it goes through the bird bath, which I love, by the way. You said that when there are wars or deployments of National Guard or Marines, that does its magic in Senate. Do you think that actually has expedited some of the discussions for the one big beautiful bill in Washington, D.C., not necessarily caused fissures among Republican members who have already been really in disagreement?
It creates a sense of urgency. And so specifically to those two pieces, they really match up because there's $175 billion for additional immigration aid. There's $175 billion for additional military preparedness. So focus on those pieces. Don't waste a crisis, as Lindsey Graham always likes to say. Use it, deploy it, get it out there, push this bill through. Because the tax provisions are extremely unpopular for the most part. 60% of Americans know that this bill disproportionately impacts the wealthy. And to the extent that they know anything about this bill, that's their view. So if you can focus on the immigration spend and the military spend, which is popular, that can help grease the wheels.
If you do get some sort of bill that's been stripped down by the bird bath in terms of how much cost saving actually happens, how stimulative could this bill potentially be?
It depends on what income bracket you're in. So the latest analysis that I saw from JCT on their distribution tables, the average low-income family loses $1,200 a year. the average wealthy family will receive 12,000, 16,000, something preposterous in terms of disproportionate benefits. And that's because you have these preferences like salt, which are extraordinarily expensive, and then you are taking away a lot of the federal subsidies on SNAP, on Medicaid, and those components. So there's a huge wealth variance in terms of who benefits from this bill.
Forgive me for thinking about 2026, but can we touch on the midterms?
Sure.
How do you think this bill will influence the midterms?
Well, you have to think about who's up. So I mentioned Alaska. Dan Sullivan is up in Alaska. That is an at-risk seat if you're going to cut off much of that state from Medicaid. The same is true for Tom Tillis in North Carolina, facing the most expensive race in the nation. And the most expensive race in state history is the expectation. So there's a reason he's going to the mat for the 600,000 folks that will lose Medicaid in North Carolina. It's all eyes on the midterms. I'm more concerned for the Republicans in the House than in the Senate. But this is definitely a conversation for them.
Well, it raises the question, just to build on what John is asking about, this idea, does it make them more inclined or less inclined to vote for the bill? Does it make it more inclined or less inclined to restrict spending versus preserve some of the benefits that people really have come to rely on?
The interesting thing is right now, we're not in the midterm like a general, the way we think about it, where it's D versus R. Right now, we're in the primary season. So now, are you supporting President Trump's agenda or are you not? And that is the main topic of conversation and will be until like January. And then we'll get into the general. We have to pass this bill by December 31st, otherwise tax rates rise for everybody. So it's the problem of the sequencing. We're in primary season right now, which means Republicans have to vote for this bill or they will be the anti-Trump candidate and they'll lose their primary.
The Democrats, to some extent, face the same issue, particularly in this city. What do they want to be? Right. Who do they want to be seen as going into next year? Socialist or something more in the middle?
I wish they could figure it out. I mean, they are obviously split and their conference is yelling at them to get their primary in just the same way. We want you to be on the side of the extreme progressives, but the general will not accept that and they won't win in the general elections, just like we've seen.
I'm glad you brought that up. Today is voting day in New York City for the mayoral race. I know you're trying to allude to it gently, but there is this big question of how President Trump and his agenda has affected local elections, which have arguably been sometimes more important in terms of setting policy. We've heard some people present themselves as the anti-Trump with ICE policies, and other people say, look, we got to work with him, but at the same time, we're not completely subjugated to them. I mean, it's a really interesting split. How much is that really causing a fissure across the country?
I mean, honestly, I don't think Democrats can keep up with the news flow. When you see, I can't forget that the day that they were sending the National Guard to California, Leader Schumer was holding a press conference on abortion. What are we talking about here? Move it along. We need to get to the right place at the right time, adapt. And I don't think the Democratic Party has done a particularly good job at that.
And they keep picking the wrong side more often than not. Henrietta,
right.
It's good to see you, as always. Henrietta Trace there, of Vader Partners. The outcome of this election, I know it's primary season first here in New York City, but the outcome of this could be very interesting for the national stage.
And typically the primary in New York City is the election, because typically it is a Democratic city, and so whoever wins the Democratic election is the one who goes on to become mayor. It raises a question, and it speaks to your point about the Democrats trying to coalesce around a message. What is the identity of the Democratic Party? Is it the Andrew Cuomo, the sort of more backed by mainstream, middle of the road, or is it someone who is presenting himself as a democratic socialist with much more expansionary ideas? And that's something that the city has to deal with.
Presenting himself as one, does that imply he's something else?
Mamdani has come out and he has been endorsed by AOC. There is the more socialist wing of the Democratic Party, the more left wing, and he definitely ascribes to that. He has been gaining. There also is a real test of the ranking system. I could go on and on.
We'd love to hear it.
This has been a completely very, very avid debate at home, but there's this question of ranked voting and whether that actually ends up helping one of the candidates more than doing what it was supposed to do. I don't know. We're going to have to analyze this later.
We'll find some space for it in the next 24 hours. No doubt about it. Up next on the program, Jeff Sherman of Double Line on a potential reckoning for U.S. Treasuries. We'll talk about the bond market and Chairman Powell testimony a little bit later this morning. Live from New York City, you're watching Bloomberg TV.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Equity futures on the S&P positive here by 0.8%. A lift to this equity market once again on both the S&P 500 and the Nasdaq, up by 1 full percentage point. In the commodity market, many of you, I know at the moment it's the first thing you check. Once again, we're lower, this time by more than 3%. 69 on Brent. WTI 66. Just think about the last few months or so. At the lows in early May, we dropped to the 50s. Just on Sunday when this market opened, we pumped through the 80s on Brent, and now we're somewhere in between. 69 on Brent, down 3%. 2 hours away from the opening bell, let's get you some single names, some morning movers with Danny Berger. Hey, Danny.
Hey, John. Some of these individual stocks also moving on hopes for a ceasefire between Iran and Israel. Some of these defense companies being one of them. RTX down 1.4%, Lockheed Martin down 1.2%. This is a sector that's gained some 6% so far in the month, so a little bit of that reversing if things are indeed calming down. And as you pointed out, oil prices falling, as are energy company stocks. Again, this is another sector, the best performing sector so far this month in June, up 6.5%. Not huge collapses in prices, but notably down regardless. Oxy down about 2%, Exxon down about 1%. Finally, wrapping things up with some individual company news. Uber shares are higher in the pre-market by about 3 1/3%. Uber launching Waymo on their platform in Austin as of this morning. This is not the second city that you can order a Waymo on your Uber app, the first one being Austin. Uber really hoping to become the platform, trying to convince Wall Street that it is the platform for driverless cars because it already has a lot of customers built in and that name recognition. So getting closer to that. Those shares higher in the pre-market, John.
It's a big race coming together, that's for sure. Danny, thank you. More from Danny in the next hour. On our radar this morning, a fragile truce in the Middle East. The latest from the president posting on social media just moments ago. Israel is not going to attack Iran. All planes will turn around and head home while doing a friendly plane wave to Iran. Nobody will be hurt. The ceasefire is in effect.
And he now signs his Truth Social posts with 2 different types of sign-outs. One, thank you for attention to this matter, and then Donald J. Trump, President of the United States, when he is very serious at a time when he wants to see the ceasefire remain in effect. This becomes really a key diplomatic point for him ahead of the NATO meetings, which we'll get into in just a second. Whether this has any ramifications for markets, they've already moved on because they don't see the prospect of some sort of disruption in oil supplies, and that seems to be the a sort of very narrow way that the markets are looking at this.
He wants NATO members to spend more, and we're about to do the same thing. Senate Republicans are coming around to a $40,000 SALT deduction cap, but want to lower the income threshold. SALT is one of the key holdups in passing the big, beautiful bill, and whether we can do it on time, and I stress on time, is a self-imposed on time of July 4th.
Yeah, there has been sort of a no-go kind of provision from the likes of Mike Lawler of New York, who have said it's got to stay $40,000 in terms of the cap on the SALT deduction. If they kind of backdoor this and say people with incomes below a certain point can have that $40,000 cap, other people not so much, let's see if that flies. People would argue that this really only applies to people who are in some of the higher tax brackets. So there are a lot of questions around this. It does just throw another wrinkle into this very aggressive timeline.
First few weeks of July are going to be very interesting. July 4th, the imposed deadline for the tax bill. July 9th for the trade story. Danny mentioned this story. She touched on it. Regulators looking into safety violations from Tesla's robotaxi launch. Telling us here at Bloomberg, they're aware of videos posted to social media showing the cars entering wrong lanes and crossing double yellow lines.
So this goes to the heart of the question behind the rally that we saw in Tesla initially on the heels of President Trump's election, which was, would this expedite some of the regulatory hurdles for robotaxis to really take off? A lot of people saying this is the future. This really has been the sort of big argument for the bullish bet on Tesla. Does this stymie it? Right now, it seems like not so much because people saw cars going. And I have to say, the feature where the lights flash when the robotaxis pull up to let you know that that's the actual one to get into, I kind of think that's cool. I always kind of struggle when you get an Uber or something and you're not sure whose car it is, if they like flashed.
Oh, that would help.
That would help.
Do you not use the PIN code for when you get in?
Well, some of them use PIN codes, some of them don't use PIN codes.
Check the license plate.
You have to check the license plate, but it would be really nice if, like, especially in like an airport. I need to get off my soapbox this morning.
No, I do the same thing. I'm on the soapbox with you. Do exactly the same thing. Check the license plate.
Yeah. You check the license plate. You walk in. You say their name. You try to act very polite.
Jonathan, I pick you up all the time.
So that
just this is the habit I go through.
Why did you give me a 4.3?
Do you do that?
No. 4? I don't get that.
Do you give people low ratings?
No, I don't do that. I actually don't. Partly because of even though, yes, I know, I wouldn't do that.
What's your rating now?
It's not as
good. No, all right. We'll do that another time. Let's turn to fiscal policy, a favourite of Lisa. Fiscal risk back in the spotlight for the bond market. Jeff Sherman of Double Line saying this: we are neutral on intermediate treasuries. The market is focusing on the fiscal side, which could drive rates higher over the short term, given the one big, beautiful bill. Jeff's here in New York. Jeff, good morning. Good to see you.
Morning.
Lisa and your colleague made the headlines in the last week or so. A reckoning is coming for the US debt market. So just refresh our minds, our memories. What is the stance of you and the team at the moment on the Treasury market?
Well, the Treasury market has a lot of risk in it today, and we're seeing this from all the fiscal uncertainties that we see out there. We're debating whether the policies will indeed be stimulative. But at the end of the day, we all know that it's really bad for the deficit. And, no matter how one looks at it, slapping on an additional $2 trillion over, what is the time frame? Is it over a couple of years? Is it a decade? We all have to argue what the benefits are as well. So what you've seen, even like when I look at when the markets opened, with all the conflict we had over the weekend, actually treasuries were off once again. Right, the yields were up. They were selling in treasuries to begin kind of that trading session, even though oil was spiking at that time. And so, is it the inflationary impulse, or is it the lack of flight to quality once again? And so, this has been on investors' minds really for the last couple of years. Is that there is a day of reckoning one day when it comes to the treasury market. Is it June of 2025? It's not likely. Luckily, we only got one more week left, right? It's probably not July either, but this is just not tenable over the long run. And so the challenge is you have, the president, with Jay Powell's testimony today saying Jay needs to lower 2 or 3 points on rates practically overnight to really help them continue to spend. But maybe the answer really is, and this is where we shake on it, maybe they don't need to spend, right? Maybe they need some pain from the bond market to say it will be punitive that if we continue to follow these policies. So tax cuts sound great, SALT sounds great, all these things sound great to wealthy investors. But at the end of the day, we are mortgaging the future.
Just to build on that point of what Jerome Powell is going to be facing off with in Congress, President Trump has gone after him again and again, talking about lowering interest rates to make U.S.'s borrowing costs go down. How much does that affect your calculus as well, especially as you have 2 Fed governors saying, yeah, as soon as July, we could see rate cuts?
Yeah, we saw Bowman come out yesterday with those comments as well. But look, it's not this democracy at the Fed. Typically, what you have is the chairpersons in charge trying to coalesce, gather, kind of sentiment. It's not like in the UK where there's lots of dissension and you get 5-4 votes. I mean, there tends to be this unanimity across, when the policies come through. And so I'll give Jay kudos that he went from being Bonehead Jay, just too late now is the nickname that he's getting today. Is that
graduated?
Yeah, I don't know. Too late sounds better than Bonehead, I think. I think Jay Powell's a pretty smart man. But look, at the end of the day, he's told you his positioning. I don't think that changes in front of Congress right now. And the fact that, what was it? I don't even remember the quote this morning that President Trump said, but it was like that they need to, go after and attack Jay Powell. It's not going to change the stance. It's not going to change monetary policy, as they're still worried about the inflationary effects of the tariffs. And so, this multipolarity world we have and all the variables going on, it's just not as simple as lowering rates, because at the end of the day, you lower rates, you condone the behavior of our elected officials, you condone the deficits, and effectively it could lead to an inflationary impulse on the other side.
Yeah, there are these sort of dueling risks. We've been talking about this all morning, inflation versus growth fears.
Yep.
And if the Fed were to cut rates, that could do some damage to inflation expectations to the upside. This could necessarily prolong, though, also the growth cycle. Given the fact that your colleague Jeffrey Gundlach came out and said that credit really looks incredibly risky in terms of the valuations and what you're getting compensated for, if the Fed were to ease policy, would that improve the credit outlook, or would it make it more vulnerable?
Well, no, I mean, it would improve it. At the end of the day, what you got to think about is there's twofold. One is, as an investor, we have to think about that incremental yield or the spread we get for taking on the credit risk. That's what he's referring to when he talks about valuation being tight, right? We look at high yield bonds. They're massively below average on their spread. I don't feel like we're in a below average risk world today, right? Which those two things usually coincide. But at the end of it, it's debt service as well. And so this has been the argument for the high yield bond market and the like, is that if rates come down, then essentially refinancing these coupons becomes more accretive and more helpful over time. So once again, you kind of have these dueling things, right? You're not getting compensated meaningfully for taking this incremental risk. But then at the end of the day, when you look at some of these companies, though, they're good quality names, right? And so even they may exist in the high yield bond market.
How much does this really complicate the discussion about U.S. exceptionalism and the loss and sort of the flow of funds elsewhere? I know that Double Line has been looking elsewhere, talking about how the U.S. is spending too much, not cutting financing, and also some of the trade policies. But you see also Europe spending. Yeah. And today we see with the NATO meetings this commitment to 5% expenditure of GDP on military. Doesn't it sound like the same thing over there?
At least President Sun would say it's about time, right? That instead of us footing all the bills for NATO. Now, again, you're going to get different people on different sides of the aisle on that statement. But at the end of it, what you're talking about is this self-sustaining, is there exceptionalism? And one of the big benefits the U.S. has had over the last decade or so is that we have had the capital flight into our country. People talk about this when you talk about emerging markets. The first thing you talk about is what's the FDI, the foreign direct investment. Well, the U.S. is a massive benefactor from foreign direct investment, right? Our stock market, our bond market, our trading partners, which helps essentially finance our deficits as well. So the big challenge with all of it is that if you're going to disrupt that, and I'll call it the orthodoxy, and that seems to me what Trump is doing, is that you're going to have downstream ramifications. Now, no one knows what it'll look like if investors pull capital. But I was concerned when we first started the tit-for-tat tariff that given the fact that we run such massive trade deficits with certain countries, we couldn't do a tit-for-tat. There's no way we could up our tariffs enough to really be punitive enough. So one thing that could happen the other way is that they could effectively say, we prohibit investing in the U.S., or incremental dollars should not. And you could see that from, let's say, sovereign wealth funds. You could see that from different governments around the world. So that's not off the table today. And look, we have 2 weeks till the self-imposed deadline on the tariffs, right? That we're going to have I don't know if they're called big, beautiful tariff deals, but we have that for the 2 weeks as a self-imposed deadline there. And thus far, we have one kind of puny, trade deal thus far is with the UK, and not much really occurred there. So baseline tariffs seem to be here to stay. That means costs of things will go up. It's just a question of is how much. Someone has to eat that cost along the supply chain, and effectively that will end up in consumers' hands at some point.
You've touched on some really important forces. I just want to go back to the beginning of those comments. Well, the president's message is to the rest of the world, we don't want your exports, but we want your capital.
Right.
What we've been asking is whether you can have one without the other. Do you think we can?
It's difficult, and that's what I'm saying. It's a disruption to orthodoxy, right? So historically, you haven't, and typically when you think through what happens with the trade deficit, is that well, if you're the exporting country, well, all of a sudden you're generating these dollars. Let's say in the case of for someone like Japan, who's ran a structural deficit for 4 decades, right? Well, they generate dollars. What do they do with those dollars? Well, they recycle them in the treasury market. It brings stability to their currency. It helps them kind of manage the flow of that import-export business. So at the end of of it, there is some disruption on the other side. And to me, that's the biggest wild card. But still, we don't know what the end game is on tariffs. We don't know what it ultimately looks like. They keep lauding the art of the deal, and this is all about negotiation. But what's the end game? And I think that's the thing that people have trouble seeing today. So it brings it back to, what do? You don't trade it. You don't trade it. You don't try to get caught up in it. You know that there's more tariffs coming. The thing we're still concerned about is more sectoral tariffs, right? We've seen this with the steel and the aluminum. They're going to go after the pharmaceutical industry. They've been very vocal about that. So there's things that you can kind of try to avoid going forward. But at the end of it, centered at trade is our economy, right? And so at the end of it, it depends on what we look like in growth. And the growth variables are very noisy right now, right? Because of the front loading of all the import data in the first quarter, we gave it back in the second quarter. That's why you see this big jump in estimates for second quarter GDP. But is it really growth? It's really just the import-export mechanism. But thus far, and this comes back to your comments about Jay Powell, is that he's focused on the labor market right now, because right now he sees that the tariffs are going to have uncertainty. It's going to take 6 to 9 months to know what that looks like. So right now he continues to focus on the labor market, which has been surprisingly strong throughout this whole cycle. Thus, that puts the Fed on hold. And I think that Jay, his baseline is no cuts this year, no matter what the rhetoric comes out of Waller or Bowman this week. And remember, we're going to get a new Fed chairperson next year. That's the big wild card. It's not what happens in this next 9 months. Yep. It's effectively who that person is, how much control the president has over that person say-so. And that, to me, is the biggest wild card for the bond market.
Hey, Jeff, it's good to catch up. Appreciate it. Could talk to you all morning. Jeff Sherman there of Double Line.
Thank you.
In the equity market at the moment, we're still doing nicely, up by 0.5 to 0.7% on the S&P through much of this morning. With an update on stories elsewhere this morning, with your Bloomberg brief, let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. In a win for the Trump administration, the Supreme Court lifted a judge's order that required the government to give people 10 days notice before they are deported to a third country. The case stems from a lawsuit back in March by immigrants who feared being removed to countries that are not their own. Meanwhile, 170 million Americans are facing a heat wave this week. From the plains to the East Coast, temperatures will be between 90 to even above 100 degrees. The blistering heat took a toll on power grids in New Jersey and in New York, with thousands stuck without power. And Game 7 of the NBA Finals was a ratings success, drawing the largest single-game audience in 6 years. The winner-take-all game saw an average of 16.4 million viewers across streaming and cable platforms, according to Disney. But despite the big numbers for Game 7, the rest of the series averaged the least amount of viewers since 2021. That's your Bloomberg brief. John?
Yahara, thank you. It's just not a great product, is it? You knew that was coming.
Oh, my God. That was basically a softball. Like, John, what do you think of this product?
Just not a great
basketball
product at all. All right. Up next, the president's patience wearing thin.
These guys got to calm down. Ridiculous. I'm not happy with them. I'm not happy with Iran either. We basically have two countries that have been fighting so long and so hard that they don't know what they're doing.
The president dropping a different kind of bomb this morning. Up next on the program, the retired Lieutenant General David Deptula joins us next, live from New York City. Good morning.
America has been silent in telling those global stories. And that's where we have a mind full of stories that we can mine and mine and mine for years to come. And I think investors realize that, and they understand that there's real potential. And as I said earlier, independent films are making a huge comeback. So you're looking at your $5 million movies, your $6 million movies, and this film fund that we're setting up is looking at films, we're looking at financing films between a budget of $2 million to $8 million. So we truly believe that we will get a return on investment, and it's about managing expectations. We're not saying to investors we're going to go out there and we're going to sort of start making films that are going to bring you $1 billion return on investment. That's not to say there can't be outliers. The world has seen this happen time and time again.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
The news flow just incredible, non-stop over the past few weeks. It continues. Equity futures this morning still positive in the face of it, up by 0.8% on the S&P, on the Nasdaq, up by 1 full percentage point. Under surveillance this morning, the president's patience wearing thin.
I'm not happy that Israel's going out now. These guys got to calm down. It's ridiculous. I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning. We basically have two countries that have been fighting so long and so hard that they don't know what they're doing.
Here's the latest this morning. President Donald Trump lashing out at Israel and Iran. The president accusing both sides of violating a ceasefire agreement to end nearly 2 weeks of fighting between the two nations. Joining us now is the retired Lieutenant General David Deptula. Retired Lieutenant General David Deptula joins us right now. Lieutenant General, can I just ask you this? A lot's happened over the last few days. In your opinion, what's changed?
Well, I think, John, what's changed is the fact that Israel has achieved air superiority, if not air supremacy, over Iran. And now Iran is understanding that it is subject to Israeli lethal effects whenever and wherever they want to. So that is what has led Iran to initially agree to consider negotiations, but as you saw in the violations of the initial elements of the ceasefire, Iran continued to fire ballistic missiles against Israel, resulting in death. So it's probably going to take a bit more application of force on the part of Israel, and quite frankly, the continued application of force until Iran finally gets the message that if they don't come to the negotiating table, they're going to continue to see their regime and their capabilities weakened and ultimately destroyed.
There are two different questions here. There are a lot of different questions. One is the market-related question, which is, will oil supplies be disrupted? That seems to be not so much, and that's what we're seeing priced into the markets. There's a larger question of, will Iran's ambitions to be a nuclear state really be hampered for a longer-term kind of time frame? What's your take on that, given the 400 kilograms of enriched uranium that currently is missing in action?
Yeah, Lisa, actually, that's a great question. At a fundamental level, nuclear capability consists of three essential components. And Israel and the United States has targeted each of them. The first one's human expertise. and that's the knowledge required to design and construct nuclear weapons resides in a small cadre of specialized scientists and engineers, and Israel's made a concerted effort to neutralize that capability. Then, as you mentioned, there's the fissile material. Most importantly, uranium enriched to weapons grade levels. Right now, there are 400 to 500 kilograms of enriched uranium that still exists in Iran, but strikes on the enrichment sites at Fordo and Natanz have severely disrupted the ability to process it further. And then number three, there's the weaponization and assembly infrastructure. So even with the knowledge and material, Iran needs the facilities to assemble a functioning nuclear weapon. So 2 out of these 3 elements have been severely impacted. So what remains is a fragmented element, if you will, but it's hardly the foundation for a viable nuclear weapons program. So I think you've seen Israel and the United States cripple Iran's operational nuclear capability, but obviously there's the potential to reconstitute.
There's a question about deterrence when it comes to Iranian nuclear ambition. It's also deterrence on a global scale heading into NATO. What's your sense of whether this action by the United States acts as a deterrent or not to other states that might be contemplating nuclear status or incursions into other areas around the world?
Well, I think it's an excellent point, and I think part of the benefit of what President Trump did is not only, and what I'm talking about is with going forward with the B-2 attacks against these processing facilities. First, while that set back Iran's potential to develop a nuclear weapon, it was fundamental to restoring U.S. credibility on the world stage. You know, we've seen, and we spent a lot of time talking about this, but the disastrous withdrawal from Afghanistan and then seeing the U.S. being deterred by Putin, you know, what this action did was, hey, look, the United States now acts behind its words. It just doesn't talk and take no action. So I think that will have an impact with respect to not just our potential adversaries, but our allies alike.
Lieutenant General, always appreciate your time, sir. Thank you for making a few minutes for us this morning. Thank you. The retired Lieutenant General there, David Deptula. The consequences extend beyond the battlefield in Iran, extend to potential and actual battlefields right now and maybe in the future.
It goes to the question of what the U.S. does with respect to Russia, Ukraine, if anything, and heightens that conflict during the NATO meetings. And then there's a question of China and Taiwan. And people have been wondering if this is a warning message or if this is a sense that maybe the U.S. is distracted. You can make arguments on whatever side you want. And that's one thing that I've noticed from different experts who've come on, how far you have to go and what exactly this does in terms of a deterrent.
This market's moved on, reinforced by the events of the last couple of days, moved on. Equities are higher yesterday and again this morning. In the commodity market, crude pumped for a little bit like 2 hours or something like that and faded aggressively through the 80s and Brent and then back down into the 60s. And we move on as well. In the next hour, we need to be talking about the Fed Chair, Jay Powell. Jay Powell on Capitol Hill, 2 days of testimony. He's going to face a real grilling a little bit later. How often do we say that? But this time he might actually. Coming up next, we'll catch up with Emily Rowland of John Hancock, Stephen Schork of the Schork Group, Torsten Slot of Apollo, and Troy Gajewski of FS Investments. Live from New York, the third hour of Bloomberg Surveillance is up next.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month, For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately, when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Just because the market is being resilient doesn't mean that the risk isn't going to come back and bite it later.
Market and energy traders are still trying to understand what is the calculus here.
It would take some time for markets to get more confidence in the base case outlook for disruption.
There's a lot of uncertainty, but there's absolutely no volatility.
The market will respond when the circumstances change, either for the better or for the worse.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your scores look the same as they did yesterday. We had some weight to the rally. Once again, equity futures on the S&P up by 0.8%. On the Nasdaq 100 up by 1 percentage point. The changes, though, we've seen in the commodity market, unreal. Look at Brent crude this morning. Right now, 68.97. The high of the week. The week's only 2 days old, by the way. The high of the week, 81.40. The low of the week, 67.50. The range on Brent crude in just the past few days.
This is the type of volatility that we saw at the peak of some of the pandemic-related uncertainty during the closures and then the reopening at a time when people couldn't really understand exactly what the backdrop was going to be. It shows just how volatile this is. This shows also why people have become benumbed. If you were benumbed, you did well. If you tried to buy and sell, well, good luck to you. And that's the reason why people don't necessarily respond aggressively to some of these geopolitical risks.
Conditioned by the moves of the past few days once again, and maybe even more desensitized over the past couple of weeks off the back of some of this. Later on this morning, another event on the calendar for you. Chairman Powell, 2 days of testimony on Capitol Hill. It's day one today in front of the House Financial Service Committee, and coming into it, the Federal Reserve is under pressure, and the president is turning up the heat.
At 1:32 a.m. in a Truth Social post where he said, too late, Jay Powell does it again. He also said, I hope Congress really works this very dumb, hard-headed person over. Jeff Sherman of Double Line saying that that's an upgrade from some of the previous monikers that he got from President Trump. We will be paying for his incompetence for many years to come. This complicates a very real economic debate that is happening right now across Wall Street, which is, what is the bigger risk to the U.S. economy? Is it potentially weaker growth, or is it inflation? This dual risk that we are seeing sort of come to the fore in terms of the debate, where you have Bowman and Waller on one side, and you've got the Fed chair very much on the other.
The front end of the curve has just been anchored around this do-nothing posture over at the Federal Reserve. Just introduce some risk around that, I think, over the past couple of days, and maybe introducing the belief, for some people at least, that perhaps some of these meetings this summer might actually be live, and we might not just have to take the summer off.
So to put some numbers around that, right after last Wednesday's Fed meeting, there was about a 10% chance of a July Fed cut priced into Fed funds futures. Today, it's something like 23%. And this is after what we heard from Michelle Bowman as well as Chris Waller. So introducing the sense that even if we don't get a rate cut in July, we might get to cents for the first time in a long time.
Bond yields down by 2 basis points at the front end on a 2-year this morning, 3.84. Coming up this hour, we'll catch up with Emily Rowland of John Hancock as markets digest the fragile truce in the Middle East, Stephen Schork of the Schork Report as oil markets roll over, and Torsten Slok of Apollo as Fed Chair Jay Powell heads to Capitol Hill. We begin this hour with our top story. President Donald Trump lashing out.
I'm not happy that Israel's going out now. These guys got to calm down. Ridiculous. I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning. We basically have two countries that have been fighting so long and so hard that they don't know what they're doing.
His next stop, a NATO summit in Europe. There right now is Anne-Marie. Anne-Marie, a change from the president. Harsh words not just for Iran, but Israel too.
He's clearly lashing out and blowing off some steam this morning before he made his way onto Air Force One to come to The Hague to the NATO summit. He's saying that both Iran and Israel, he believes, were in violation of this ceasefire, and putting a lot more pressure on Israel. He then took to truth and said that Israel will not attack Iran. Potentially, he was responding to what we heard from the Israeli Defense Minister, Israel Katz, talking about the fact that they told the IDF to respond to Iran. This would have been after the ceasefire that the president said came into effect. So he's clearly very frustrated with the fact that this is a fragile ceasefire. And even though potentially is the start to the end of this 12-day or so conflict, and right now we do not have a protracted regional war, the fact of the matter is this is very tense and fragile. I was speaking to one senior observer of this region for years who was saying that the way they view it is that Israel now views Iran the way they view and have viewed in the past, say, Lebanon and Lebanese Hezbollah or Gaza and Hamas. If they see intelligence that could potentially be a threat, they will go out and neutralize it ahead of time. That means that we are going to be living in a very different, fragile region when it comes to the Middle East.
Looking forward to your coverage over in Europe over the next 24 hours. Anne-Marie Hordern at the site of the NATO summit, which the President of the United States is heading towards right now. Here's the view on Wall Street this morning. Emily Rowland of John Hancock Investment Management writing the following: elevated geopolitical risks are not showing up in US markets just yet, where the focus is on managing risk in portfolio. Joining us now, I'm pleased to say, Emily Rowland. Emily, let's talk about this a little bit more. Here's the question from me. What risks are actually worth managing at the moment? Because for a lot of people, they're being rewarded by just ignoring pretty much everything.
It's amazing, John. It reminds us a bit of the Talking Heads song, Same as It Ever Was. Just looking back a week, you saw the typical geopolitical risk management narrative playing out with the dollar briefly catching a bid. You saw oil prices obviously higher, gold getting a bid, and all of that has quickly reversed. This is one of the biggest head fakes that we've seen for investors in quite some time, and now we're once again spitting distance from new all-time highs, sitting at 21.5 forward earnings. Investors are chasing the riskiest areas of the market, really embracing a momentum-driven strategy, looking at pockets like unprofitable mid-cap growth stocks, and European equities is really the playbook this year. So really very little risk priced into the markets. High yield bond spreads sub 3%. Markets seem to be calling the all clear here. We think it's more important than ever to consider risk management.
Max Kenner of HSBC asking a question, and I'll quote him directly. We think the biggest risk to our view is that we're not bullish enough. Emily, what are you suggesting people do then? Fade these moves? If so, how? Rotate out of what and into what?
Totally agree. This market is just pushing you into risk, John, and it's been really hard to resist that momentum. This technically driven, sentiment-driven market has been a big challenge. It's not to say we don't have exposure to risk assets. We still love high quality stocks, ones with great earnings potential, good ROE, lots of cash. We're looking to find quality at a reasonable price. So we're finding it not only on the growth side of U.S. markets, but also in sectors like healthcare and utilities. We've been talking a lot with investors about infrastructure related assets. So these are the things that people need versus the things that they want. Look, the economic growth trajectory in the U.S. isn't great. It's not terrible, but the data have disappointed. We're starting to see cracks in the labor market. The consumer's coming under pressure with retail sales disappointing. So we want to be positioned for that environment, but markets are almost completely ignoring it and trading on a different planet. We think there's opportunities to trim risk here. We still think that the elevated yield available in bonds is very attractive here. Stocks are priced for perfection, and bonds to us are still mispriced for this disinflationary, slower growth environment that we see playing out through the back half of the year.
Emily, if this is truly a disinflationary environment, then maybe Michelle Bowman and Chris Waller are onto something, and the Fed should be cutting potentially as soon as next month. Is that inconsistent with the idea of the resilience in U.S. equities, or does it help fuel it?
For now, it helps fuel it. So you remember we talked a long time ago about the pivot party. There's a period where rates are coming down, disinflation's coming down, growth is slowly slowing, where equity markets are going to celebrate that because we know that stocks love a lower cost of capital. But then there does become a point where bad news is just bad news as it relates to growth. We think right now we're still sort of in a celebratory environment where disinflation through housing and shelter is playing a really key role. We actually do think that some of the recent Fed speakers, it makes a lot of sense. In fact, the Fed, if they were data dependent, they may be cutting already if it weren't for the specter of tariff-driven inflation. It was amazing to hear Powell last week say that every forecaster he knew suggested that inflation on the good side was going to pick up over the next several months. I don't know, maybe he's not reading the weekly emails that Matt Miskin and I are putting out there, but we've been highlighting the fact that housing and shelter disinflation, which is a much bigger component of overall inflation, is significantly slowing, which we think could actually offset the potential inflationary impacts of tariffs here.
If the Fed doesn't cut for the remainder of this year, do you think that that alone could actually accelerate a downturn in the economy and actually could end up leading to a protracted bout of weakness?
Yeah, I mean, you think about higher rates having this almost self-limiting mechanism where, you look at mortgage rates, picking up around 7%, that housing is completely unaffordable for many Americans right now. You think about credit card debt, auto loans all being elevated. There's a limiting factor that takes place the higher that rates remain that we think actually pushes growth lower. So we think it makes a lot of sense for the Fed to consider cutting here. It's probably, in our view, back end loaded as it was last year. The Fed obviously doesn't want to kowtow to any pressure from the executive branch in Washington. We are watching that really closely. So we think maybe they give us a little bit more color at Jackson Hole in August, probably not doing anything anytime soon, but we see the case for more aggressive cutting than markets expect as we look at the sort of later stages of the year.
So, Emily, what are the investment ideas you've got around that view? Do you sit at the front end and ride the rally on a 2-year save? You expect that deep cutting cycle that's not priced in? Are you moving out of cyclicality in the equity side of the portfolio? What are you suggesting people do?
Yeah, on the fixed income side, we're looking at the intermediate part of the curve, areas like MBS, investment grade corporate bonds, single A, even treasuries. We're looking at a benchmark level of duration, so right around 6 years. We're not going all the way out to the long end of the curve. The challenge, though, with sitting in the short end of the curve is investors might miss out on the total return potential that is at play here in high quality bonds. The most popular investment within fixed income by far is still money market funds. We're sitting over $7 trillion in cash right now. The advisors that I talk to when I'm traveling say that their clients want to roll over those CDs and continue rolling them over. The challenge there is that investors tend to embrace money market funds all the way until rates are zero, and then they look to bond investments after a great period of performance. So investors tend to miss a lot of that duration benefit. So we're suggesting legging into duration, looking at the intermediate part of the curve, fading the momentum, sentiment-driven rally in areas like growth at any price stocks, European equities, which have been rallying on negative earnings growth, and redeploying that into a mix of high-quality stocks in the United States that are trading at a reasonable price.
Emily, beyond equities, I just want to finish on the bond market. There's an important assumption that we've all got to make a decision on. What happens to the long bond if growth does decelerate, if rates are cut at the front end, which is what the Fed controls, Fed funds? What happens to the bond at the long end?
Yeah, I mean, we think that bond yields fall across the curve here. We've seen this really unusual environment where this bear steepening has played out. That doesn't happen very often. And really, you know, there's an argument out there that politics are driving that. There was a huge question you guys asked every single person that came on over the last few weeks. Are you buying the 30-year Treasury at 5%? We don't think it's the worst idea to own, look at every backup on the 30-year as an opportunity around 5%. There's a lot of volatility there, so you've got to right size it. But we do think ultimately yields across the curve come down here as growth decelerates and disinflation sets in.
I can sell you 490 this morning. Emily, it's good to see you, as always. Thank you. Emily Ronan there of John Hancock Investment Management. Bond yield higher this morning by 2 basis points at the long end, but lower at the front end by 2 basis points. And this is the complicating issue for those of you that would like to unlock the housing market and get mortgage rates lower. The last time they cut interest rates, what happened? The long end sold off and yields rose and mortgage rates went up.
And could that happen again, especially if inflation expectations go up? Everyone seems to love the belly of the curve, the 5-year yield. And this is the reason why the yield on 10-year treasuries is now the highest relative to 5-year yields going back to late 2021. It just shows how distorted the market is getting around some of these views.
About a 45 basis point spread as we speak. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump accused Israel and Iran of violating the ceasefire he announced yesterday. Speaking to the media before he boarded Air Force One to head to the NATO summit, Trump expressed frustration with both countries and told them to calm down. Meanwhile, world leaders are gathering in The Hague for a 2-day NATO summit. As I just mentioned, allies are expected to endorse a goal of spending 5% of their GDP on security. But Spain's prime minister is refusing to agree to spending increases, arguing that 2.1% will be sufficient. Now, NATO Secretary General Mark Rutte needs to keep Spain in line while also preventing others like Slovakia from breaking ranks. And passengers on a Paris-bound Qantas flight spent more than 15 hours in the air, only to end up back where they started. The flight departed from Perth, Australia, making it into Indian airspace before an Iranian missile attack closed airspace in the region, forcing it to turn around. The plane landed safely back in Perth earlier today. That's your Bloomberg Brief. John?
Brutal. 15 hours. Absolutely brutal. Yahara, thank you. More from Yahara later this hour. Up next, the Morning Calls Plus. Stephen Schork of the Schork Group as oil prices roll over and drop back below $70 a barrel. That conversation up next, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action. bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The opening about 1 hour and 12 minutes away. Your scores look like this. Positive by 0.7%, just off session highs, but adding some weight to the rally that started yesterday, snapping a 3-day slide on the S&P 500 in yesterday's session and adding to the move so far this morning. On the Nasdaq 100 up by 0.9%. That's the stock market picture. Here are your morning calls. First up, Goldman, downgrading Dollar General to neutral, seeing limited upside due to intense competition. That stock is down by 0.5%. Your second call from TD Cowen, upgrading Lyft to buy, citing growth potential from international expansion. That stock is up by 5.5%. And your third and final call from Citi, raising its price target on Alphabet to 203, pointing to an improving digital advertising market. That stock is up by 1.25%. Let's turn from the morning movers and some of the morning calls to the commodity market. Crude oil dropping as the Middle East avoids the worst-case scenario. Stephen Schork of the Schork Group writing the following. Geopolitical risk is underpriced. The market assumes the ceasefire holds. History says be skeptical. Stephen joins us now for more. Stephen, welcome to the program, sir. Let's start with that quote, that last line. What about history makes you skeptical?
Yeah, absolutely. We've seen this playbook before, Jonathan. And right now, what the markets have done, what the oil markets have done, they're pricing in a peace treaty. I mean, all we have now is a ceasefire. And as we learned this morning, a tenuous ceasefire at that. Yet the market is pricing as if this war, January 1991, when Desert Storm commenced and the West overthrew, the West with the help of its Arab allies, overthrew Saddam Hussein. And this is what the market's doing. It seems a bit premature at this point that we only have the ceasefire. It's not a peace treaty. The Tehran has not been overthrown by a pro-Western government, and yet prices have completely, I think, in our modeling, have overpriced this move.
Stephen, some people might say it's even better than the early 90s. In the early 90s in America, we were producing something like 7 million barrels of oil a day, and now we're close to double that. It's a well-supplied market, and we've learned from the Iranians, they're not going to do anything about the Strait of Hormuz. Why should I pay attention to this situation? What do you say back to that point?
Well, let's be clear. The Iranians are doing something in the Strait of Hormuz. There's been GPS jamming and spoofing of navigational systems coming out of Tehran. So over the weekend, we had 2 VLCCs, very large crude oil carriers that can carry each 2 million barrels of crude oil, turn around to avoid the strait. So we do have a soft blockade, which will put pressure on crude oil supplies. So therein where it lies. We can only move crude oil prices higher if we see a disruption to the flow of oil, and we are seeing that on global markets. To address the issue about domestic production, yes, the United States is the world's largest producer of crude oil, but we do not produce, let's be clear on this, we do not produce all of the crude oil we need. So crude oil comes in very different varieties of viscosity, weight, so forth. Our refineries are geared, the majority of that, to refine a specific type of crude oil, which we don't necessarily produce. So the United States has to sell that crude oil on the global market and buy back the crude oil it actually needs. So yes, while you want to think you can make an argument, and in some ways you are, that we are energy dependent, no, we need foreign crude oil, again, because we don't produce as much as we do, we don't produce as much as we need.
The U.S. may not necessarily be immune to any kind of shipping disruptions, which I think is sort of what your point is underscoring. At the same time, there is more capacity to produce. There are a lot of oil rigs that have been taken offline in the past 6 months. There's been a discussion around $65 a barrel oil, and that's needed to bring some of those oil rigs online. How soon do you see that happening as a potential offset to any kind of supply disruption?
We are, at least, unless we see a sustained rally, that is sustained prices. I do think $65 a barrel is too low because we've been there pretty much for the majority of this year thus far, and we haven't seen an increase in production. Now, the Dallas Fed put out a survey at the beginning of the year asking oil executives what price do they need to see to excite them to bring more oil to the market, and that range was in between $71 and $75 a barrel. So we did pop over there briefly, but this rapid decline that we've seen, and yesterday we saw one of the largest declines ever in 40 years worth of oil trading. So that is going to scare a lot of executives. It's going to keep them correctly skeptical that this rally has any sort of staying power. So to answer that question, we are, at least I believe, a quarter away before we'll see any sort of price reaction, because the executives have to be confident that oil above $70, $75 a barrel is here to stay. This kind of volatility is going to scare off production and is not going to, regardless of the headlines, it's not going to introduce more production from the U.S. into the market.
It's also going to scare off traders that are trying to make a market and try to understand what kind of risk premium to put on the myriad risks that are out there. You say that geopolitical risk is underpriced. What kind of price do you assign it, given the volatility that we've seen in prices over the past couple of months?
Yeah, absolutely. Great question. And look, we've got, as I said, we have 40 years worth of trading. So we have 40 years of Iraq invading Kuwait, Desert Storm, all the stuff that we saw in the early 2000s. So we've seen plenty of spikes, plenty of surges. So we know how to model those potential jumps in the market and address that drift and address that volatility. So it does take a little bit of mathematics, a little bit of probability analysis to assign a potential range. So what we've done for our third quarter pricing that we just issued yesterday is in the potential outcomes, our interquartile range, that 50% envelope of where prices could trade, ranges in between $85 a barrel and $63 a barrel. Now, if we have a tail event, we see a further escalation of hostilities, and most importantly, we see a disruption to the flow of crude oil, then we go out to our tail risks. And this is based on kind of the volatility, the jumps, the amplitude and moves that we've seen in prior situations. So that brings us into a 95% confidence or 5% confidence that we could trade above $103 a barrel through the third quarter. And then worst case scenario, we're talking about oil at above $165 a barrel in the current environment. I want to underscore those are tail risks, very low probabilities nonetheless, but we only get there if we see a significant prolonged disruption to the flow of global crude oil.
We certainly don't see that right now. We appreciate your time, as always, sir. Stephen Schork there of the Schork Group. Thank you, sir. As we speak, crude takes another leg lower. We're down by more than 4% as we speak on Brent crude to 68.42. The turnaround in crude continues. Peter Chi of Economy's called this story really well. Just writing moments ago, it's helped to re-establish deterrence and it's sent a strong message to all adversaries. Up next on the program, we need to talk about the Fed Chair, Jay Powell. He is going to be facing down Congress over the next 2 days. That testimony begins in about an hour and 30 minutes time. We're going to hear from Mike McKee for a preview in just a moment and get the thoughts of Torsten Slok of Apollo as well. Live from New York City, this is Bloomberg.
to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Just getting confirmation from the Israeli side on this fragile truce in the Middle East. The Prime Minister's office in Israel saying the following: Israel to abstain from further strikes. The latest on that truce, a so-called ceasefire in the Middle East at the moment. For the scores, they look like this elsewhere. Equity futures on the S&P 500 firmer by 0.7% on the S&P. In the commodity market, crude taking another leg lower. At the moment, 68.75 on Brent. Need to get you some headlines. We can do that with Michael McKee this morning. Good morning, Mike.
Good morning, John. Well, the Fed has released Jay Powell's initial preliminary testimony to the House Financial Services Committee, and there's nothing really new in it. It basically repeats his statement from last week's post-meeting news conference. He pushes back against the idea of imminent rate cuts, although he doesn't mention him by name. He says the timing of the cuts will likely depend on what Donald Trump does. Policy changes continue to evolve, Powell says in his statement, and their effects on the economy remain uncertain. Increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. He says the best way to avoid that outcome is to know how long the tariffs will last, the size of the tariffs, and ultimately on keeping long-term inflation expectations contained. And he goes on to say, for the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. It sounds like he is standing against the Waller and Bowman view expressed over the last couple of days. The final notes from Powell I would mention is he says the economy remains solid, uncertainty is elevated because of tariffs. Tariffs are pushing up inflation expectations, and the labor market is broadly imbalanced. And he says of the dual mandate, keeping inflation in check is probably the more important goal. They'll balance their maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. So it is not going to break a lot of ground, but we'll see what happens when the Q&A comes up. Obviously, Bowman and Waller's comments about a July rate cut will certainly get at least Republicans' attention up on Capitol Hill.
Well, Mike, let's get into that. We are well positioned to wait. Who is we? How many members of the FOMC stand behind that statement?
Well, right now it appears the majority do. We heard from Raphael Bostic overnight in a Reuters interview saying he still thinks one rate cut at the end of the year is the most likely. And pretty much everyone else who's spoken, besides Waller and Bowman, have suggested that they need more time to know what's going on. We did hear from Austin Goolsbee yesterday saying that if inflation continues maybe to fall, maybe we get on with it, but he didn't put a time frame on it.
Mike McKee with the latest. Mike, thanks for that, sir. To extend the conversation with us around the table, Torsten Slog of Apollo. Torsten, good morning.
Morning.
There's the testimony. We'll get the Q&A a little bit later at 10 a.m. Eastern time. We are well positioned to wait, are we?
Well, so let's take stock of where we are. Just last week at the press conference, Jay Powell said he expects a meaningful increase in inflation, and he said he didn't know anyone who didn't expect a meaningful increase in inflation over the next several months. And now we have Mickey Bowman and Chris Waller saying in the last few days, well, maybe we could already cut in July. It was, for both of them, contingent on not seeing that rise in inflation, but it is highly unusual that you have this public debate about should they be cutting in September, should they be cutting in July, especially when you take into account that this Friday, the consensus expects year-over-year inflation to go up. And next week, on Thursday, the consensus expects the unemployment rate to also go up. So that does bring you back to where does the FOMC put its weight? Does it put its weight on the fact that inflation is likely going to increase over the coming months, not only because of tariffs, but likely also because of the restrictions on immigration that have put some upward pressure on wage inflation? So there's plenty of upward pressure. Now oil prices are zigzagging a little here the past few days, but since the beginning of this month, oil prices are still up. So there's plenty of upside pressure on inflation that Jay Powell seemingly worries more about than other members.
The calendar matters. July 9th is the self-imposed deadline to have all these negotiations with trade partners and come up with the ultimate tariffs. The chairman saying this morning the ultimate tariff level will determine their impact. Will we have a better picture of that in a few weeks' time? And ultimately, when they convene in the next month or so, will they be in a position to say, you know what, we know now and we can make a call?
But that's why the jury is still out on this debate. Not only does monetary policy take 12 to 18 months before we begin to see the effects, but also, as you say, what are exactly the levels of tariffs here we're talking about? Are we staying at current levels with 30% on China, 10% on everyone else? Or are we about to see an increase? Scott Bessent said those countries who are not negotiating in good faith, they may go back to the level of tariffs we saw on Liberation Day, April the 2nd. So it could be that tariffs, we mostly expect that they will go down, but it could also be that tariffs potentially could go up. So that's why this debate becomes very, very important. And that's why we just don't know from a Fed perspective which of their FOMC members will end up being right. It could be that it could maybe be that Mickey and Chris Waller will be more right, but we just don't know at this point.
Let's say Jerome Powell goes to Capitol Hill, gets really grilled, and says, you know what, you're right. We should cut rates. We should cut rates next meeting. We should cut rates by 50 basis points. What happens on the long end of the yield curve?
Well, the risk here, of course, is when we saw the pivot party, when the Fed first started cutting, that we saw the long end go up. And the risk, of course, for the housing market is that we may also begin to see if the Fed ultimately starts to cave in to the view that, well, maybe inflation is not a problem, even before we know if it's a problem. The risk, of course, is that the long end may begin to say, well, then we want a term premium, then we want some compensation for the risk that inflation may be allowed to be higher for longer. So the risk really here is, and I think Jay Powell will focus on this, we just don't know exactly what inflation will do over the next several months. So it's just a little bit too early to take the champagne bottle out and declare victory here over inflation, because he's worried that policy coming from tariffs, policy coming from immigration, and he might also be worried about oil prices putting upward pressure on inflation in the short term.
It's a really interesting debate around inflation. On one hand, either retailers and different businesses can pass along prices that they incur from the tariffs to consumers, and they can be fully absorbed, or they will take a hit to their profit margins, or some sort of combination of both. One thing about your work that's amazing is you really look at the granularity and what actually is happening on the ground. How much of the price increases have either come through, have already been absorbed? What have we seen in terms of what different companies have actually been doing?
So different Fed surveys have exactly asked that question as a sub-question when they ask companies in their districts, are you passing cost on? And to what degree are you passing cost on? It varies a bit across sectors, but nobody is saying zero. Nobody is saying we're not passing cost on. Everyone is saying that they're passing some degree, some higher, some up to 80, 90%, some lower, 20, 30%. But the conclusion is exactly as you're saying, Lisa, someone needs to pay for the tariffs. Is it consumers in the form of higher prices? If it's not, and let's say that inflation does not go up, then I will really begin to worry about the S&P 500, because then the consequence is that earnings are going to take a much bigger hit, because then it's not consumers who are paying the bill for the ultimately higher import tax, but then it will be companies that will have to pay through lower earnings.
If you are just joining us, welcome to the program. Moments ago, prepared remarks from the chairman of the Federal Reserve, Jay Powell, as he heads into day one of two-day testimony on Capitol Hill. Mike McKee giving us some of the headlines from that. Mike, I want to bring you back into the conversation and talk about the calendar. At the end of July, July 30th, we get that Fed meeting, the news conference with Chairman Powell, and we're trying to figure out if we're going to know enough by then to make that a live meeting. Just go through the calendar for us, Mike.
Well, here's the problem, John. We get the PCE, as Torsten mentioned, this Friday, but it is going to show a year-over-year increase, according to analyst forecasts, because of base effects. And we don't get another PCE number until the day after that July 30th meeting. So CPI on July 15th is really going to be the only measure that we have. Now, it's the most detailed measure, but if you're trying to make a case for a rate cut, it might be harder to do without more backup. So for Waller and for Bowman, it's going to be kind of a difficult argument to make in there. Also on July 9th, as you mentioned, we get, in theory, we get the latest tariff numbers, and everybody's going to have to work through those to figure out what that's going to mean for inflation. So even though we've got some people talking about the possibility of a July rate cut, it looks like still a very hard hill to climb.
Mike McKee, thank you, sir. Torsten Slock of Apollo. A few final questions for you. Let's start with this one right here for the Federal Reserve. July 30th. Some people think that's too soon. Others say we can take some comfort from the inflation data over the past few months. Is it signal or noise, the downside surprises we've had over the last several months?
See, and if we really back up and think about what's going on, this is a stagflation shock. Inflation is going up, which says the Fed should be hiking. Growth is slowing down, which says the Fed should be cutting. So where are they going to put their weight? Do they like apples? Do they like oranges? Are they going in the Taylor rule to put more weight on inflation and say, well, we got to keep rates higher? That's clearly what Jay Powell is saying. And that's, of course, at the moment seems to be the baseline, at least from the press conference last week. But at the same time, if growth is slowing down and if we are really unlucky and growth slows down very quickly, then, of course, the decision of keeping rates higher will turn out to be a mistake. So that's why the textbook does not give you an answer to a stagflation shock. And given we have a stagflation shock, stagflationary impulse coming from tariffs, stagflationary impulse coming from restrictions on immigration, including deportations, and also a stagflationary impulse coming from higher oil prices. All those things really complicate the decision of where do they put their weight on slowing growth or rising inflation.
What will determine the response to that is how long-lived either the stag or the inflation actually is.
Exactly.
And on the inflation side of things, how instructive is the labour market right now? Suggesting that maybe look at the labour market, it's weakening up somewhat. I don't see that as a source of inflation, and therefore, I can't make a strong argument for this inflation spiraling and getting out of control.
That's true. So that's why there is certainly a case to be made of that this inflation spike is transitory. Of course, as we know from when they said that last time, they're probably very reluctant to use those words. But I do think that the conclusion is, to your point, the consensus does expect that inflation by the end of this year will be higher than where it, of course, is today. So that's why if we have 3-6 months ahead of us with some upward push in inflation, the risk is that companies will view this just like they did in 2021-22 as a chance to say, well, maybe we need to think about pricing, and maybe therefore that you could have risk that inflation does become more ingrained.
Is there anything that you could see that would make you rethink the idea of stagflation? Think that maybe things are better than you're currently making them out to be? I was looking at Nathan Sheets over at Citigroup saying, one thing that has just surprised him again and again is the resilience of the U.S. economy and the fact that it has been able to absorb all of these shocks again and again.
And that is absolutely correct. It is impressive how well the economy has behaved so far. But that being said, the consensus still expects the unemployment rate to go up on Thursday next week when we get the next non-farm payroll. So the consensus is still saying, yes, the economy may be strong, but the consensus still is saying we expect the labor market to weaken. And importantly also, with the restrictions on immigration and much less immigration, of course, coming into the country, we may also have the non-farm payrolls is now on the long-run average around 50,000. So that means that maybe we have a long-run level that we need to compare with that's also falling simply because immigration has changed so much from where we were a few years ago. So that's why the labor market weakening could both be structural in nature, it could also be cyclical. So it raises a lot of debates around, well, is the labor market weakening because demand is weakening, or is the labor market weakening simply for the structural reason that we have less immigration than we had before?
Just quickly, 50. We might have to get used to 50,000 on payrolls Friday.
Absolutely. Because if you take the demographics, remember there was the paper by Watson and Edelberg from the Hamilton Project that they basically showed at Brookings that under Biden we had strong immigration that meant that non-farm payrolls brought roughly around 200,000 every month.
Yep.
But now we have literally border encounters are really running at a basically zero rate, and at the same time we have deportations, of course, running at an annual rate roughly around 1 million people to be deported by the end of the year. All that means the labor force is shrinking. That means that the number of jobs created in the economy is going to be dramatically lower.
Torsten, always thought-provoking, always enjoy catching up with you. Thank you, sir. Torsten Slok there of Apollo. Prepared remarks just coming in from the chairman of the Federal Reserve, Jay Powell, saying we're well-positioned to wait, and also saying the ultimate tariff level will determine their impact. Of course, we still don't know the ultimate tariff level. He's going to face a little bit of a grilling on Capitol Hill later this morning, first in front of the House Financial Services Committee, led by Chairman Hill, French Hill of Arkansas. So look out for that later at about 10 a.m. Eastern Time. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Senate Republicans are coming around to the $40,000 SALT cap proposed by the House in President Trump's tax package, but they want to lower the income threshold. The SALT provision is one of several holdups for the bill. Other issues include Medicaid cuts and green energy tax credits. Republican leaders hope to pass the bill by July 4th. Meanwhile, NVIDIA CEO Jensen Huang sold over $14 million of NVIDIA stock over 2 days. It's his first transactions under a plan allowing him to raise cash without spooking investors. According to our Billionaires Index, Wang is the world's 12th richest person with a $126 billion fortune, which is made up almost entirely of NVIDIA stock. And Starbucks shares have been volatile this morning, but are currently up higher as the company disputes a report that it's considering selling its China business. Caixin Global reported that Starbucks held talks with over a dozen potential partners, including 2 private equity firms. But Starbucks says it's not considering a full sale. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, setting you up for the day ahead, we'll catch up with Troy Gajewski of FS Investments on signs of economic resilience, if there are any. Where are they? And we'll also catch up with Danny Berger to get you some single names, some morning movers going into the opening bell. Live from New York. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
The Federal Reserve is well positioned to wait. The words of the chairman of the Federal Reserve, Jay Powell, going into his semi-annual testimony later on this morning. That kicks off at 10 a.m. Eastern Time. The price action going into the opening bell about 42 minutes away. Equity futures up by 0.75% on the S&P. On the Nasdaq, up by 1 full percentage point with some morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. There's been an absolute frenzy going on with stablecoin stocks ever since the Senate passed legislation helping to make it more mainstream, stablecoins, that is. Fiserv, one of those companies, it is up another 4.3% this morning on an announcement that it would be partnering with MasterCard to develop more stablecoin technology. So MasterCard also up 3%. The technology stablecoin, a real threat to MasterCard, to Visas, who handle payment systems. Uber also to the upside this morning in the pre-market trade. They have partnered with Waymo, and now if you're in Atlanta, you can order a Waymo on Uber's platform. Uber trying to position itself to Wall Street to say, hey, we are going to be the platform because of our huge customer base, because of our name recognition, that we will offer this type of technology. Again, it's only the second city that they're offering it in, but with that launch this morning, shares are up 3%. Finally, wrapping things up this morning with these movers on KB Home that reported earnings after the bell yesterday. It had lower profit, lower sales, also cut its full year outlook. Again, those shares down 1.5% in the pre-market. It's an affordability issue that the CEO flagged with rates still high, housing prices still expensive, but the CEO also adding in that consumers were delaying big purchases because of geopolitical uncertainty and macroeconomic uncertainty. John.
Danny, thank you. It's tough for housing, that's for sure. That stock is down by 1.5%. As we count you down to the opening bell, here's the trading diary, not just for today, but also the rest of this week. Today, the NATO summit is kicking off. 10 a.m. Eastern Time, we'll get consumer confidence. Plus, Fed Chair Jay Powell testifying before the House Financial Services Committee on Wednesday, day 2 of the chair's testimony, this time in the Senate. Thursday, U.S. GDP, plus another round of jobless claims. Friday, core PCE and UMich sentiment. As world leaders gather at the NATO summit, geopolitical tensions continue to soar over the past few days. Anne-Marie joins us now for more. Anne-Marie, soaring through the weekend, de-escalating this morning.
Right, this has been a week of escalating to de-escalate, especially from the U.S. perspective. But this is going to be a very interesting NATO summit because the president is clearly coming in hot. He's really blowing off some steam this morning. He seems very annoyed and frustrated with both Iran and Israel. The fact that this is right now what you would consider a very fragile ceasefire, and this is what the concern is amongst allies, that this is very vulnerable right now for the region. The president is going to be met with really two different viewpoints here in Europe. You have France's Emmanuel Macron yesterday talking about the fact that he thinks the strikes from the United States on Iran are illegal, even though he doesn't want to see Iran have nuclear capabilities. And then you have someone like Friedrich Merz, the new German chancellor. Both of these men wrote in the FT piece today, but they clearly disagree about what is going on in terms of Iran. Merz had to say that he thinks Israel's doing the dirty work, and he says he shouldn't have an opinion because he really thinks that what the United States and Israel is doing is useful in terms of making sure they degrade Iran's nuclear capabilities. So what is going on in the Middle East is certainly going to overshadow this NATO summit that we're also, the president says he will get his exact definition, his words, speaking to reporters on Air Force One when it comes to Article 5. And for European allies, they want to also talk about another potential ceasefire, Jonathan, and that's what's going on this continent with Russia's invasion of Ukraine.
It'll be a fascinating few days over in Europe. Looking forward to your coverage, Anne-Marie. Thank you. Joining us now to build on some of this, Troy Gajewski of FS Investments. Troy, welcome back, buddy. It's always good to see you. Plenty of volatility in international relations. How much comfort can we take from the so-called resilience of the economic backdrop at the moment? Just how resilient are things?
Yeah, so I think that, as Torsten was saying before, and in your last interview, what continues to surprise people, particularly those with a more bearish bent on, whether it's 2022 and the tightening of financial conditions, or obviously the threats from tariffs recently, is the fact that the U.S. economy, right, it's evolved over the decades to be much more of a service economy. We have a lot less sensitivity to trade than other economic blocks across the world. And net, when imports end up being reduced and exports either stay stagnant or reduced by less, you end up with better growth over time. And so if you drill down the numbers, like you think of consumption at the consumer level, obviously the labor market's weakening, but it's still relatively robust, particularly given the stress in the system from the trade war. And then you think of business fixed investment. Remember, one of the greatest things this country has going for it is the massive investment that's going on in AI and data centers. And so even with federal government spending cuts, which looks relatively unlikely in the short term, it was always very hard to get to a recessionary outcome. And now as we're getting more clarity on the fact that tariff risk is receding at least slightly, it just looks like a very unlikely scenario. So when you think about what that means for assets, it means even though equities are very expensive, there's more liquidity in the system today than there was pre-pandemic. M2, you still have supply of equities being sucked out of the market every year through share buybacks, which dwarf IPO volume. The trend for equities is still higher. And then in terms of the yield curve, it looks like we're due for another period of steepening as the Fed eventually starts to cut in the back half of the year. So, very interesting dynamic environment, but I think people tend to overestimate recession risk whenever there's any type of endogenous or exogenous shock.
Troy, just on the rate cuts, we'll hear from the chairman later on this morning. Are they the right kind of rate cuts? Are they the rate cuts that come because inflation's coming in or because there's something bad going on in the labor market?
And that's one of the reasons why, if you looked at annualized monthly annualized growth rates of real income, which drives consumption, which drives the consumer's ability to consume, you're at a 6 to 8% annualized number, which is really, really stunning. So prior to tariff implementation, very, very good news. Obviously, there's going to be some noise, slightly higher inflation in the short term. But the labor market had to weaken from where we were in 22 and 23. You can't run an economy where you have 2 job openings per unemployed person and expect inflation to get to 2 to 3%. So the labor market's weakening. That will give the Fed plenty of cover to cut at the end of this year. Somewhere between 50 and 75 basis points from our perspective makes a lot of sense. Enough to support the labor market, not enough to set off another round of inflationary pressures and cause the market to over-obsess over that.
That last point's the important point. Troy, always appreciate catching up. Troy Gursky there of FS Investments. Looking ahead to the labour market later this week, Lisa, claims 243. The survey, the previous number 245, is something that's rattled Neil Dutter and others over the past few weeks.
If you look at the trailing average, the 3 and 6 month trailing average of jobless claims, they've been trending up to some of the highest levels that we've seen going back to the direct emergence from the pandemic. This raises some concerns for people. It is a reason why they do see cracks forming, even if they aren't obvious and glaring in any kind of material way.
Hard to fight this market at the moment, isn't it? Equities just keep grinding higher.
Credit
spread's still tight.
This has been a confounding market that is numb to a lot of the headlines. What is the biggest risk? Is it inflation, or is it a weakening economy, or is it some sort of pairing of the two? And that is still the debate, and it has been for the past couple of months.
Over the past few weeks, it's been the risk of missing out. The fear of missing out. Equity futures grinded higher again by 0.7% on the S&P 500. Will those moves give way to anything else? Crude, massive turnaround over the past few days. We've gone from the 80s to the 60s. We're down by almost 4% so far this morning. WTI, 65.94. Brent crude, 68.77. Coming up tomorrow, Greg Dacko of EY, former Chief of Staff to VP Mike Pence, Mark Short. We'll catch up with Alicia Levine of BNY Wealth and Matt Hornback of Morgan Stanley. Live from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off,
The Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're looking at a rally as a fragile ceasefire holds. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, it's risk on for markets as traders continue parsing through rapidly changing headlines out of the Middle East. President Trump trying to force a ceasefire as both Israel and Iran accuse each other of lobbing bombs, and treasuries hold steady after Chair Powell says the Fed is well positioned to wait. Katie, what are you looking at in terms of the cross-asset board?
Let's take a look at the ripple effects right now. You can see the S&P 500. Matt mentioned that big rally that we saw yesterday, up nearly 1%. It's continuing today, up 0.7%. Brent crude, just a wipeout underway. Brent crude down 3.6%. We're back below $70 a barrel as that fragile truth, that ceasefire, seems like oil traders believe it will last. And the bond market, perfectly unchanged almost when it comes to that 10-year Treasury yield. We are a hair below 435 right now. It'll be interesting to see that line, whether or not it moves once Jerome Powell starts speaking.
I think it is so fascinating that oil traders believe this rally of this ceasefire of which we are so skeptical. Take a look at how that's working its way into stocks right now. I'm watching the same energy, defense, and airline stocks that we were looking at yesterday, but the picture is reversed. ExxonMobil now down. As Katie showed you, Brent crude, it's gone from over 80 on Sunday night to below 70 today. Lockheed Martin down 1.2% as the fragile ceasefire holds, or I guess you could say it isn't holding if they're still shooting rockets at each other. American Airlines Group actually rising more than 2%. So it's really a reverse picture of what we saw yesterday morning. But of course, in yesterday's trade, we saw this all turn around, Katie, and we're now close again to record highs on the stock market.
Well, on the topic of that fragile truth, President Donald Trump says that both Israel and Iran breached that ceasefire, but there will be no consequences. He spoke on his way to the NATO summit in the Netherlands.
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I've never seen before. The biggest load that we've seen. I'm not happy with Israel. You know, when I say, okay, now you have 12 hours You don't go out in the first hour and just drop everything you have on them. So I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that.
President is in the Netherlands for the NATO summit, and so is Bloomberg's chief political correspondent, Anne-Marie Hordern. Anne-Marie, what do we hear, especially from our allies, about this ceasefire with which they had nothing to do?
Well, the president's certainly going to be met with two different viewpoints here in Europe. You have France's Emmanuel Macron coming out and saying he thinks the U.S. strikes on Iran were illegal, even though he does believe and agrees with the United States that Iran should never have a nuclear weapon. And then you have the new German chancellor who said that what Israel did was, quote, the dirty work when it comes to the strikes on Iran, and basically saying, why should we in Germany criticize Israel or the U.S. for these strikes? So those are going to be two of the different viewpoints the president is met with. We should note, as the president is making his way here to The Hague from Washington, D.C., briefing reporters very early this morning, he seems incredibly frustrated, so much that he used an expletive when he was talking about the fact that he does not think that these two countries, Iran and Israel, have been fighting for so long and so hard, know what they're doing. He did tweet, though, that Israel will not be sending more strikes. He is trying to make sure that this ceasefire that is very fragile stays put. But that is why this conflict in the region is really going to overshadow the summit, because it is vulnerable, this ceasefire, and there's a lot of concern that potentially this could still be met with more tit-for-tat missiles between these two countries in potentially weeks to come, even if this is the start of the end of what we've seen play out over the course of the last nearly 2 weeks.
I want to meditate a little bit more on that frustration that we've seen from President Donald Trump, because he also is publicly frustrated with Israel as well. Of course, as you mentioned, he's since tweeted that, tensions will cool, at least when it comes to Israel's side. We also heard from the PM office over there saying that Israel will abstain from further strikes. But it's not often that we see Donald Trump publicly express frustration with Israel to this degree.
Yes, he's frustrated with Israel, and I believe this would stem from the fact that Israel said that Iran breached the ceasefire. So the Israeli Defense Minister, Israel Katz, came out and said the IDF will now retaliate. And what Trump was saying there is that he doesn't want to see that retaliation, and he wants their planes to come back home. But this was an interesting dialogue from the president this morning, because he wasn't just lashing out at the Iranian regime, he was also lashing out over what is going on in Israel, blaming both of these countries to be in breach of the ceasefire that he really forced together over the course of the past 24 hours.
All right, Bloomberg's Anne-Marie Hordern, appreciate your on-the-ground reporting from The Hague. Let's stick with the fragile tensions in the Middle East, because joining us now from Geneva is Dina Esfandaria. She leads our Middle East coverage for Bloomberg Economics. And Dina, I actually want to start with Brent here, because we looked at Brent prices this morning, down about 3.6%. We're well below $70 a barrel. And as you can see on that chart, we're really at the levels that we were at even before we saw the initial strikes. Matt and I were talking about how it seems like oil traders are seeming to be voting with their feet, that they think that this truce will hold. But is that your read when you take a look at that chart?
I mean, that's exactly it. It looks like traders have decided that this conflict is over, or at least the worst of it is over. And I think to a certain extent, they're probably right. The ceasefire does appear to be on shaky grounds, but I think that we're going to see this become our new normal. Israel and Iran have been at each other's throats intensively for the last 12 days, but also over the last few years. I don't think those tensions are going to go anywhere just because President Trump pulled a ceasefire.
What happens next, Dina? I mean, do you expect this truce to actually hold, and do we then move to talks?
Well, that's the million-dollar question now. I think what happens next depends a lot on President Trump's relationship with Prime Minister Netanyahu. He has asked the Israelis to respect the ceasefire, as he has asked the Iranians to respect the ceasefire. The question is, will they? I think that what we're likely to see is a kind of low-level confrontation, low-level shooting at each other like we haven't seen yet, but much less than what we've seen over the course of the last 12 days. Alongside that, I suspect we're likely to see a return to some kind of negotiations with Iran on its nuclear program. The question is, even if Iran returns to the negotiating table, is it really going to accept concessions on its nuclear program after this war?
So we're so focused on supply here, especially worried about the closing of the Strait of Hormuz. It looks like that may not happen. But what about the demand side of the picture? I mean, the price, as Katie pointed out, has been low even before this confrontation. So is demand globally weak?
I think it's just changed. I think, as you've pointed out, the supply side has really made up for, at this changing geopolitical situation, the changing environment that we find ourselves in. It looks like the price is already building in the risk, the geopolitical risk. It looks like it's relatively stable. It's almost isolated from what's happening geopolitically in the region. I suspect that given what we saw over the course of the last week or 10 days, if despite such open confrontation, prices have remained somewhat stable, I think that what comes next, which is likely to be slightly more stable than what we've seen over the course of the last 10 days, I think we're going to see stable oil prices no matter what.
All right, Dina, great to get your insight. That is Dina Isfandiari from Bloomberg Economics. Let's turn to the Federal Reserve, because Federal Reserve Chair Jerome Powell says that the U.S. economy and labor market are in good position and is in no rush to cut interest rates, saying he needs more clarity on tariffs. We've certainly heard that one before. And President Donald Trump hopes that lawmakers can intimidate Powell into cutting rates and says that the Fed board should, quote, activate. For more on what to expect today from Jerome Powell, we are joined now by Michael McKee. He is Bloomberg's international economics and policy correspondent. Interesting to get these headlines from Jerome Powell ahead of his remarks later today in the 10 a.m. hour, because in the past couple days, we've heard two Fed members come out and say that maybe July is on the table. It seems like the top dog here is saying not so fast.
He's definitely pushing back on it at this point, Katie. He doesn't seem to think that there's any hope for a July rate cut, although most of what he says, almost word for word, this is the same as his statement to the press at the top of his news conference last week. Nothing really new in it. The outlook for the Fed depends on what Donald Trump does, although he doesn't mention him by name. But in the testimony, he says policy changes continue to evolve and their effects on the economy remain uncertain. Increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that inflationary effects could instead be more persistent. So he says that basically we need to know what the tariffs are, when they go on, and how long they're going to last before we can make a decision. He goes on to say, for the time being, as you mentioned, Katie, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. Now, as to those comments from Chris Waller and Mickey Bowman, you look at the calendar and you don't see much support for what they're talking about coming up. We have jobs on July 3rd, and then we have the reciprocal tariffs coming out on July 9th. The next time we get PCE inflation after this Friday is the day after the next Fed meeting. So we'll have one inflation indicator, CPI, on July 15th that would have to do all the work for Waller and Bowman. We'll see if they can get that much out of it, but it doesn't look like the rest of the Open Market Committee is ready to join along.
Mike, the president is urging lawmakers to grill Powell. He wants them to try and intimidate Powell into cutting rates. What is the point of the bullying of the Fed chair if he clearly isn't going to bend?
Well, there are some people who think that the pressure does work, and they point to Waller and Bowman and suggest that since they are Trump appointees, they might be reflecting some of the pressure. I don't think that's necessarily the case, but it is a possibility, I suppose. And they're hoping that maybe enough pressure from members of Congress will tell the Fed president that he doesn't need to wait, that they can go ahead and cut rates and make up for it later. As you say, Matt, I don't think that Jay Powell is going to listen.
Mike, thanks very much. Bloomberg's Michael McKee there in Washington. And we'll obviously bring you that Fed testimony live as it happens starting at 10 o'clock. Let's check out some more of the movers on our radar as we count down to the opening bell. KB Home cutting its full-year housing revenue forecast. You can see the stock there down 2 2/3%. And I think it's more interesting to see this move, Katie, in a down market, right? Because this is one of those tides that's going to lift pretty much all boats.
You mean an up market?
Sorry, an up market.
Yeah.
Except KB Home, obviously down.
Yeah, absolutely. They cited market conditions for the home building sector softening. We know that the housing market has been in a really weird place. Let's talk about Uber, though. Uber will begin offering driverless Waymo rides in Atlanta. You can see that's boosting shares to the tune of 3% pre-market. Interesting to see this announcement, of course, on the heels of this weekend's robo-taxi launch, which boosted Tesla shares quite mightily yesterday.
Right. I actually got a Waymo in Austin using Uber. So they offer this service in other cities, and it works pretty seamlessly. Lyft also getting a lift this morning. TD Cowen upgrading the stock to a buy on what it expects to be accelerated growth this year, and that's a gain of almost 6% for Lyft.
Yeah, I was really excited to put these two stocks next to each other, Uber and Lyft, because there's a real duopoly here. It's Uber and Lyft, but increasingly it's Uber. You take a look over the past 5 years, Uber has just been dominating Lyft, but you have at least one analyst saying that things are going to get a little bit brighter for Lyft. Maybe that gap will close just a little bit.
That is huge. That's even worse than McDonald's and Krispy Kreme.
Yeah, which we will talk about.
Which we'll talk about.
Deep tease.
A little bit later. Coming up, Carnival Cruise results are due in just a few minutes. Analysts expecting a strong second quarter despite concerns about the consumer. That's next. This is Open Interest.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Let's get to high interest now. Look at what's making headlines around the world. Jensen Huang sold over $14 million of NVIDIA stock over the last 2 sessions. It's his first transaction under a plan that allows him to offload up to $865 million by the end of the year. According to the Bloomberg Billionaires Index, Huang is the world's 12th richest person, but his fortune is almost entirely tied up in NVIDIA stock. Meanwhile, funds advised by BC Partners are seeking to sell $1 billion worth of Chewy shares in a block trade. The pet product retailer won't receive any proceeds from the sale. Shares are falling this morning on the news because of the obvious concern about dilution. And Starbucks is disputing a report that it's thinking of selling its China business. Caixin Global reported that the coffee company held talks with over a dozen potential partners, including 2 private equity firms, but Starbucks says it's not considering a full sale. The coffee giant has struggled in China due to weak sales and intense competition there. Katie, you still, every day, you still?
No, actually, in this economy, I've started drinking Bloomberg coffee, which really tells you something. But I still go on Saturdays and Sundays for those keeping track at home. But let's talk about earnings. It's still earnings season, Matt Miller, and Carnival Cruise is out with a big one. The company reporting second quarter earnings that beat expectations as shares jumping pre-market on the news. Let me bring you some of those specific numbers right now. Adjusted EPS came in at 35 cents. The estimate was for 24 cents, so a big beat there. Revenue also a shade higher than the estimate, coming in at $6.33 billion. The estimate had been for $6.2 billion. Here's the commentary, and we'll get more, of course, on the call. But according to the company, our guests continue to look to us as their preferred vacation choice, given the amazing experiences our cruise lines provide. In any case, the share's up 4.4% right now, but the whole complex is on the rise in the heels of this report.
Yeah, very interesting stuff, and the cruise stories have been fascinating to me. I've never been on one of these big ocean cruises, but I have done a Nile cruise as a kid, and Hilton is now getting into that business, and it's just one more of the many hotel businesses that are piling in to the cruise lines. We had a yacht extravaganza with a number of companies doing yachts, and now Carnival, now Hilton, I should say, is doing this one-time thing on the Nile. But
it's a natural expansion, I would assume, going from land to water. I'm sure that will be great for some people who enjoy that. I'm going to stay on land, but do you want to talk about Tesla?
Oh yeah, Tesla. So yesterday was a pretty amazing gain, adding another 10% to its market cap and then some, because of the robo-taxi. Even though it seemed like kind of a glitchy launch of only a handful of robo-taxis that needed to have company minders in them and were only for influencers and Dan Ives basically to ride around in.
Yeah.
But it's up again today.
And it was a bit of a delayed reaction yesterday, too. It really built throughout the day. So interesting moves in Tesla. Let's talk about Tilray as well. Tilray got Italy's first authorization for medical cannabis, up 3.5%, and that somewhat transitions into Krispy Kreme.
Yeah, well, and I mean, so many of these stories tie together. Yesterday, you were talking about the breakdown of the partnership between Novo Nordisk and Hims and Hers, right? They sell the GLP-1 drugs, which are not helpful, I would imagine, to both McDonald's and Krispy Kreme.
Yeah.
Those two had joined forces and are now breaking up as well. Maybe they figure, like, since Novo and Hims and Hers are no longer cooperating, they no longer need to either.
Yeah, that's a lot of extrapolation, but
the stock, Krispy Kreme, has been absolutely crushed over the past year. It's lost like 5 years, lost 85% of its value. McDonald's is obviously doing much better. And I also think, like, this Tilray story, maybe that helps Krispy Kreme, at least in their Italian locations.
Yeah, a lot of extrapolation, but I like the way you think, like a portfolio manager. We'll have to see if those bets pay off for Matt Miller. But coming up, strategists say that investors should buy the dip in tech stocks during geopolitical uncertainty. We'll see if Morgan Stanley's Lisa Shallett agrees, up next. This is Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Bersachi in Doha, Qatar, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, Wall Street is saying to buy into market declines on political and economic uncertainty. Among them is Michael O'Rourke from Jones Trading. He says that mega-cap tech is a defensive play during times of uncertainty due to their, quote, safety in size. Let's discuss with Morgan Stanley Wealth Chief Investment Officer Lisa Shallett joining us now. Lisa, great to have you with us. And let's start on that point, because tech, it kind of can fit into any box you want to put it in. For some, it's growth. For others, it's defensive. How are you thinking about tech in this current environment?
Well, one of the first things that I would say is we're not thinking about it as a one monolithic sector. This is a time, we believe, given where the aggregate market valuations are, given where earnings expectations are, and how rich both are, that you've got to be a stock picker and you've got to look for more idiosyncratic value. And so we're finding some of that in, some of the semiconductor stocks, some hardware stocks, some software stocks. But what we're not doing is just buying blindly, quote unquote, the Mag 7 or buying blindly, a passive exposure to generative AI.
If you cling too tightly, Lisa, you're going to lose control. We'll get back to that after this break. Lisa Shallett is staying with us through the open. A check on futures ahead of the opening bell, and we're looking at continued gains here. So after 1% gain yesterday?
Just about
1% gain. It looks like we could get even closer to record highs. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. I'm pretty excited today because we could see an intraday high, record high, reached on the S&P 500. You see futures are up 0.7% as traders are optimistic about Donald Trump's truce in the Middle East. The NASDAQ is up 1%. Tech stocks getting the biggest lift from this peace accord, even if they're both still lobbing bombs at one another. You've got Edwards Life Sciences ringing the bell at the New York Stock Exchange. And over the last 5 years, that stock is only up 11%. So really underperforming the broader index. But they are celebrating their 25th anniversary of listing. And over that time, they're up 4,447%. So outperforming the S&P by 8 times. Reason to celebrate. Down at the NASDAQ, you've got West Banco ringing the opening bell. And over the last 5 years, if you reinvested your dividends there, you double your gains. Katie, in terms of the stocks to watch, actually, you've got assets today because...
I do. It's a special day. We're keeping an eye on Brent because that's what stock traders are watching. That's what bond traders are watching. And Brent crude took another leg lower after President Trump said that China can buy Iranian oil. You can see we're trading below $68 a barrel. Now we popped a little bit above it, but really a lot of movement here. And that's rippling through the equities as well, as we've been talking about. I put ExxonMobil and Occidental on the board right now. You can see that Exxon down 2.2% at the open. Occidental a little bit more, about 3% or so. And again, it's energy that's in the spotlight, Matt.
Yeah, absolutely. The key asset to watch over the past couple of sessions. Amazing to watch Brent go from $81 on Sunday night to below 70 and in the 60s today. Uber and Lyft, we were talking about, both up today. Uber is offering Waymo rides in Atlanta, really a continuation of a service that it already offers in other cities. Lyft was upgraded by TD Cowen on potential growth, so both of those stocks are gaining on a rising tide, right? So you're going to see, in terms of the S&P 500 today, when you go ahead and take a look at your move screen, probably some strong breadth. Right now, we have 350 stocks gaining, 130 are down. We're back with Morgan Stanley Wealth Chief Investment Officer Lisa Shallett. And if you're listening along at home, you'll notice that I threw in some 38 special lyrics. That's because, Lisa, your note was titled Hold On Loosely. So first of all, thank you for bringing me back to my childhood. What a fantastic song by 38 Special. But what exactly do you mean by that in terms of how does it translate into a strategy for investing?
Yeah, so look, we recognize that this has been a extraordinarily resilient stock tape. And, you know, positioning, momentum, and hopefulness around both the news flow, resolution on tariffs, resolution on the tax bill, now potentially some resolution in geopolitics, has really, you know, capped a floor under this market. And while we respect those trends, obviously, you know, we look at technicals every day. We are looking at flows and factor moves as well as positioning. The reality is that this continues to be an extraordinarily expensive market, a market where risk premiums in equities are really, really tight. There's just not a lot of value. And that is in contrast to other asset classes, right? We're finding value in international stocks. We're finding value in the bond market, municipals in particular, and some of the asset-backed securities. We're finding, you know, value in real assets, in energy infrastructure, and residential real estate. And so our strategy is, yes, certainly, we are here, we are present, we have exposure to this equity market. We're not trying to make a bearish call, but we're saying don't put all your eggs in one basket. Hold on loosely and be open to diversification, be open to looking around at where there is value in the market.
I want to pick up on bonds because one of the things that you mentioned in your note is that treasuries are actually outperforming equities this year in the U.S. I'm taking a look at IEI. That's an ETF that tracks 3 to 7 year treasuries versus the S&P 500. IEI up 4% on a total return basis. I think that would surprise a lot of people who aren't maybe paying attention that closely because it feels like bonds have been pretty unreliable as a hedge and kind of have a hot and cold reputation right now.
Yeah, I mean, what we're trying to point out to people is I can't think of a year where the headlines have been more bearish for bonds, right? We've gone from expecting, you know, the Fed to be cutting multiple times to potentially not cutting at all to now maybe potentially cutting in the fourth quarter 2 times. We've had worries about inflation linked to tariffs. We've had all kinds of debate about America's debt and deficits and the return of term premiums in the long end of the curve. These headwinds have been pretty meaningful for the bond market and have, you know, caused many to be quite bearishly positioned, particularly in long duration bonds. But to your point, when you look at the total year-to-date returns, it belies those headwinds. And this asset class has proven reasonably resilient, and we're only halfway through the year, and those are pretty good total returns if you're a bond investor.
You know, a lot of misconceptions, I think, when Donald Trump came into office, or it looks like now that tariffs aren't really leading to a lot of inflation. I guess we'll know next month, which we said last month and the month before. What's your take on the debt and deficit picture, though? I mean, does that continue to weaken the dollar? We've seen a 10% decline already from the high.
We are very concerned. And I think what we have to remind people is, while it's very easy to say, you know, look at the last 30, 40 years, there's always been the Cassandras, screaming about the debt and deficits and screaming about, you know, the need for fiscal austerity. The fact is that the mathematics on this are finally shifting. And I think that, you know, folks who, have been more outspoken, like in Elon Musk, for example, understand the math here. And the math here is that we are at a place where if, in fact, nominal GDP growth falls below 4%, which it could in a slowdown or a recession, that means you're actually having to borrow money to pay your interest cost, because interest as a share of GDP today is running at about 3.6%. We also have a steeper yield curve, and interest rates are biased higher. And so that means when we go to refinance, we may be refinancing up 50, 100, 150 basis points, just adding to that interest cost pile. So look, I do think we're in a new higher for longer era in terms of rates, and I do think that interest expense as a share of America's total budget is grinding higher, and that is a constraint that we all have to, care about and pay attention to.
All right, Lisa, got to leave it there. Great to spend some time with you on this Tuesday morning. That is Morgan Stanley Wealth's Lisa Shallett. Meanwhile, let's get a check on this market. The S&P 500 in striking distance of a record high. I believe that's at 6147 on your index. We're trading at about 60.70 when it comes to the S&P 500 right now, and that's on really good breath. You have over 300 names in the green right now, 161 or so in the red, and it's all the names that you need to see rallying right now. A lot of tech up top: NVIDIA, Broadcom, Amazon, Meta, Microsoft. The list goes on. Somewhere down there, you have Carnival shares as well, rising by nearly 7% after that big earnings beat. Let's talk about the losers, though. This is interesting. Energy up top with Exxon down about 1.3%. Then you have RTX and Eli Lilly down a little bit as well. But again, very positive breath. And that's what you're going to see when we zoom out and take a look at the sectors as well. The setup right here, more green than red. Up at the top, you do have the financials. JP Morgan having a good day. Tech, as we talked about, also participating in a big way as well. At the bottom, there are some things to quibble with. Consumer staples down, real estate down, and then energy down by about 0.9%, but certainly a risk-on appetite in this market, Matt Miller.
Yeah, absolutely. Investors, traders, and investors, I guess, want to be long this market right now. Coming up, President Trump is pushing Israel and Iran to abide by the ceasefire that he announced last night. Tina Fordham, Fordham Global Foresight founder and geopolitical strategist, joins us next. This is Bloomberg.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you
you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check at what stocks are doing. Just about 12 minutes into the session right now, you have the S&P 500 up 0.8%. 6,076 is still about 70 points away from an all-time high. I think Katie just said it was 61.47 on an intraday level, 61.44 on a closing level. But it does look like the market wants to get there. Certainly, Dan Ives put out a note for this morning saying that that's where we're headed. NASDAQ 100 gaining more than 1%. So bigger gains for the tech stocks, which is why Dan is so bullish. If you take a look at a few assets here that normally I'd go straight to stocks, but the 10-year yield holding steady. We're awaiting Jerome Powell's testimony on Capitol Hill, and we're going to bring it to you live as soon as he starts to talk. He says the Fed is in a great position to wait on cuts. Brent crude right now down another 5%, $68 right now, and we saw $81 on Sunday night. So that's a pretty amazing, like 16% move in just a couple of days. Tesla was up in the pre-market. Now it's down, but not a huge move there. Uber and Lyft are both gaining right now. Uber up 4.5%. Carnival Cruise beating expectations on earnings, up almost 10%. And American Airlines, a little bit of a recovery from yesterday, and also up, obviously, on that truce. The truce is not helping Lockheed Martin, and because of the falling oil prices, you can see Occidental, Katie, down as well.
All right, President Donald Trump says that fragile ceasefire he announced between Israel and Iran is still intact. On Truth Social, he wrote, quote, Israel is not going to attack Iran, adding that the ceasefire is in effect. Now, this comes after Israel accused Iran of breaching the truce earlier this morning. Let's unpack the situation with Tina Fordham. She is founder and geopolitical strategist over at Fordham Global Insight. It's great to have you with us, Tina. I want to go to this line in your notes because this certainly caught my attention, that we regard it as a meaningful probability that Israel will be tempted to, quote, finish the job and push harder in an effort to deal